Very good morning. You're watching India Market Open, and I think tariffs are front and center once again after a report last night from Reuters and then a Trump comment on board Air Force One, very casually saying, yeah, maybe 2025, but we're good friends, but we've not decided, but we'll see. So I think that's going to set a bit of panic, because 20 to 25% of tariffs between India and the United States is not something that would be seen as very favorable, I think.
Yeah, but I wonder if we take this with buckets of salt, because I think yesterday, for example, we only did this piece that the Indian delegation will visit, a US delegation will visit India on 25th of August.
Yeah.
So I'm presuming this is a long-drawn conversation. Trump will use his best negotiated tactics, talk about a higher number, eventually settle. Because, guys, I'm also seeing, right, China and US have agreed to an extended truce as well. So I think there is lots happening.
No, but overnight, you had a complete change in mood between China and the US. That's the only thing that I'm adding to it. Besant coming and saying that this is a problem and we're going to crack down on Russian oil imports from China. No clarity on where that deal is going and whether they'll make it by the deadline. So it's going down to the wire over there as well.
Yeah, okay, maybe I missed it, because I thought the extended truce was the last piece that they are saying we are going to negotiate, and until then this one stays on board. But yeah, I mean, maybe
I don't think that August 1 should be paid so much attention to, especially because 25th, it's very clear that they're coming to India. They're going to talk about it.
So maybe it's September 1st.
I'll tell you why August 1st becomes important, and we'll get Rishabh in a bit for it as well, because a mini trade deal is something we're talking about before August 1st. So either we get a letter, which is worst case scenario, there is some kind of a mini trade deal, this is best case scenario, or there's an official, okay, let's extend the deadline, which I think would be
the best case scenario.
The best case scenario. But I think what is also best is L&T numbers were good. So, you know, after a drought of solid numbers to sort of celebrate, maybe that will lift the street's mood. I don't know if it'll be enough though.
That or the IMF raising India's forecast in line with, of course, the global forecast, but India forecast. And then, guys, no Nordisk and whatever is happening to obesity drugs, but that plunge was quite serious.
Yeah, but the plunge also because twofold, they have a new guy who's come in, and they have said that maybe they overestimated how many people will buy Wegovy, the obesity.
Yeah, they've certainly lowered the forecast.
Inhibitor. So
but
that forecast
especially
has been
because
low.
there are question marks at this juncture of what implications are. Maybe not everyone is taking to the drug as they had anticipated.
I don't think it's about lack of demand. It's also because of so many options right now.
Okay.
Yeah, because I mean, I think they have attributed this to increased competition.
Okay.
Yeah.
Mainly, and that's quite something. So I wonder if that is loss is a gain for the suppliers in India, Biocon, Dr. Reddy's, etc. So there is an investing implication. So lots to unpack.
Lots to unpack, but let's start with all of the global news overnight. It was a losing session on Wall Street as the US-China talks seem to have faltered. Let's pull up the indices as well. Uncertainty there with Scott Bessent coming and making some very angry noises about China, especially in connection with Russian crude and their imports over there. You have a 0.5% down on the Dow as a result. S&P 500, Nasdaq also down in the red. Bond yields have also tumbled ahead of the Fed rate decision, the 10-year at 4.32%. Of course, the Federal Reserve is widely expected to keep rates unchanged. Thursday morning is when we will hear everything that James Powell has to say at that press conference. Oil prices have spiked as US has set a 10-day deadline for Russia to seize the Ukraine war. Brent was above the $72 mark. If you look at how much Brent has moved in the last couple of days, it's quite sharp. So expect some impact of that on Indian markets and related companies that will be hit one way or the other, or some that will benefit. So when ONGC, BPCL, HPCL, all of your paint companies, that usual pack could react today. Asian markets were lower because of the uncertainty in trade talks, etc. You're seeing the Hang Seng nearly 0.75% down. Shanghai and Nikkei also down in the red. Meanwhile, Trump is hinting at a 20 to 25% tariff rate for India. In fact, listen in to what he said aboard Air Force One.
India is preparing to face higher U.S. tariffs between 20 and 25%. Is that what you're tracking, or what do you think the rate will be for India?
They are going to pay 25%.
Yeah, the India is preparing to face higher U.S. tariffs between 20 and 25%.
Yeah, I think so.
Is the deal with India finalized?
No, it's not.
Okay. So what rate are you expecting?
Oh, we're
it
going to
be
see.
at?
We're
Okay.
going to see. But India's been a good friend, but India has charged basically more tariffs than almost any other country. You know that, right? Over the years. But now I'm in charge, and you just can't do that.
Okay, so there's no real clarity on it, and we're going to be speaking with Jonathan Barrett more on this. But I want to get in Rishabh, who's been tracking this story closely. Rishabh, what are we hearing from the Indian side, even as all of these statements come in?
Right, Tamanna, hopes of an interim trade deal are very quickly diminishing. Nothing sort of before August 1st is the word coming in unofficially, of course. What we're also seeing is the fact that all negotiations that have been going on over the past few months or so, 5 in-person rounds are completed. A 6th round is set for August 25th here in New Delhi. So all of those negotiations are now focused on the September-October deadline. That is the fall deadline for the bilateral trade agreement. That was the deadline that was agreed upon by Prime Minister Modi as well as President Trump. So now all sorts of negotiations on going for that September-October deadline. But in the meanwhile, a 20-25% tariff, that would definitely mean a temporary negative for Indian exporters, because it puts us at a negative tariff differential vis-a-vis countries like Indonesia, Philippines, Thailand, we have Vietnam. All of these countries have managed to negotiate tariffs that are either 19% or 20%. So either India will be on par or at a slight negative vis-a-vis these other manufacturing economies that India competes with. Apart from that, EU, UK, Japan, all of them have managed to strike deals that are in the 10 to 15% bracket. So a definite disadvantage, despite India being one of the first movers
Right.
in terms of negotiations.
It would be truly unfair for 20 to 25%, because 10 to 15% for Europe, and you don't want a big differential vis-a-vis China. So watch out for that. Thank you so much for that, Rishabh. Interim trade deal is also looking tough. We'll see what happens on August 1st. Jonathan Barrett joining in, Chief Investment Officer, ETO Markets. Jonathan, great to speak with you. Very good morning. We'll just get a quick view from you on the trade rate for India and where it looks acceptable or palatable from an Indian market's perspective. Where would you put in 20 to 25%?
Look, I think good morning too. Look, I don't think you'll be set at about 20-25%. I think it just makes good economics that that's a Trump thing. He comes out or blaring, and then we'll settle down and do a good deal. I actually feel it'll be in line with global markets. I think it'll be in line with the EU. Remember, India is such an important trading partner with the US, and it can't be disadvantaged against others. So I actually think a tariff rate will come in around that 10 to 15%. It just makes sense, but that's just the way how Trump operates. He goes in high, but then eventually it comes down to something that's more economical. And you can't put one trading nation against another trading and make it disadvantaged when you're all competing for the one market.
Make of the supposed truce, Jonathan. Very good morning to you. Between the US and China, and I think a lot of markets, a lot of watchers of markets paying attention to that. How deeply do you read that, though?
India and the US are friendly, as Trump has said. So
I was talking about China, though. I was talking about the truce with China.
Okay, with China, well, that is a very different set of circumstances. There are so many levels towards any trade deal or any tariff. Remember, China in itself, just looking at the last economic numbers, is starting to falter again. So I think China is going to be quite protected in terms of what it does with its stimulus. Also, China has a bit of a bat, obviously, with Russia. So this could be a bit of a flare-up between the two, because it's such a complicated transaction to actually put together. If it does it, I think the global commodity markets will have a sigh of relief if they can come up with a transaction. But I do think it's a fair way off, because there are so many moving parts to it that it's very, very complicated. Remember, China and the US are at odds already. This will put them further and further apart if they can't come up with something.
Jonathan, just one quick word on crude as well. 2 days now, we've seen a bit of an uptick on some optimism. But the worst case geopolitical scenario has seen crude retreat from a peak of 85. You reckon that's about it, even if the economic outlook were to pick up post the trade deals being signed?
Look, I think generally you get the trade deals out of the way and then hopefully you'll see the way for demand. Look, the way crude oil is pricing at the moment, I think if it does break through here, if you look at the WTI contract, breaks up through 70, 72, Brent contract, then I think it can quite easily go to 75. I can see a good 5 to 10% rise in crude oil prices whilst we are still trying to flounder in getting a deal together.
Jonathan, thanks so much for taking the time. A pleasure speaking with you as always. I'm guessing a lot can change in just a few hours, and we've got the Fed policy also to look forward to, though there's a status quo that is anticipated, and any announcement of a deal between the US and India, of course, will be watched very closely. In other key global developments, you have the International Monetary Fund, which has upgraded India's GDP growth to 6.4% for the current financial year and for the next financial year, slightly higher than the previous estimate. The boost reflects better global conditions like the lower US tariffs, a weaker dollar, and also fiscal support in major economies. The IMF also has raised global growth forecast to 3% for 2025 and 3.1% for 2026, but warns of risks from tariffs and geopolitical tensions. Overall, the outlook is optimistic for India, and improving global trends as well are seen. Let's talk about what happened in trade yesterday, though. As much as we speak about it, it may not have a bearing on what happens today and tomorrow. Of course, it is monthly expiry, so expect a little volatility, and perhaps volatility was the name of the game yesterday. First, the flows data. You had, once again, foreign institutional investors selling to the extent of 4,336 crore rupees or thereabouts. And once again, you had domestic institutions buying more than that, about 6,150 crore. Foreign institutions now have sold for a 7th straight session. Indian indices broke a 3-day losing streak, though, and you had a pretty sharp turnaround in trade yesterday. Propelled by heavyweights, the Nifty 50 ended above that 24,800 mark. Reliance Industries, HDFC Bank, Larsen & Toubro, ahead of its numbers, contributed a bulk of those points. The broader markets outperformed and gained close to about 0.9% to be exact. The market breadth flipped on its head and favoured the advances towards the end of the session, and most sectors ended in the green, and they recovered smartly during the course of the day. Defence stocks, however, underperformed once again, were one of the only sectoral losers, losing about 0.4%. Realty bounced back after the recent selling and gained 1.6%. It was the best performing sector. But you also had pharma, oil and gas, and the metal indices, all which gained over 1%, and it was broadly a good day of trade after a few days of selling.
Yeah, encouraging trade on Tuesday for sure. I would dare say in line with our expectations, right? We spoke about it yesterday morning that there is a case for a bounce back. So in some sense, sometimes you just got to say that data suggests something ahead.
The technical indicators that you pointed out.
Yeah, and it's just data out there for everybody to pick up. So thankfully it happened. Also, I don't know how you guys feel about it, but maybe markets are unlikely to take very heavy positions ahead of the Fed decision. Maybe it's a given that there is going to be a pause, but some murmurs, oh, will he, won't he? I wonder if the markets take a very heavy position ahead of the expiry day and ahead of the Fed decision today. So maybe a quiet kind of a pre-expiry day today and a pre-Fed day today. So that was the other thought that I had. I don't know how you guys think about it. And I was just looking at the reports that we have in our ecosystem. We try and think of what sectors, etc., might come to the fore. A Jeffries note points out that the Asian carbon steel spreads are recovering and Indian stainless steel exports are also moving higher, all of which could actually help steel companies, pure play steel players. They are constructive on General Steel and Tata. Somebody else could be constructive on JSW, I don't know. But just the fact that the broad macro for steel seems to be okay might who knows, help the metals pack in the session today. So that's one to watch out for.
Yeah, for metals overall, I'll just keep an eye out maybe on China.
Yeah.
And what happens with the trade deal there as a comparative. Crude related stocks once again today, because that bump up has been pretty sharp one. I think some of the others, and one of the factors would definitely be this 20 to 25% tariff will be a negative prospect. You might see some kind of a clarification through the day from the Indian side. If that comes in, that would be a positive or at least mitigate that concern. Like I said, postponement of the tariff deadline is currently the best case scenario. Meanwhile, just an interesting data point that our research team also put out, 86.6% of FII positions in index futures are in shorts. This is the most short positions they've held in the last 5 months. So not necessarily a bearish trend, but FIIs have also been selling consistently. So which is why I would say that you're going to see a bit of pain for the bulls. It's not going to be an easy run for them, because July 30th also marks the penultimate day of the FNO series expiry. It's been a challenging one. Nifty bulls have seen a welcome recovery on Tuesday. 24,800 was breached and managed to overcome that hurdle. However, it's definitely not a situation where we're out of the woods. Immediate resistance for the Nifty will be at 24,850, followed by Monday's high of 24,889 and last Friday's high of 25,010. Now, unless the Nifty sustains above 24,950, range-bound trading is expected to continue. Immediate support at 24,700, key support at 24,600 is something you should watch out for. Bank Nifty, resistance at 56,290, support at 55,950 and 55,840. But the big factor, I think, is going to be the monthly expiry, and Puneet joining in for more on that.
Well, thank you for that. So we've definitely seen a very strong recovery on the Nifty yesterday. From roughly lows of about 24,598, we bounced back and closed above the key support mark of 24,800, while the Nifty implied open is around 38 points down today. That'll be something to watch out for. The open interest, as with every expiry, is down almost 18% as we get close to that number. So rolling over to the next expiry, we will have some fresh levels to watch out for, but 24,800 as the key support and 25,000 as the key resistance, with 25,200 as the other levels to watch out for. In terms of the Bank Nifty as well, again, we are in a midst of middle of the 2,000 point range, and that continues to be the story for Bank Nifty as well. Again, the open interest falling in this aspect as well. When you finally look at the the FI positions, and we mentioned about the consistent selling for foreign investors. So let's move on to the next graphic and show that that has led to what Tamanna, you were mentioning about the index longs being at 13.3%. This is the lowest level that it has been over the last 3 months. Generally hovering between 18% at the lower end and 36% at the higher end. So we've seen that aspect on the index longs. The OI PCR for the market largely has been slightly lower at 0.7%, but for foreign investors, maintaining a neutral position between puts and calls. Finally, the open interest distribution for both calls and puts has been another key aspect. We've seen a steady buying yesterday on levels from 24,900 to 25,200, and it's been quite steady. So this essentially could mean a positive aspect of possibly forming a key level in terms of the supports at this price. While some selling from puts has been, we've seen an increased interest from put investors being created at 24,800, which again it could be taken as a positive sign as a key support levels for the market. When you finally look at some stocks to watch out for, open interest gainers as well as loser side was the other one, because we did see consistent buying and short, and yesterday was a lot of short unwindings yesterday, so we saw that in the system, and hence another day where we could see a very narrow trading range. And as you guys rightly mentioned about the Fed rate hike could be the other factor to watch out for.
Yeah, most certainly a factor to watch out for. Puneet, thanks so much for that. So that's really the setup from a trade perspective. Now, keep in mind the stocks that are there on our watch list today, something that you should keep an eye out for. Now, Northern Arc is the first one. I'm starting the list today, and I'm starting off with Northern Arc, not necessarily because of what they delivered in terms of numbers. And the numbers were okay. I mean, lending AUM went up, NIMs were actually flattish, and the stock currently trades at about 0.8 times FY27 price to book. But I think it is more from the con call takeaways that Northern Arc becomes in focus today, because they have said that they target to maintain net NPAs in the 0.5 to 0.7 range. That's exemplary in terms of asset quality for any NBFC or a bank, right? So that's one thing that they have maintained in the con call. They've said that the ROA target by FY28 is of 3.7 to 4%. Currently, it's 2.7. They are targeting significant uptick in ROA over the course of the next 3 years, which could be looked at positively. And the ROE target too, from 9.3% currently to 16 to 18% over the next 3 years. Remember, in a lot of ways, people look at these data or these metrics, ROE, ROA, in any NBFC very, very strongly. So Northern Arc has sounded off some optimism on the con call. Let's see if there is a reaction on that one today or no. The second one is GE Vernova TND. Their revenues, their profits, their margins. So revenues were up 38.8% at 1330 crores versus 958. Margins came in at 29.1 versus 19%. Talk of margin expansion, the serious margin expansion here in this quarter for GE Vernova. And as a result of which, I think the bottom line went up to 291 versus 135, more than double, right? More than 100% uptick. And the stock trades expensive valuations here as 64 times and 41.8 times FY26 and 27 earnings estimates. But for a business which is clocking in 100% PAT growth, would the street be very uncomfortable giving 42 times FY27? Maybe not. So keep that in mind. I mean, that's the other one. And the last one is GMR Airports. Much as we thought that it's not going to be a great quarter for hospitality, I'm having to eat my words, and I'm so happy about it, by the way, because it's happened with the hotel companies as well, but it's happening with GMR Airports. Look at those numbers there, guys. It's YOY, of course. And remember, last year was a dampened quarter as well. But revenues at 3205 crores, up 33%. EBITDA 1305, up 45%. EBITDA at record highs for the quarter, and margins at 40.7% versus 37.4% YOY. Yes, there is a net loss, but the operational metrics, the revenue metrics all look very, very solid for GMR Airports. Well, I dare say this might have some implications for Adani Enterprises as well. Standard disclosure, the Adani Group owns NDTV, but Adani Airport Holdings in buzz because of the Navi Mumbai Airport. I presume that what's happened for GMR Airports could be happening for all airport operators in the country, and therefore even that one could be in focus. But GMR Airports certainly in focus today because of these quarter one announcements.
It's been loss-making for a long time.
Yeah, this is the business which is an infra business, so you'll make losses for a brief bit or for a few years, but the operational numbers rock solid.
Yeah, high patience and long withstanding power required for these businesses. All right, first on my list is Triveni Engineering. So revenue was driven by a 17% increase in sugar turnover. I mean, you need to look at this because there's two parts to the business. And 48% increase in distillery revenues. Revenues have been aided due to an increase in alcohol dispatches and consolidated sugar dispatches and better sugar realizations. In fact, there was a 53% increase in alcohol dispatches, 14% increase in consolidated sugar dispatches. They've achieved a sugar realization of 40,421 metric tons. That's up 4%. So domestic realizations have improved. I've given it a thumbs down because margins have contracted. That's because of a rise in other expenses by 31% and 14% in employees' expenses. And there is lower profitability. So margin contraction and lower profitability despite top of the line growth. So quickly look at the numbers. Revenue up 22.82% at 1598 crores. EBITDA down about 38% at 53.52 crores, and margins are down about 328 basis points from 6.63% to 3.34%. Net profit is also down 93.54%. So Triveni first on my list, and that is looking consolidated form like a weak set of numbers. Some positives there in the details, but overall not looking the best. Ask Automotive is the other one I'm looking at. EBITDA margin has seen an improvement because of higher volume, driven economies of scale, increasing capacity utilization of their Karoli facility and ramp up of their new Bangalore facility as well. There's a focus on cost optimization initiatives, a strategic reduction in low value added wheel assembly business as well. So you've seen some of the Planned moves working out to some extent this quarter. Revenue up 3.4% at 891 crores. EBITDA up 19% at 120 crores. Margins have gone up from 11.7 to 13.4%. Net profit up 16.3% as well. Dilip Bilkon is the third one on my list. Revenues are down 16.4%, yes, at 2,620 crores. But EBITDA was up nearly 9% at 520 crores. Margins have gone up from 15.3% to nearly 20% at 19.9%. And net profit up 91.6%. So Dilip Bilkon there with a thumbs up on my list.
So I have three, I think, interesting stocks to talk about. Let me talk about the smaller ones first. Allied Blenders. This was a pretty decent set of numbers. Strong revenue uptick. Margins have expanded on a year-on-year basis, but they've dropped sequentially. Take a look at the numbers. Revenue up close to 22%, 923 crore rupees. EBITDA up 50.5%. And you have the margins that are coming at 12.1% compared with 9.8%. So a pretty substantial expansion on a year-on-year basis. The PAT number is significantly higher, 57 crore rupees compared with 11.2 crore rupees. And so all told, it's a good set of numbers. You could see a reaction in trade today. The International Gemological Institute, or IGI as it is called, it took a bit of a drubbing, if I remember correctly, in an earlier quarter when the numbers didn't stack up to expectations, but this one is pretty good. The revenue is up about 16%, 301 crore rupees. And by the way, they call this their second quarter. They follow the calendar year. EBITDA is up as much as 37%. The margins have expanded very substantially, close to 10 percentage points at 57.6%. And the net profit is up close to 63% in the quarter gone by, at 127 crore rupees or thereabouts. There's one brokerage note that I saw, Morgan Stanley on IGI. It maintains an overweight rating with a target price of 533. Pretty substantial upside that is envisioned for this particular stock. They say that it's an inline results, and the strategy and the optimism is reiterated on this particular stock. The outlook of 15 to 20% top line growth in the calendar year of 2025, with an EBITDA margin in the range of 57 to 64%, which is quite substantial. The certification revenue growth was driven by 24% growth in the lab-grown diamond loose stone space and 15% year-on-year growth in the natural diamond space. So you've seen higher growth in the lab-grown diamond space, and Morgan Stanley seeing that the lab-grown diamond jewelry is a new growth vector in India, and the jewelry segment is set to drive a significant proportion of the growth going forward. Finally, Larsen & Toubro, and this arguably is the story of the day heading into trade today. And it's a thumbs up, very obviously. The revenue is in line. The net profit has beaten estimates. There's also a higher other income that has buffered the net profit or the bottom line. The EBITDA and the margins have missed estimates, though. On account of energy project segment. The margins decline is primarily on account of that energy and high-tech manufacturing segment. But the bright spot really is the order inflows. They remained robust, in fact 33% higher at over 94,450 crore rupees, and that was aided by the hydrocarbon business, which a few brokerages have pointed out is beneficial for margins going forward. So that one soft aspect of this result, the Q1 result, which was margins, could improve going forward, and the order book is looking very robust. In fact, at the end of the quarter, you had the order book stand at 6.12 lakh crore rupees and a book-to-bill ratio of 2.4x of the FY25 revenue. Very quickly, take a look at the numbers. Margins coming in at 9.92%, down 26 basis points. The PAT number is up close to 30% or thereabouts. There are a few brokerage notes that have come through. Goldman Sachs, for example, is maintaining a neutral with a hike in the target price of 3,540 rupees from 3,400. They say that the quarter was good overall. Margin recovery is still elusive, and the net working capital to revenue remained strong and drove the improvement in the ROE. There's more besides. You have Investec on L&T, which has maintained a buy with a hike in the target price to 4,460 from 4,115. So a second brokerage there increasing its target price. Beats on most fronts and says that strengthens confidence further going forward. Order inflows are robust and strong visibility is seen there. Impressive working capital management as well. And one last, Jefferies on L&T, it maintains a buy and again hikes the target price to 4,230 from 3,965 earlier. They say that the visibility further rises on the growth trajectory. The EBITDA was 7% ahead of expectations as execution was higher, and the 33% increase in order inflow puts L&T in a comfortable position to meet its annual 10% year-on-year growth guidance. The higher contribution, this was what I was referring to earlier, from hydrocarbon gives comfort on margins having some uptick potential going forward. So pay attention to this stock, and also let's listen into what the management had to say in the conference call yesterday. Mr. Shankar Raman, the CFO, addressed the margin outlook for the Middle East projects. Listen in.
If we can get a sense in terms of margins that we can have over these next 2 to 3 years in terms of improvement. Along with that, just wanted to understand the overall win rate that you have in these Middle East projects. If I'm not wrong, according to the last con call, 20 to 25% is the range that you have.
Yeah, that's right. 20 to 25% is the win rate. And increasingly, I think the more successful we are in completing projects and handing over to the customers, most of the customers are repeat customers, as you might know. So to that extent, I think the customer confidence and the customer intimacy increases. Margin is a function of point in time execution matter. Very difficult to say, we'll make 10%, 11%, 12%, etc. Sitting far away from the date on which you have to complete these projects. It also depends on the level of competition, which keeps on changing in a year-on-year basis. And it also depends on the type of projects, because just as I spoke in the context of our boiler turbine capacity being almost full up, most of the equipment suppliers and suppliers globally are also quite full up. So to that extent, I think the time it will take to source the equipment, the cost at which we will be able to influence the pecking order in terms of delivery, etc., all of that will have a play in margin. Directionally, I can tell you that if the growth continues the way it is, the margins will improve.
Okay, so that's L&T, and definitely a stock on our watch list. On the positive side, here is what else we're looking at. So here's the profit watch list this morning. NTPC consolidated numbers are robust, so you find that in our green list. L&T also has robust order inflows. Post the call, the conference call, most brokerages have hiked the target price for Asian Paints. That could be a positive. The only mitigating factor I might add is that crude prices have spiked a fair bit overnight. Tilak Nagar has expanded capacity, has undertaken a preferential issue. Piramal Enterprise, strong growth and contraction in credit costs.
Now, a few more stocks to watch out for. Zaggle, there's an acquisition to expand its UPI capability. MCX is set to consider a stock split on the 1st of August in a board meeting. Generic pharma companies, and I'm not talking about random pharma companies, these are companies that manufacture generic drugs. Sun Pharmaceuticals, Glenmark, Divi's are set to benefit from semaglutide generics in the US post-2032. Ather Energy, HSBC, has initiated with a 30% upside, and there are a couple of stocks that you should watch on the downside as well. One of them, Star Health, its claims impact combined ratio. Claims have impacted the combined ratio. On that note, let's slip into a very quick break. At this juncture, we're anticipating a bit of a soft start for the benchmark Nifty 50, about 40 points in the red. Be back very quickly. Stay tuned.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
Welcome back. You're watching India Market Open. Let's turn our attention to Tata Motors. The stock has been facing a torrid time because of several headwinds that the company is facing in the international business, Jaguar Land Rover, and also the fact that commercial vehicles are yet to pick up, electric vehicle sales are diminishing, and in that context, Tata Motors is now announcing that it is going to be acquiring another company in the Italian market, Italian truck maker Iveco, in fact. Puneet joining in to tell you about that and also to understand what brokerages are saying, because it's not necessarily positive. Puneet, in this context, at this time when they're going through so much, they've announced a pretty large acquisition.
Hi Alex, good morning. Now the company is set to acquire this, Tata Motors is set to acquire Iveco, so they've not yet come out with an official press release stating that they're set to acquire, but media reports are speculating that the board is set to meet today and finalize this particular acquisition of $4.5 billion of the commercial vehicle arm of Iveco. Now, it's coming at a very, very crucial time for the company, as you rightly said, and that's largely because of the torrid time the company has had in the international operations. It also is very interesting that this acquisition is happening now because most of the other Indian companies are actually scaling back from Europe at this time. So if this acquisition is announced, Tata Motors will acquire their stake from principal shareholder, the Agnelli family, according to media reports. Now this will be, of course, the biggest deal to date for Tata Motors, and the proposed M&A structure would involve them to acquire 27% stake from the Agnelli family and the investment company. The other key aspect is that Iveco will be demerging its defense business, and only the commercial vehicle arm will be sold in this transaction. And brokerages like UBS have largely maintained their view on Tata Motors. They have a sell rating with a target price of 690, but they've said two key points which are important, that if this transaction is expected to happen today or in the near future, it would cost Tata Motors roughly 1.5 billion euros, which is quite a sizable amount. And while the company has strong cash reserves, it is very interesting because the commercial vehicle arm will demerge from Tata Motors. So is this really a time or the efficient use of cash? That will be a key question. And Tata Group's past acquisition like Chorus and Tata Steel has also put a lot of pressure on the financial aspect. So that will be some of the key questions that will be answered if the company decides to hold a call now or on 8th of August when the company is expected to report results. But the key question is the timing as well as the necessity of this particular acquisition.
One would assume that a company the size of Tata Motors would have had a strategic review before going in for an acquisition in Europe, where all their peers are heading in the opposite direction. But nevertheless, whatever the thought process was, the fact is brokerages and the street doesn't seem to be too excited about it. We'll see how the stock does when it opens up. So Tata Motors in focus. But I want to get Nirav Ashar of Latin Manhara Securities in for more on that. And Nirav, since we were talking about Tata Motors, why don't we start with your take on the new acquisition in Europe?
Good morning and thank you for the invite. Most of the companies are always they're looking for acquisitions, inorganic route to scale up their operations. So I think what Tata Motors would have thought is that it's time to acquire a small niche company. This is a sizable acquisition, of course, in the commercial vehicle space, which can give them access to markets, brands, technology, etc. But I think the timing of the acquisition and the overall scheme of things where Tata Motors is placed at this point of time, where there are a lot of moving parts, there are a lot of variables which are impacting the performance. There's a slowdown in Europe. The cash flows leave a lot to be desired. The profitability also leaves a lot to be desired. So I think markets would initially be very skeptical about this kind of acquisition. But having said that, a lot of companies are trying to scale up their operations. Like recently, we've seen in the domestic market, of course, M&M doing the acquisition of SML Isuzu. Also, it's a relatively small acquisition, but I think when you acquire such niche companies, it makes a lot of sense because you can scale up such companies in a very, very meaningful way.
Okay. I just want to get your view, Nirav, on L&T as well. The numbers look robust by all means, but is this a stock that you would buy right now, looking at what the valuations have been like?
Well, we've had a very dull kind of an earnings season, so I think very few choices in the market also. And I think whatever was expected to do well has done well. But I think sectors like IT and banking financial services to a large extent have been disappointing. So that leaves us with very few choices at this point of time. From that perspective, if one were to look on a relative basis, then I think L&T is a very strong performance. It's got a very good, strong order book. Order book is up by around 25% and 46% orders are from the international markets. Execution has been quite strong. So yes, why not? I think we can definitely look even to buy L&T at this point of time.
But Nirav, relatively speaking, I take that point. Hi, good morning. Underperformance of L&T to the Nifty over the course of the last 1 year. And I'm just wondering from that perspective, where do you see the fair value for Larsen & Toubro? And what is the potential upside if you do go out, venture out and buy from this point, purely based on fundamentals, based on your review of the valuations?
Well, I think if one were to take into account the valuations, I think L&T is still reasonably valued at this point of time. And we are seeing a meaningful scale up in the order book. And I think we are getting a lot of orders which are coming in from the oil-rich Middle East countries. And these are very sizable orders. And especially I think from Saudi Arabia and the region of Qatar, etc. So I think this should keep the order inflows coming in strong. And I think in the domestic markets also there is the continuous focus on infra spending. So we've seen most of the infra players do quite well in the domestic markets as well. So I think that should augur well for L&T in the near future.
All right, stay on with us, Nirav, and we'll get a technical view in just a bit. Chandan Taparia will join us. But meanwhile, Indus Tower also in focus on the back of a board meeting scheduled later today. The company is unlikely to consider dividend payouts once again, is what we're hearing. Somit, what are the details?
Well, yes, Indus Tower will remain in focus. Today is the company's board meet where they will be considering their first quarter results. But do remember that with this first quarter results, they have not made any announcement to consider dividend. Now, if you remember in the fourth quarter earnings, the company had deferred their dividend announcement, citing that they would form a committee to decide the best way to pay back the money to shareholders. But as per rule, Indus Tower generally distributes largely all of its free cash flow that it generates to its shareholders. And this time the quantum is at around 5,000 to 6,000 crore rupees, which the company is yet to distribute it to the shareholders. And yesterday City Note came in where they are saying that this no dividend announcement is a disappointment for the stock, given the fact that dividend is the key stock catalyst when it comes to Industars. So we are trying to extrapolate here why or what could be the reasons why Industar is still not announcing any dividend for its shareholder. So first possibility here is the fact that they might be looking to do an inorganic acquisition. They could look to buy some stake in Nextra Data Center, which is owned by Bharti Airtel, which owns around 76% stake, while Carlyle Group owns around 24% stake. And as for media reports, Carlyle Group is looking to sell its 24% stake at a valuation of close to around 5,100 crore rupees, which is exactly the cash that Industars currently has with them. Also, apart from this, they could look for some acquisition in the EV charging space, some new segment that the company recently announced. The second possibility here is that the company might look to do a buyback, but there's a technicality which could be stopping them to do this buyback, because as per buyback rules, there needs to be a gap of nearly 12 months between two buybacks. And if you remember, the last buyback ended somewhere around August 2024. So they might be waiting for another month or so for that 12-month period to end, and post that they might announce to do a buyback. So there are two possibilities at this moment: an inorganic acquisition or a buyback, and we'll need to wait and watch what the company decides to do with the cash that they have, around 5 to 6,000 crore rupees in their books currently.
Okay, so Indus Tower, keep an eye out on. Chandan Taparia joining in now, Head Technical and Derivatives Research, MOFSL. Chandan, very good morning to you. Great to have you on. You think the Nifty will hold up after the bit of bounce today, or you think on monthly expiry day we're on shaky ground?
Good morning, Tamanna. Thanks for having me. So the good part is that Nifty managed to hold 24,600 and rebounded towards 24,850 marks. But the concern is that index started to form lower top, lower bottom on the weekly chart and trading below its key moving averages. So it would be tough for market to hold because the fresh call writing started to seen at 25,000 marks. But at the same time, we have seen support-based buying in the VIX is at 11.5 level. So because of that, not expecting meaningful decline as well. So I believe that market is likely to be in a broader range between 24,600 to 25,000 for next 1 or 2 days, then only the next leg of rally. And the important part is that after the previous day's recovery, this was a remarkable, but the follow-up action is required. So I believe if market manages to hold above 24,850, then only we are expecting a rally towards 25,000 and beyond. Otherwise, it can retest to the key level. And probably we have to play the range between 24,600 to 25,000 marks as of now for next 2 to 3 days.
Pretty narrow range is what you're seeing, Chandan. Very good morning to you. What are your individual stock picks? And there could be a few that move quite dramatically. We've seen that even in a market that was a little subdued, there have been stocks that ratchet up quite sharply. What are you looking at that looks attractive?
Yeah, good morning, Alex. We have noticed that the market was subdued and moving in a broader range with some profit decline, but selective sector and stocks have really done well in last couple of weeks. And I believe that this sector and stock specific action would continue to be in this market scenario. So first trading idea, there is buy on Polycap. Major trend of the counter is positive. After the consolidation and the corrective move of last 8 to 10 days, it took the higher base at 6,700 marks. Overall, the sector and the theme is positive. We are expecting fresh leg of rally in the counter led by this positive data setup. So recommending to buy Polycap with support of 6830. It can head towards 7200 level. Second trading idea, that is buy on Geo Finance. The stock has negated its lower top, lower bottom formation of last 14 days. Earlier, it had seen a correction from 335 to 306 level. And if I remember that earlier 306 used to be a hurdle. Now it has acted as a support. So technically a sign of role reversal with hold of 50-day exponential moving average. So Geo Finance could be the other name which can drive the momentum on upside. One can buy with support of 330 for an upside target towards 336.
Chandan, just a few stocks and what you think. L&T, let's look at Tilak Nagar today, and let's look at GMR.
Yeah, so to start with L&T first, after the corrective phase of last 4 to 5 weeks, it managed to hold the support near 3,400 marks. We have noticed that put writing also visible at 3,400. So because of that level could be like meaningful support zone for the market. But at the same time, upside is also being kept. But I believe with higher support of 3,420, it can see a bounce towards 3,550 kind of level. Talking about Tilak Nagar, yes, some sort of recovery could be there. I believe with support of 338, it can bounce towards 375 kind of, with support of 495, it can head towards 530 kind of level. So I believe recovery could be there in this counter as well.
Okay, so recovery possible in an LNT, in a Tilak Nagar as well today. Stay on with us. I think one big stock in focus is again going to be JFS. And we spoke to you about this. We told you about this at 2:30 yesterday in Heard on the Street. We have been talking about this as well, and that stock, you have some news coming in from Bloomberg that RIL will be doubling down on JFS. But we'll get to all of that when we first go across to Sumit Sarkar for what's on Heard on the Street.
Well, multiple stocks that remain in focus. Firstly, it's REC now. Dealers are indicating that there are buy flows on institutional desks. Both domestic and foreign institutions have been buying this counter at lower levels. Now, multiple reasons behind this buy flows that we are seeing. Firstly, the valuations are cheap. The selling is most likely over in this counter, and earnings growth is expected to be quite stable, aided by recoveries. A couple of other stocks, Jindal Stainless and Shree Cement. Now, dealers indicate that large HNIs are taking pair trade here. They are buying Jindal Stainless and selling Shree Cement ahead of the Q1 numbers. For Bharat Electronics, different stocks were seeing some profit booking in trade yesterday, but for Bharat Electronics specifically, there were some buy flows at lower levels. Dealers are expecting some positive management commentary to come in the conference call that will be held today. For Updata Service, dealers are indicating that there are buy flows on DIDs, so keep an eye out for that counter. For Geofinance, the board meet is today to consider fundraise, and what dealers are indicating is that the promoters and Ambani family might look to infuse funds of close to around 10,000 crore rupees. They want to increase their stake by around 4 to 5% and want to bring it to around 51% from current stake of around 47.1%. And the pricing for this fund infusion could be anywhere between 320 to 325 rupees per share is what dealers are indicating. Apart from that, multiple news flows that we had earlier indicated have come out to be true. Firstly, on GAIL, we did indicate on July 20th that there could be a volume guidance cut, and yesterday on the call, the management did cut their transmission volume guidance by around 4%. For Adani Power on July 9th, we had indicated that there could be a positive corporate action, and yesterday the company said that they will consider stock split on August 1st. For Apar Industries on July 25th, we did indicate that there were buy flows at lower levels on expectation of strong Q1 numbers, and yesterday the company did report a strong set of numbers and the stock was up 10% in trade. And for Hind Rectifiers on July 29, we did indicate that there are buy flows on HNI and PMS desk, and yesterday the stock was up 20% on strong numbers and given the fact that there was a fund infusion that was announced by promoters.
Okay, so what we're hearing from Bloomberg, just on that point that you've mentioned, Sumit, is that Reliance is likely to seek 5% float in Jio IPO to raise $6 billion is what they're talking about. So that is one stock that we can definitely keep an eye out on today.
Well, that's Reliance selling in Reliance Jio Telecom. That's a telecom arm Jio platform.
Okay.
And this is Jio Financial, which we are talking about, which is listed. And there could be a fund infusion on that one.
Okay, so the fund infusion is what we need to look out for today. So Sumit Sarkar there with what's heard on the street. Let me go across to you, Nirav Ashar, on pharma stocks today. And I'm just wondering, this news that 20 to 25% of tariffs is what India could bear. Pharma and textiles would be the most tariff sensitive sectors that we've seen as the news flow comes and goes. Do you think that you'll see some pressure in pharma stocks as a result of this today?
Well, initially there could be some sentimental impact of this development. But I think if one were to take into account the recent commentaries which have been coming from the pharma companies, the results which have been coming in, especially I think the recent commentary which we heard from Laurus Labs, and of course the developments which we have been seeing in the stocks like Wockhardt, they inspire a lot of confidence. I think in the case of Laurus, we've seen they've been working with a lot of companies in the CDMO space. A lot of interest has been evinced in the activities of the company. At the same time, Wockhardt has also been involved in something really path-breaking. So I think the Indian pharma companies should be able to navigate through this crisis and come out and emerge much more stronger.
All right, why don't we talk about this entire pack, because Chandan, on the charts as well, on days when the rest of the market is looking a little bit soft, you've seen the pharmaceutical companies that have held sway. and have found buying activity. If you look at the pack as a whole though, what stands out as a potential buy at even these levels?
So yes, in fact, we have a positive stance on the Nifty Pharma. Recommended most of the pharma counter in last couple of days. In last 2 months, Nifty Pharma index rallied well. So I believe the buying interest could continue and some selective counter could do well. In fact, we had positive on the Lotus, recommended the counter for so many times. The stock is up by more than 40% in last 2 months, up by around 25% in this month as well. So positive momentum is there in most of the name. Lotus Lab looks good even after the rally of 40% with support of 875. I still believe it can head towards 940 kind of level. PL is one of the strongest setup. So Piramal Enterprises, we have seen a consolidative move after the spurt. So that is technically a sign of pole and flake breakout kind of pattern. So with support of 1270, it can head towards 13.
About Piramal Enterprises or Piramal Pharma? I just want to clarify.
So I'll look at the Piramal Enterprises as well.
No. I just want to clarify. You were talking just now about Piramal Pharma, right?
PL, Piramal Enterprises, PEL.
Okay. Let's pull up that chart then. Please go ahead.
Yeah, so positive view on most of such kind of name, whether we talk about Lotus Lab or PL. Again, to repeat, with support of 1265, 1270, I believe this counter can head to higher zone of 1330, 1350 levels. Apart from that, I believe buying interest could be there in the counter like Lupin, which has bottomed out with multiple support of 1875. Now higher support is visible at 1940 for an upside target was 2040. So most of the pharma names are witnessing buying interest, and I believe one should buy these names for momentum and for defensive nature as well.
Now, Chandan did mention Piramal Enterprises. There are a few brokerage notes that have come through after its Q1 numbers. For one, CLSA has said that it maintains a hold with a hike in the target price to 1,200 from 1,030 earlier. It says that the Q1 was steady with some red flags. The AUM growth is strong. The MSME and small ticket LAP emerging stress area, according to them. Loan against property is what I understand that as. Sequentially weaker operating profit, but lower credit cost has supported the net profit. The retail segment is up 20 basis points. We're talking about the spread there. Unsecured MSME and used car finance problem area is what they're saying, and the merger with Piramal Finance is set to be completed by September. Citi has also gotten a note on the company. It's maintained a sell, but it's hiked its target price to 950. It says that the ECL model tweaks have eased the credit cost. The legacy impact is muted. The ECL refinement has led to reduced provision cover, and there is an increase in the gross non-performing assets in the company as well. It said that the growth AUM has risen by as much as 38% on a year-on-year basis, driven by retail. All right, so that's a comprehensive view on Piramal Enterprises. We have to slip into a short break. We'll be back on the other side with a lot more stocks that you should watch out for.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
All right, welcome back. We're just a couple of minutes before the pre-open session. I'm going to pull up the implied very quickly. 46 points down is what we're looking at. So expect a weak start, but we'll wait and see how it goes. Pharma, textiles could be under pressure because 20 to 25% tariffs is something that Trump is now talking about. And there's been a huge movement as well after Novo Nordisk, which is a leading global pharma company. Its stock plunged 23% in a single day in the US markets on the back of sluggish demand for the anti-obesity drug. It's actually more than sluggish demand. Varsha joining us for more on this. Varsha, is the reason sluggish demand or is the reason rising competition? Because this has become such a craze that there's pretty much every major pharma company coming out with an anti-obesity drug.
Yes, exactly. And as you rightly pointed out, this is because of the rising competition, and that's the reason why, Novo Nordisk has cut their guidance. Even, talking about the stock performance, it fell almost 42% this year. Even Eli Lilly's, which is a competitor of Novo Nordisk, shares dropped 5% in the US. Now, let's see what are the challenges and how much guidance cut has been done by Novo Nordisk. So they've reduced their 2025 sales growth forecast to 8 to 14% from 13 to 21% earlier guided, and the operating profit growth guidance have also been reduced to 10 to 16% from 16 to 24% earlier guided. Now let's see what is the reason for this lower outlook. If you see, the weaker US sales growth is one of the reasons why they've cut the guidance. So they are expecting a slower growth when it comes to Wegovy and Ozempic sales. Wegovy is used for weight loss and Ozempic is a drug used for diabetes. And the specific reasons, if I were to talk about, so what they're saying is there's a use of cheaper versions of GLP-1 in the US, and slower than expected market expansion of this drug is one of the reasons why they've cut their guidance. And also they are experiencing increased competition from rivals like Eli Lilly. Let's see how this is going to impact Indian pharma companies. So this is positive for generic companies like Sun Pharma, Glenmark, Biocon. Even every generic pharma company is into GLP-1, and these issues are mainly confined to US market, not necessarily global. Divi's lab, if I were to talk about, is unlikely to be affected as it may not supply their API to Novo. Natco Pharma and OneSource will benefit from the semaglutide generics in the US post 2032. So because of the competition scenarios, Novo Nordisk has cut their guidance, and that's the reason yesterday, if you see, the stock was down almost 23% in a day.
Okay, thank you for that, Varsha. Let me just get a quick view from Vishal on this. Vishal Manchanda, Senior VP Institutional Research at Systematics, joining in. I think one of the foremost pharma analysts. I'm just wondering if this is a knockdown effect on Indian pharma companies, and in which way, Vishal? How do you see it panning out?
Yeah, so I think this may not have implications for the Indian companies. So broadly, we have two avenues. If we look at the Indian companies, there are two growth avenues on the GLP front. One is India market, another is Canada market also opening up next year. So I think both these markets are unlikely to be impacted because of this lowered guidance. So this lowered guidance essentially reflects probably the challenges around reimbursement of obesity drugs, and obviously there is also competition from Eli Lilly's tirzepatide that's impacting semaglutide. So I think once generic drugs are there on the market, as far as Canada is concerned, this would improve affordability and hence probably help adoption. But we'll also need to be conscious about there are emerging side effects around these GLP-1. So there are some side effects being talked about on semaglutide, and we'll need to be aware about how these developments pan out over the next 1 year.
Vishal, just quickly checking. Companies like Biocon, Dr. Reddy's, which might have some engagements with Novo Nordisk rivals or competitors, you don't think they stand to benefit? Because the key reason that apparently Novo Nordisk is citing is increased competition, which means that competition must also be getting some of the sales.
Yes, so I think right now there is only one player on the market that's benefiting. It's Eli Lilly, which their drug is tirzepatide. So that's benefiting, and probably what the market perceives is Divi's is probably going to supply the API of tirzepatide to Eli Lilly. So one implication of this story is if tirzepatide is doing well, then probably Divi's might also do well because of the supplies of the API to Eli Lilly. So that's one angle to this story. And I think the India market is still virgin. There's no penetration of GLP-1.
Agreed.
So we'll still see the market becoming large once drugs reach the
and
market.
therefore, Vishal, just to round it off, you're saying that if at all there is an implication for Divi's, which is also presumption that there might be supplying and therefore, but the likes of Reddy's and Biocon, etc., do not have any implication of this particular piece as of now.
No immediate implications on these companies.
Okay. Point well noted.
I have just one very quick question, Vishal, before we let you go. If tariffs come in at 20 to 25% for India, is that a clear negative for Indian pharma companies, and which ones?
So I think we'll have to wait and see how the details, the fine print around these tariffs, and probably I'll be able to comment once I go through the details around that.
Fair enough. Directionally, though, it would definitely not be positive if it also extends to pharmaceuticals. But thank you for that, Vishal Manchanda. There will, of course, everyone, the whole world is waiting for those details. But let's go across to our top brokerage call of the morning, the big brokerage call. And the focus is on Ather Energy today. So, Amit, what are they saying?
Well, yes, Ather Energy will remain in focus given the fact that a couple of brokerages have initiated coverage. Firstly, HSBC has initiated coverage with a buy rating and a target price of 450. They are saying that Ather Energy is a good company in a tough industry. They are saying that Ather's product quality, technology, leadership and distribution expansion will drive its market share gains in a tough market. They believe that EV penetration is low, but Ather's performance or Ather's share price performance will depend on its individual performance and in fact its relative performance and not to the industry performance that we are currently seeing. Apart from that, the brokerage also believes that if there is some acceleration in EV penetration, then there could be a stock re-rating and a stock re-rating going forward. Also, they are expecting Ather Energy to see EBITDA break-even in the fourth quarter of FY27. The second note is from Nomura, where they have initiated coverage with a buy rating and a target price of 458. They are saying that for the two-wheeler industry, the next decade will completely belong to electric vehicle, and Ather Energy here will be riding on electrification and premiumization trend. They believe that there could be a strong growth in the company given the fact that the valuations are attractive and the growth opportunity also is quite strong when it comes to Ather Energy. In fact, Ather Energy is the top pick in the two-wheeler segment. They believe that Ather Energy is well positioned to capture the opportunity in the EV segment. They believe that new product launches and distribution expansion will be the key growth catalyst for the company going forward. Also, they believe that the company's EBITDA margins will consistently improve and EBITDA margins should also ramp up given the fact that PLI scheme has now ended, so that will also benefit the company's margins overall as per Nomura.
Okay, well, certainly watch out for this, and 2.5% uptick for Ather today. A lot of individual pockets might be moving around, right? So we know that yesterday Paradeep Phosphates, for example, was up 8%, and I think there is a bit of a leg up in today's session as well for that one. I think Timex, with the kind of numbers that have come out with, is really zooming up in trade today, if I'm not wrong. Should pull that one up. I think with the kind of numbers that Timex Watches has posted, should be on an uptick. So that's one to certainly watch out for. I would reckon 5% higher. G Vernova TND could be actually doing okay for itself too. So a lot of those pockets up 5%. Piramal could be doing okay too. So keep an eye out for some of those. Remember, Piramal is something that Chandan Tapare has said that he might, not Piramal Pharma, Piramal Enterprises. And that is something Chandan has said that he might trade as well. Actually, Chandan, 908 and Piramal is just about 0.5%. So it's not really reacted to the kind of notes that have come in on the numbers. Is it therefore giving you an opportunity to buy? It's opening literally 0.5% higher.
So I believe the stock is holding well. In fact, I noticed that just 2 weeks back, the stock really did well from 1158 to 1350. And after that, it has been consolidating in a range from last 10 days. And at the time of consolidation, the volume is missing, which clearly indicates that the long position which were being built are still holding. That is giving me the scope for counter to move on upside. In fact, I've noticed that whenever it comes near 1260 marks, sustained buying interest emerges. And in fact, rollovers are likely to be better. And the stock is heading towards its multiple months or week breakout. So with all these fact and data setup, I believe up move could be there. And if it manages to hold 1320 today, if manages to move by around 1%, I believe stock can rally by 3 to 5% also for the day.
Wow, 3 to 5% in the day. So this is an opportunity, to say the very least, on Piramal Enterprises. I wonder if any of the other big numbers, we did talk about Larsen & Toubro, of course, but there were a few other numbers as well. Timex is something that we haven't spoken about, or we just did. 3.6% at the start today. And it looks like it might just be the stock of the day. I wonder if the other stocks that I'd pointed out, Allied Blenders on the back of earnings, is moving at all. It seemed like a decent set of numbers, up about 2.5%. IGI, this is something that a lot of brokerages are paying attention to. One has in fact raised its target price 3% higher. So there are a few movers. I wonder, Nirav, do you have coverage on IGI, and what do you make of the numbers? Seems to be growth in both the lab-grown segment as well as the natural segment, and a pretty decent bump in the PAT number as well.
Well, I'm sorry, we don't.
Okay. On the charts then, Chandan, what's the view on IGI? Is there a potential buy here?
So yes, some sort of buying interest is visible in the counter. And we have noticed that selective mid-cap ideas are doing well in this market scenario. So if I look at the price behavior, the supports are gradually shifting higher. After the corrective move of last 2 days, it managed to hold 50-day and holding well above its rising support trend line. In fact, from last 5 to 6 weeks, higher tops, higher bottoms are being formed. So the stock has a limited price history, but sustained buying interest can continue the momentum on upside. One can buy with support of 396, looking for an upside target towards 425.
Okay. What else? Since the rates have settled, as I think Alex pointed out, I think Zen Technologies is down another 5% in trade. So that one has taken it on the chin for sure. In the last 3 days, it's been on a lower circuit. So not all defense is trying to recoup. Some of it is actually sulking big time. You know, a lot of promise in some of these drone defense companies, Nirav, but they're not cheap. Zentech, even after this correction, you could make an argument that it is not cheap. You can, of course, make an argument that it is not expensive either. My question to you is this giving somebody an opportunity to buy if they always wanted to? Or would you believe there are other plays in defense which are worth buying into?
Actually, the defense story is a bit complicated because what we've been noticing in the numbers is very difficult to predict the numbers, especially in the case of the PSU companies. Yesterday, of course, we saw in the case of Mazgaon Docks, etc. It's very difficult to take a call on the numbers. And as far as the drone companies are concerned, I think they are going through some sort of transition. They are trying to scale up their operations. Most of these companies are small companies. They are trying to work their way up, and they are acquiring other smaller companies. So they are becoming kind of incubators for a lot of small companies. So we've seen companies make a lot of acquisitions, then try to integrate all those acquisitions into the mainstream company, trying to get access to the technology, to the markets, etc. And I think this is entirely a work in progress at this point of time, which might reflect in the form of positive results over a period of time. So I think it will be a time-consuming process. We'll see the real fruits and the results of this in the next couple of years.
Okay, it's seeming like a comeback kind of a day. If I look at the pre-open rates and where they've settled, Chandan, tell me what you think. Look at some of the IT pack, which has been suffering. Look at some of the key banks and BFSI, which have been suffering. We talked about defense also, realty. You're seeing maybe a reversal of trend. What are you picking up in that direction? And what would you find interesting? Are you noticing any opportunities, especially in IT and realty?
Yeah, so very tough to comment on both the names because most of the IT counters were making lower top, lower bottom. As of now, we have not seen any sign of reversal. In fact, this index is down by around 10% in this series. In fact, if I look at the realty, most of the counters were making lower top, lower bottom. But if I have to pick one name, I believe DLF could be the counter which can find some support-based buying with support of 785. Some sort of recovery can be seen to us hurdle of 825 level. But again, I'll only play the bounce back move. I'm not going to look for the bigger trade in these name or in these two sectors.
What are you seeing as the big trade for the morning after the pre-open session? Are you veering towards your infra power space, Chandan?
Yeah, definitely. I'll go with that. I believe that theme is going to do well. Polycap is one name where I'm expecting a rally towards 7,200 levels. So I'll look at that counter. And apart from that, KEI could be the other name from the same segment where some support-based buying or fresh leg of rally cannot be ruled out.
Wow. Okay. KEI, Piramal, Polycab. There are 2 or 3 names that Chandan is giving out. So keep an eye out for all of those. And I think not all of them are really starting off well as really hyper. And therefore, there might be chances out there. Chandan, just one quick word. Is L&T, maybe you spoke about it already, but at 3.5% higher, is L&T a buy or would you say the trade is past you now?
So if it moves by more than 3% on opening tick, then I'll avoid. But yes, definitely this is a range-bound bias of the counter. I have to play the range between 3,400 to 3,600. After the positive opening, if we witnesses any sort of decline, we can go and grab the opportunity.
Got it. Yeah, but 3.5% higher seemingly on open. So Chandan is saying then he would avoid trading L&T at that price. But here's how the markets are starting off, 0.25% higher. It's not that banks are participating. Actually, the markets have flattened out too. IT is flat completely. Mid caps and small caps doubt they are doing anything dramatic. Remember, we spoke about this, and maybe it turns out that way, maybe it doesn't, but it's very unlikely that ahead of the Fed decision, their markets will take a really meaningful move, except for bottom-up ideas. Let's get the heat map up on the screen. See if there are movers. Larsen & Toubro is opening 3% higher, so keep that in mind. JSW Steel, that Supreme Court ruling, probably aiding the measure a little bit for JSW. There's strength in BEL today, strength in Bharti, I don't know if, and GeoFin. So Bharti must be because of the telecom numbers that have come out. Geo Financial, again, reasons out there. Tata Steel is up in trade along with JSW Steel. Maybe the steel spreads moving up. There is a Jefferies note on it, which might also be leading to this uptick here. But almost even Stevens in terms of the winners and the losers. We're not seeing too much of a dramatic uptick in ONGC, interestingly, despite the crude prices. So just about 0.25%. Very measured. And now the quantum of red creeping up slightly. What's losing out? Tata Motors. And this is, viewers, because some media reports suggest that they are apparently going to make an acquisition, and if that were to happen, brokerages have raised concerns about Tamo doing that, a European entity that they are apparently looking to buy out. So that is what is leading to this downtick here. Asian Paints brokerage is not too sanguine. Not too many people have really hiked the target prices in any fashion except for maybe one-off, and which is why this continued pain, some pain for Dr. Reddy's as well. HUL, Shriram Finance, Eternal are some of the others. Long story short, Tata Motors on one side, L&T on the other.
L&T, blockbuster numbers, Asian Paints, despite brokerages not finding that kind of backing from the street. Let's look at the broader markets this morning and see if there's any action there. A slight green tick on the Nifty Midcap 150. I mean, I don't think this is going to hold up for too long, so be aware of that. It is a monthly expiry day, so could be a bit of a tough morning. But flat is not bad. Small cap 250 actually looking much better and climbing up. Let's pull up the intraday for the Nifty small cap 250 if we can. I want to see if there's a bit of a spike that we can manage to see there and some kind of strength coming in because you will see a reversal of trends. Oh, there you have it. So you're getting a pretty good bump up this morning on the broader markets and climbing fast, about 0.5% up now, even as we speak. Let's go back to the sectoral heat map and we can also take a look at whether the Nifty is showing some good moves there. India Defence is the story of this morning after being beaten and battered. Perhaps some very positive cues coming in from Prime Minister's speech in Parliament yesterday on Operation Sindoor, so which is why you might be seeing nearly 1% up on it. Small cap 250, like we said, broader indices looking fine. Infra stocks boosted by L&T this morning, possibly. Nifty Metal is looking okay as well. Auto not so much. This is Tata Motor impact more than anything else, and we told you that that will be a painful situation. Oil and gas also dithering, but the screen more green than red. So maybe we're set for a better morning than we would have expected. Let me pull up India VIX very quickly and see what it is indicating over there. Mildly in the green, which is not necessarily the best thing, but under 12 on that index. So not a big issue over there. Let's look at results because it's all about results this morning. Piramal Enterprises, let's pull up that counter. Very positive from brokerages as well. Triveni Engineering, poor set of numbers. We gave it a thumbs down as well. It's about 5.5% down. Piramal Enterprises about 1.5% up. GMR Airports, we'll pull up L&T again. ASK Auto, all of these have reported. ASK Auto looked decent, but you're seeing some pressure there. L&T is the winner of the day. GMR also looking pretty good. GV and TD Vernova also in terms of a good set of numbers, 5% and stuck there. So some time before you can come in and buy if that's what you want to do. Bank of India had good numbers, so did Timex, also now on an upper circuit. Defense seems to be the comeback king of the day. We saw BEL buzzing on the Nifty chart. Cochin Shipyard, Mazagon Dock are also looking decent over there. We'll get the internals of the Nifty Defense after we wrap this up as well. Crude prices have spiked. What's the impact on Oil India and MRPL, ONGC, HPCL, BPCL? Let's pull up some of those, all up in the green as crude prices have spiked. HPCL obviously as a downstream seeing some pain over there, about 0.5% down. ONGC doing fine in morning trade. Pharma stocks will be in focus as well. Variety of reasons there. Biocon about 0.5% up. Divi's Lab also up in the green. DRL seeing some pressure over there. So two, I would say, opposing reasons for pharma right now. If tariffs come in between 20 to 25%, that's definitely a negative. Novo Nordisk's loss could be Indian pharmaceutical companies' gain. That's the other way to look at it. IGI, just want to see IGI as well in terms of earnings impact and what's happening there. Well, that stock is buzzing today, about 7.5% up. Let me just take a look at what's happening with defense stocks because that seems to be the story of this morning. Paras Defense is what's moving there, and not massive moves apart from a Zentech, which is stuck on that 5% lower circuit. But I think at least the last 4 trading sessions, everything else up in the green, which is why you're seeing India Defense looking fine. But no spectacular gains. I would say cautious, but with a positive trend right now.
Yeah, you said it, and you've named quite a few of the buzzers already. By the way, Larsen & Toubro now gaining over 4% and by far away the biggest winner today. IGI also, of course, now 8% higher or thereabouts. One stock that we haven't spoken about from the insurance space, New India Assurance, and this is a stock that is buzzing in trade today. It is on the back of its earnings, and we did kind of put it in the watch list and we highlighted it to you. The premium is up as much as 13% and the profit has risen despite the impact of the unfortunate Air India incident. I wonder if you have coverage, Nirav, and what did you make of the numbers? If you looked at it, would you buy at this juncture?
No, I have not covered this stock.
Okay. Okay. Chandan, on the charts then, we've spoken about quite a few of the stocks that are buzzing. And I'll come back to you on maybe whether you want to review any of your calls, but specifically on New India Assurance, what's the view?
Yeah, so if I look at New India Assurance, NIACL, the stock has seen a corrective move in last 10 to 12 weeks, corrected from 208 to 168 levels. Today it opened positive, but again, the stock got stuck in a range, trading below key moving averages. multiple supports are there, but at the same time, supply cluster is also going to disturb the momentum in the counter. So it's likely to be in a range bound, or I can say positive to range bound. As of now, 173 to 190 could be the trading band for the counter. Those who are looking for short-term move, they can find the swing, but overall expecting stock to be in a broader range as of now.
Triveni Engineering now recovered a little bit of ground, but still down about 5%. Tata Motors down about 3.8%. Would you avoid at this point, Nirav, based on everything that we know? Of course, we don't have confirmation from the company itself that it is going for this truck acquisition, but then even the sound of it, even the suggestion that a large acquisition of over $4 billion could be made is something that the street is looking at very negatively.
Well, yes, definitely. It's a sentimental negative at this point of time, despite the fact that still there's no confirmation. But I think the markets are already feeling the jitters.
Okay, just want to look at so Tata Motors we saw with a painful situation over there. I'm just wondering, Chandan, these defense moves, will you see them actually persist, or is this now a bounce back? Retracing their steps? Do you see defense actually making a turnaround after quite a few days of weakness?
No, I don't think so, because the structure was slightly negative when most of the defense counters started to underperform. In fact, HAL gave the breakdown below 4,800 levels, and after that, it continued the lower top, lower bottom. We have seen built up of short position in most of these counter, whether we talk about HAL or BDL or BL. But huge selling was seen. That's why some recovery is visible, but it would be tough for most of these names to sustain at higher levels. If you start with BL, it might negate its lower top, lower bottom on daily, but on the weekly, still the supply remains intact. I believe 400 is a crucial hurdle. Till it doesn't surpass above 400, bounce could be sold for the retesting of the downside support level. So as of now, I'll avoid on the defense name, looking for some more consolidative or corrective phase in most of the defense name.
What about an Asian Paints and a Star Health? Asian Paints, after its conference call and some brokerage notes, now perking up a bit. Would you look at an Asian Paints? Would you look at a Star Health up after its numbers?
Yeah, so both the counter are positive to range bound. First, to talk about Asian Paint, the stock has bottomed out 2 days back with support of 32.20, and before that it was making lower top, lower bottom with corrective move from 25.30 to 23.20 kind of level. Somehow we need to keep in mind that this stock got in a broader range, and upside hurdle is at 2,500, downside supports are visible at 2,200, and right now we are in the middle of the trading range, so some support based buying could be there. With support of 23.75, it can see an upside move towards 24.80, 2,500 levels. Talking about Star Health, again, positive to range bound bias is clearly visible in the name. We have seen bottom out approach near 418. Hurdles are visible at 445. So I believe we have to play the range between support of 425 to now 445 levels.
Okay. Pankaj and Nirav, Chairman, thank you so much for taking the time out and being with us. Really appreciate your time this morning. And Nirav and Chandan, excuse me for that. Thank you so much for joining in today and giving us your thoughts. And in fact, let me welcome in Pankaj Murarka, CIO of Renaissance Investment Managers. Pankaj, in case you heard that, just blame it on me being maybe a bit sleepy on a very sleepy day for the markets, I must say. But thanks for joining in, Pankaj. Always good talking to you. And I wonder if you reckon that this is how the near term might be, because this is just lack of clarity on a number of factors which might impact growth, right? And it's not that the earnings season set the stage on fire. So how do you look at what the markets could do in the near term?
You're right, Neeraj. I think markets could be in a range in the near term, let's say over the next 6 to 8 weeks. Because I think India is in a perfect Goldilocks kind of environment where the economy is still growing at a pretty healthy 6.5% or thereabouts. So it's neither too hot, as we say, in terms of overeating, and it's neither a slowdown. So right in the middle kind of a thing. And I think it will not be a bad idea for markets to consolidate for a while, given the sharp up move we have seen in the last 8 weeks or 12 weeks in the markets from the February low, and more importantly, the kind of volatility that we have seen in the first half of the year. So I think the second half of this year could be a more steady in that sense, and I still think I still remain in the camp. I still believe that we'll see growth recovery in the second half of the year, and that will take markets to new all-time high before the end of this calendar year. So I think probably it's a good market for stock pickers where you can just go out and invest into individual names and probably stay invested for a period of time. So I think it's a good market for long-term investors.
Pankaj, morning. Alex here. The last time I was here when you spoke to us, I remember that you were out scouting for slightly smaller IT names with significant revenue potential. I'm just wondering what you found and what the prospects are, whether anything has changed based on the earnings season that you've just seen and the fact that seemingly discretionary spend is not yet taking place.
You're right, Alex. Given that this whole uncertainty around tariffs have lingered in US and there's an overhang on the global economy all through the last quarter, large companies, global companies, and large US companies are holding back discretionary spends because they're busy dealing with uncertainties around tariff and what would the impact it will have on their own businesses. As a consequence, obviously, that growth uplift or the spending uplift that was expected to happen in IT has got pushed back again. But I can say from my experience that now this is the fourth successive year where we are seeing discretionary spends not happening. So all I can say is it's a matter of time because large companies, global companies cannot hold back discretionary spends for a longer period of time, meaning they will have to spend because these IT spends are essential to for the future of the business, to get their business ready for the future in terms of whatever technological changes are happening. So I think it's there out there, but probably what we need is a stable macroeconomic environment and a probably more certain environment in US, which so far has been elusive because of this tariff overhang. And as a consequence, there's been some growth pressure on the larger cap IT companies, whereas small companies have still done pretty okay. So I still, meaning I still believe that someone having a slightly more medium-term view, IT is a good investment, space to be in, and then investors need to pick and choose stocks from large caps and mid caps or small caps. But I think we are near the trough in terms of IT spending cycle.
Pankaj, hi, good morning. Tamanna here. I'm wondering how you saw the TCS news that they're going to cut about 12,000 jobs. That's 2% of their workforce. Brings into place a lot of questions on transition to AI. Is this margin management? Is this smoke signals of the demand pain now showing up? How did you look at it?
Well, you're right, Tamanna. I think I would think it's a combination of the first 2 points you mentioned. So there is obviously a reorg of the skill sets within the organization because if AI is going to change the world, before these companies go out and change the world, they will have to change themselves internally in terms of, and they'll have to adapt AI themselves before they can go and implement for clients. And which effectively means these companies need to reorg their workforce in terms of skill sets. And in a large organization like TCS, as you rightly said, with 6.4 lakh employees, 2% of workforce being let off, I don't count that as anything extraordinary. Yes, to some extent, given the challenges on the business, given the TCS's size and scale, is also margin management. So these companies eventually have to manage the ship because eventually it's you have to strike a balance between demand and supply. And if the demand side is weak, then the supply needs to be managed in that context. And the fact remains, as I said, that we are in the fourth successive year of slowdown or moderation in global tech spend. So this is one of the longer drawn slowdown, I would reckon, that in the context of whatever I have seen of this industry in the last 30 years. For whatever multiple reasons, earlier first because in 2022 and 2023 because of sharp rate rise in US, and then now because of the election uncertainty. And once we got with election uncertainty, we got tariff uncertainty. So last 3.5 years, global tech spends have been held back. But my experience of seeing this industry, these spends will come back because generally it's a very prolonged cycle. You do not companies cannot hold back spend for such a long period of time. So I think for TCS, yes, it's both, right? In terms of reorg of the organization in terms of skill sets, and also probably right sizing of the ship, keeping the near term demand supply over the next 2 to 4 quarters in mind.
I'm wondering, Pankaj, so we spoke a fair bit about IT. How are you looking at the entire consumption boost that we were hoping would come in? I mean, we've been talking about it since the budget, really, with the tax cuts, etc. But when we're seeing what your FMCG staple companies have reported, and then you look at what your platform companies have reported, do you think that that consumption story is yet to play out, or it's been overvalued in any case?
No, not really. I'm in the first camp. I think that story is yet to play out. Maybe for longer term investors like us, we always like to be slightly ahead of the macroeconomic cycle. So we try to project trends into the future and try to place ourselves in terms of sector positioning and stock ownership, probably 2 to 4 quarters ahead of the real change happening, because that helps us or allows us to buy companies at attractive valuations, and probably helps us to build a position given a size and scale. So I think we are very much poised. Every other data point that I look on incrementally, feels very encouraging. In terms of a meaningful recovery in consumption going into the second half of the year. We are in midst of a very normal monsoon, so that effectively means probably we'll have a good farm incomes as well this year. And apart from the tax cuts which the government did in the budget, all of us have seen RBI has done 100 basis points of rate cuts, with the last 50 basis point being front loaded. That itself is an incremental monetary stimulus of about $15 billion. That's about 12,000 crores of monthly savings in EMIs in the hands of everyone who's borrowed either a car loan or a home loan or a credit card loan and all of that. So the combination of fiscal stimulus which the government gave in the budget and the monetary stimulus that the RBI has injected, and on top of that now we have a normal monsoon. I think all of these are make for a perfect case for a recovery in consumption. Early signs of recovery in rural consumption is already there in some of the staple categories. We've started witnessing for the last 4 or 5 months high single digit and double digit volume growth at least, which was completely elusive for almost now 2 years. So I think we are poised for a consumption recovery as we go along in the second half of this calendar year, and that story is yet to play out.
Pankaj, so viewers, I'm going to talk about the confluence of consumption and tech, right, which we just spoke about. And Pankaj, one, credit to you. I remember we did a show with you and Sanjeev Bikhchandani on platform companies and Zomato, right? It was at 45, 50. You said there will be a recovery. There has been. You said these companies could enter the index at some point of time. Eternal is now. You had also said that Blinkit may be the new Gmail. Right now, my question to you is, now that a significant part of the rally out there has happened and there is more competition likely to come in, what's your sense from here on for the next 3, 5, 7 years? Are you constructive on the Zomatos, Swiggy, Zeptos of the world, or do you believe that you need to rethink your thesis?
One, Neeraj, I remain secularly bullish on these companies. As the second big question for investors confronting was, as these companies emerged, they challenged a lot of established companies with the traditional business models on their core business. For example, Blinkit or Zepto and Instamart are challenging the organized retailers. And the question was, who will really have the final edge? And from my experience of having seen these companies now for a reasonably long period of time, it's very clear that the newer digital companies, they are very far. They make rapid pivots in their business. They have technological edge, and due to technology edge, they're able to give a far better user experience. And in this world of millennials, UX makes a lot of difference, and their ability to execute is at a far, or their agility or ability to execute quickly is far better than the traditional companies. And given that, I've come to a conclusion that this new generation companies certainly have an sustainable edge over traditional businesses, and they will eat lunch of traditional players. This is something which has happened all over the world, and in India, I think it will be no different. So I think most of these companies have a very long runway for growth, probably over the next decade. And as I said, they will eat the lunch of traditional companies.
Okay, from high tech to traditional businesses, and before we get in Pankaj's view on the same, let's get in Somit to just talk about this potential steel price uptake, because we learn, or the Somit learns, that the steel price hike could be on the cards when the monsoons recedes, because analysts are expecting, amidst the soaring steel prices in China over the past week or so, some uptakes back in India as well. Somit Johnson to tell us more about this. Somit.
Well, as steel companies would remain in focus given the fact that there is a potential domestic steel price hike that could come in going forward. Now, why is that expected? Because China's steel prices or the China steel prices when they come to India are at a premium compared to what the domestic steel prices are. Now, they are at a premium of nearly 10% compared to the domestic steel prices, and analysts believe that post the seasonality or the monsoon period recedes, there could be a price hike that could well likely be taken. Now, if you look at the price movement that we have been seeing for steel in China in the last week, prices have increased by nearly $30 per ton, and this is on the back. And in fact, the current prices are at a 4-month high of around $478 per month and per ton. And this hike in steel prices is largely on anticipation of output discipline, which will not lead to oversupply in the market, and hence we are seeing this increase in the steel prices in China. On contrary, if you look at Indian prices, Indian steel prices, Indian flat steel prices, in fact, with the 12% safeguard duty stands at around 49,500 rupees per ton. In fact, since the safeguard duty has been announced, steel prices have been continuously falling from 52,500 that we had seen since the imposition of duty. Prices have come down to now 49,500, and this is largely owing to seasonality because of monsoon, which is seasonally weak quarter. The offtake of steel is low, and hence we are seeing this fall in steel prices. Now, if you look at the steel price breakdown here, currently the prices, as I was mentioning, is at a discount of around 11% as against 2 to 4% premium that it used to trade compared to the China steel prices. And if you look at the breakdown of the prices here, the China steel prices cost at around $478 per ton. If you add freight at around $30 per ton, duty at 19.5, which comes to around $100, cess at 10%, which is at $12 per ton, the cost of China steel prices comes to around $619 per ton. Now, if you convert that into Indian rupees, it comes to around 53,354 rupees. You have to add port handling charges of around 1,500 rupees per ton. So the landed cost of China steel in Mumbai comes to around 54,854 rupees as compared to 49,500, which is the current prices of steel in Mumbai. So a clear discount of around 10%, which means that China steel prices are trading at a premium, which could warrant a hike in the Indian steel prices going forward as soon as the monsoon period comes down. And this hike is expected to come in August or September as activity pick up, and generally second half of any financial year is stronger for steel companies, not only in India but also in China. And because of that, analysts are expecting steel prices in India to increase and steel prices in China to remain firm at current levels, given the fact that there could be more demand coming in China, and there's expected to be output discipline, which means that there won't be any oversupply, and hence prices could remain firm in China as well.
Okay, so steel prices are in view, but just look at a Tata Steel this morning ahead of numbers, seeing a little bit of pain coming in now, settled if at all. On this entire, Pankaj, I'm just wondering, on the entire metals pack, with the lack of clarity between a China-US deal, lack of clarity on what's going to happen with trade tariffs, is this something that you stay away from?
Well, we do have some exposure to Tata Steel. I think at least the domestic Indian economy is in a sweet spot. But yes, there's a global overhang given the excess capacities in China, and which has an impact on a rub-off effect on global prices. But the good thing we like Tata Steel is primarily because now, for the first time after a gap of 15 years since they acquired Chorus in US, their international operations will break even. They'll The problem with Tata Steel over the last 15 years has been they make a lot of money in India, but they have huge amount of losses which they've been incurring globally in the international business. And now, for the first time after a gap of 15 years, the international business will break even. So, which is where we own Tata Steel because we think the drag will go off. But yes, from a steel price perspective, I don't see significant improvement in steel prices, but the domestic volume growth in India still continues to remain healthy.
So steel maybe not the hottest space. What about pharmaceuticals? Again, another one with some tariff pain coming in, possibly, and then two minds on how vulnerable they are. Pankaj, are you really liking this space or getting onto that bandwagon, which is some of it really driven by innovation?
Well, Tamanna, I don't think tariff is a significant risk for the pharma sector because India is the lowest producer of generic drugs in the world. So anywhere else, if production moves, the cost of that will be much higher than what it is in India. And as a consequence, any tariff, in case if US imposes, will be eventually passed on to the consumer. So I don't see that as a significant risk for the sector. Having said that, pharma is a sector where, meaning one, the sector has done pretty well in terms of stock price movements or returns over the last 3 years. So valuations are near fair value zone for most of the pharma companies. And then from here on, it's more about specific stocks because each company has different business models, different geographical focus and product focus. As you said, some of these companies which have done well in the last year or so has been more innovation focused. So, or there's a big opportunity that's out there, and some of the Indian companies are a play on the semaglutide or the big wonder drug as it goes generic over the next 3 years in different markets of the world. So pharma is a more stock specific, sector. We like companies which have more diversified business models across India, US, and the rest of the world. So Sun Pharma is clearly being the leader, one of the most preferred bet from our point of view. And we do have exposure to some mid-cap pharma companies, including Alembic Pharma and some play on semaglutide through the CDMO plays like OneSource and Syngene.
Okay. Pankaj, we've spoken about a variety of sectors, and you did mention that you're paying attention to the implications of the rate action by the Reserve Bank of India and the various action that it's taken in monetary policy. The second half could be better. I'm just wondering how you view financials, because we've seen the Q1 numbers for quite a few of these large banks, and barring ICICI Bank, a lot of these banks have seen issues in pockets with regard to asset quality. They've seen the net interest margins contract very sharply in the case of a couple of banks. How would you play the financial space? Would you go to the banks or would you go to the NBFCs and anticipate that the margins could improve?
So, well, yeah, you're right. I would not be too concerned about the margin compression that we've seen in the first quarter for some of the banks, because I think given the fact that the rate cut has been front-loaded by RBI and given the way the sector is poised, where your assets get repriced much faster than liabilities, this is a matter of cycle where you are in the cycle. So that's not too much of a concern for me. We still continue to remain positive on lenders because we think we're coming out of 2 years of slowdown in the economy. And as I said, I am firmly in the camp that we'll start seeing gradual economic recovery in the second half of the year, and lenders becomes a good play on it. As far as asset quality is concerned, I think the top 5 or 10 lenders in India are in a very good shape. In fact, after a long time, we own 4 of the top 5 lenders in India in our portfolios. And our preference is for larger players versus the smaller players within the sector. So we own HDFC Bank, ICICI Bank, SBI, and Kotak Bank. And we think all of them have very strong balance sheets, and as the economy recovers in the second half of the year, margins will stabilize in the second half of the year, and more importantly, growth will come back for these lenders. So, and more importantly, one of the few sectors which is still trading at about almost 20% discount to the Nifty index. So I think as we see growth coming back to the sector over the next 3-4 quarters, probably that valuation gap versus the Nifty index for the lenders will narrow. After a long time, meaning HDFC Bank being available at about 17 times, 18 times 1 year forward earnings and about 20% discount to the index, meaning I'm seeing this kind of valuation disparity in HDFC Bank after a very long period of time. And that makes it a very attractive play for a slightly more longer term value investor like us.
Just wondering, on the whole IPO rush, how are you looking at it? Big one opens today in terms of NSDL, and Capital Marketplace seems to be one recession-proof kind of, or really Teflon coated space.
I think NSDL is a great franchise, no doubt about it, because the good thing is depository assets will keep growing, so it's a secular growth story. More.
Can you hear us?
Yeah, I can hear you.
Yeah, please continue.
Sorry. So I was saying it's a secular growth story, and more importantly, it's a oligopoly where you or duopoly where you just have two players in that sense. So NSDL is, I think, is a great story. I think the challenge I face with the whole IPO market is most of the issuance are priced to perfection. And in many cases, we generally tend to avoid IPOs because we like to spend a lot of our time with our investing companies before we put our money to work. And with a lot of these companies, meaning, we don't have enough history. My experience of my longer term experience from previous cycles is when the economy is doing fine or in an economic upcycle, the like one we are today, a lot of mediocre businesses start looking great. But these businesses have not been stress tested for an economic down cycle, and which is where our challenge in terms of durability of a lot of these companies' business model is. And secondly, they leave very little on the table. As the saying goes, companies go public when they're at their best. And when the companies are at their best, certainly that's not the great time for value investors to be investing into those companies. So generally, we tend to stay away from IPO companies. But NSDL I think, is a great IPO.
Okay. All right. So that's what we'll talk about first. Thank you so much for that, Pankaj Murarka. So NSDL, Pankaj Murarka says he thinks is a great IPO. What's it all about? It opens today, Harsh, and while it's in an exciting space, not that great for those who got in the pre-IPO kind of, pricing.
Well, yes. So the grey market pricing was off, as has been the case in the past as well with an HDB Financial. So you're right there. But it's a duopoly. And not too many duopolies. If you want to play maybe a Zomato, Swiggy, could this be a better one? Well, I'll leave that question open. Offer for sale, 4,000 odd crore, so giving it a market cap of around 16,000 crore. Entire offer for sale, so no fresh issue. The price band is going to be around 760 to 800, even though the sense seems to be that it will be tilted more towards the 800 number, of course. The offer date's open for the next 3 days. Now, let's quickly look at what it does. 2012 is when it was incorporated. It's a SEBI registered market infra company, acts as a security depository in India. What is it? It's basically a safe house for your securities which you buy and sell on the market. Only 2 depositories in India, CDSL and an NSDL. We'll compare that a bit. It maintains electronic record of allotment, ownership and transfer of securities. That's its essential role. The services it provides is on your screen. Let me also take you through what it makes money through. Annual custody fees from you and me is what it charges, transaction fees to brokers, IPO facilitation fees to companies, banking services, it has a payment bank as well, database management services is the other piece it offers, including a KYC. Let's look at the financials, and that's how it stacks up. An 18% top line growth, around a 23% EBITDA growth is what it's clocked, and a 21% PAT growth over the last 2 years. That's really the journey. Let's look at the balance sheet. That's how the net worth stacks up, 2,000 crores. So it trades at around, or rather will trade at around 8 times at a 16,000 crore market cap. Something to keep in mind. Let's quickly compare both NSDL and CDSL. On certain key parameters, the number of issuers NSDL are far larger than CDSL. As you can see, the depository is, or the DPs are far smaller than a CDSL, because CDSL is more granular in nature, retailized. And then there are those other parameters, CDSL having more demat accounts as well because it's more granular. Now let me talk about financials. That's how the income number stands at. CDSL makes a better margin, and therefore your profit after tax of CDSL far better than an NSDL compared to total income. EPS stands as you can see. Quickly onto valuations. That's how the price to earnings multiple will stack up. That's the market cap net worth. Let's look at the PE. The trailing 12 months PE. NSDL is 47 times, CDSL is 61 times, 8 times on price to book versus 18 times for CDSL. So substantial discount versus CDSL for the same play, of course, with more institutional participation in customers versus retail for CDSL.
Okay, thank you for that, Harsh. In fact, let me get in Narendra Solanki, Head Fundamental Research Investment Services at Anand Rathi, to talk about NSDL. Deven Choksi also joining us, Managing Director of DR Choksi Investment Managers. Welcome to both of you. We'll start with a quick word of on NSDL specifically, because that's the big one that's opening. And let me come to you first, Mr. Solanki, on it.
Yeah, good morning.
Good morning. Please go ahead.
Yeah, NSDL, we have a subscribe rating on it, and if you see the overall business, there is a lot of room for growth ahead, because right now if you see the penetration of overall demat accounts, it is hovering at around 14% kind of a number, which is way lower, and it's not only about equity, it's about other asset classes as well, so be it mutual fund, REIT, InvITs, be it certificate of deposits, debt markets, gold bonds. So there are a whole lot of other assets which are non-equity in nature, and there are a lot of opportunities for depository participants to venture out into there and get the market share, dominating market share. And even if you see the financialization focus of the government, which is more on the financialization of the overall economic aspect. So even we can look at around some physical assets as well. Going ahead, would be taking a route of financialization, and maybe depository services can offer their services. And apart from this, the payment bank and the whole payment bank infrastructure business which it is operating. So that is also a very highly scalable market. So we think that 3 to 5 years down the line, the business has a very good growth opportunities. And considering the issue prices, which is very decent in comparison with what the expectations were earlier, which was around 900,000. So this 800 is a decent pricing as well. So I think investors can go ahead and subscribe to the issue.
Devin Bhai, are you constructive here on this space, and is NSDL worth it, or would you look at anything else?
Hi, Neeraj, good morning. Well, I believe that I think this is a must in the portfolio.
Okay.
Couple of reasons. You already have the market cap growing from 5.5 trillion with a visibility to become 15 trillion in next 10 years to 12 years time from now. So obviously, I think the number of and the value of assets increasing and the number of transactions increasing along with, that is a good sign for any business directionally for the growth. And they're a duopoly anyway. So around 43-44% of the revenue comes from the deposit services. About 50% of the revenue comes from the payment services which they offer through their other companies, payment bank companies. And I think the database company, which is relatively small, I think with 7-8% kind of a contribution into the revenue. It is also providing, I think, a significant amount of solutions to on the e-governance, KYC and insurance depository related services. So in my viewpoint, I think with this kind of diverse portfolio that you have, including your subsidiaries, I think the business becomes absolutely, I think, a must in the portfolio, because I think this kind of businesses will only give you a chance, I think, when they come into the public market. Fortunately, they have left some money on table for investors, as against, I think, what it was trading at the price in the private markets. So in a way, it is a good sign, I think, that the company has given for investors, I think, for long term.
Okay, so Deven Choksi says it's a must-have in your portfolio. So does Narendra Solanki. Deven, by just one word on investors who, I want to say, got trapped in the pre-IPO pricing, in the grey market. Actually, I can't even say grey market because it's not necessarily, illegal. Same thing happened with HDB. There are a lot of investors right now in NSE before the IPO comes in. What is your caution to them?
So I think if you have not bought it for flipping purpose, then I think you don't have to worry about it. You just simply stay invested in this business. And as I was explaining, I think this kind of businesses, I think they provide you the returns over a longer period of time, because I think they grow inherently with the asset class in which they are operating. So certainly, I think we believe that I think this is a good opportunity over the next 5 to 10 years as well. So those who have been buying, I think, at a higher price in the pre-IPOs, they may wait. I think they need not immediately panic and sell it out.
Okay, thank you so much, Devin Bhai, for speaking with us, and Mr. Solanki. All right, happiest minds in focus. The tech service providers announced its first quarter numbers yesterday. Profit has risen on the back of better margins. Top line, though, remained flat. We spoke with the management. Listen in.
Firstly, a lot of changes, a lot of transformation that has happened in terms of structure as well as from a business strategy perspective as well. And it seems that it's percolating in terms of the numbers. If you have to talk about the first quarter, what has led to this kind of an uptick in terms of profitability as well as margins?
So taking that question, we have shown a solid growth of about 2.3% in constant currency and about 18% year over year. That's in revenues, while operating margin has grown by 20% on a sequential basis and about 6% year over year. So why I highlight these two is to show you that, or talk about the strong margin performance and the organic growth rate that we have put forth for this quarter. The revenue growth is quite in line with the double-digit revenue estimate expectation for us that we have put out late last year at the end of last quarter. When we talked about results, we are looking to have a double-digit growth in constant currency, and this is a good start to that target. As far as margins are concerned, we did have a drop in the last quarter, but we are back to our 17.8% kind of a trajectory that we showed throughout the last year. And our EBITDA is back in the range of 20 to 22%, which is again the estimate that we had given to the street. So all in all, it's a good performance. But the highlight here I would want to draw your attention to is that our generative AI business services, into which we have been making investments for the last 5 to 6 quarters, has broken even on an operational basis or on a contribution basis this quarter. It's a small profit of 24 lakhs, but nevertheless, that shows the strength of the franchise and the focus that we are having in that business. Until now, many of the projects were POC, but now we are seeing that turning into revenue generating long-term, larger value contracts, and that's quite heartening. So it's a step in the right direction. And Joseph will give you a brief, or he'll talk about a transformational agenda which underpins all of this performance.
One interesting question that comes up over here, Venkat, is your FY27 EBITDA margin target of 20 to 22%. Does this tell you that you're on track with the way the first quarter performance has been so far?
That's right. 20 to 22%. We don't call it a guidance because, we are still holding on to that number given all the happenings in the world. But that's a number that we are targeting to achieve. And if you look at the first quarter at 21.4, we are pretty much within that range. And like I said, contributions from generative AI business services and the new sales engine that we put in place, both of which were investments in the last 4 to 5 quarters, is now starting to bear dividends.
Okay, we'll talk about the Gen AI business as well, but the other aspect I want to consider is in terms of the $1 billion target by FY31. The expectation was that taking, the shift that we are seeing in terms of the macroeconomic environment, the Trump-related unpredictability, there could potentially be a revisit to that number of $1 billion by FY31, and this could probably be given in the first quarter of FY26. Is there any revision to achieve this milestone, or do you think nothing can actually change that?
It's actually part of our vision statement to touch $1 billion. As of now, we are not revising it, but we are constantly, relooking at the ways and means to achieve it organically and inorganically, as the case may be. But it's a vision statement, and we'll relook at it. We said that we put that out in FY21, and we are on target to meet many of the other aspects of the vision statement. There are about 10 points that we have set out for ourselves in the vision statement, and we are targeting to move on those fronts, but at the same time not losing track of the 1 billion target, and seeing how to achieve that. And you've got another five years out there for us to do that.
Yeah, and Venkat, that would require almost a 22 to 23% CAGR growth, with a significant portion that could probably be driven by inorganic growth as well. So does that combination fit well?
We have done 28.5% CAGR growth in constant currency from FY21. So, it does tell you that it's possible to do that. And yeah, rightfully so, that growth is a combination of both organic and inorganic. And if we act on a similar course of action, I'm not... we are okay in terms of achieving that vision or a milestone that we have set for ourselves. Yes, but we'll evaluate that constantly as we move forward and come closer to the time.
Well, that's happiest minds, of course. But I think the business in focus is Mazgon Dock. They had a mixed quarter, you have to admit. Revenues rose, but profitability took a hit. Before we speak to the management, Anushi Johnson to break down the numbers for us and what is to be expected going ahead. Anushi.
Hi, morning Neeraj. So, as you said, that profitability took a hit this quarter, and this is not the first quarter wherein we are seeing this effect playing out. Even in the last quarter, we saw the similar kind of impact playing out, and this is on account of provisions that the company had made, but they do say that this is expected to normalize from the next quarter onwards. So commentary on that front is something that we should be watching out for. In terms of the headline numbers, if you are looking at, the company clocked in about 11% of a revenue growth, while margins declined to 11.5% as compared to 27%. Net profit was down about 35%. Order book positioning also, what does the current order book stand, is something we should be watching out for, because if we take the March 25 order book in perspective, that stood at 32,260 crore. But the expectation is that over the course of FY26, that this order book is expected to double, with additional orders coming from P75 as well as P17B frigates that we are looking at. Other than that, the company also acquired a controlling stake in Columbia Dockyard, and this was for an overall consideration of 452 crore investment that we are looking at, marking their first international acquisition as well. So more such acquisitions in cards is something also that we should be watching out for. But this is the overall picture that we are seeing for Mazgon Dock.
Okay, Anushi, thanks for that. Let's welcome in Mr. Biju George, Director Shipbuilding, Mazgon Dock Shipbuilders. Mr. George, good having you. Thank you so much for taking the time out and speaking to us.
Thank you.
Could you tell us if this quarter panned out exactly as you anticipated, or what some of the line items like the provisions that have happened because of which the EBITDA got impacted were a surprise?
Yeah, the quantum of provisions came as a surprise. However, provision per se was not a surprise because it's in the offing. It's driven by the market conditions. It's driven by the shipbuilding boom, which presently our country is experiencing, as well as also the global boom in shipbuilding. And also contributing negatively to this is the emerging geopolitical scenario, where some of the, especially for export projects, where most of the equipment fit has to be sourced from NATO nations. And these are all contributed for increase in price of this equipment than vis-a-vis what we had estimated. And therefore, we have done a very conservative provisioning. So to ensure that no further provisioning would be required in the subsequent quarters, so that overall on a yearly basis, our revenue and profitability can be maintained and sustained in the levels it was anticipated.
Got it. So, and did I hear you say, at least Anushi was saying, that Q2 onwards, this surprise of provisioning or provisioning by itself, even if there the quantum would be minuscule or not there at all. So is the provision cat behind us, Mr. George?
Yeah, I would say provisioning is behind us, because that's why I told we have done a very conservative thing, because we have factored all the probabilities which are there, which can adversely impact the costing, and that has been already provisioned. So that in the coming quarters, this phenomenon is not going to repeat. Further, for ONGC projects, what we have observed is during monsoon we are unable to execute it. We will be able to revive the execution from post-September, and therefore H2 of this financial year would look better as more revenues will trickle down from the ONGC projects.
Got it. So we will not have provisioning measures issues per se. Forget the quantum being a surprise. I don't think it would be there in the first place. So that is one takeaway. And therefore, this margins being under pressure, you reckon those would normalize from quarter two itself too?
That's correct. So the pressure on the margins would get relieved from there in subsequent quarters.
Got it, sir. And I think what would just trying to understand, what could be a sustainable range? I mean, given that there are uncertainties, I know it's difficult to predict, but what could be, let's say, a ballpark sustainable range for margins, let's say, over the next 6 to 8 quarters, Mr. George?
So, with the present data available and the way it is panning out, I can, a fair figure would be around 15% we would be able to sustain.
Okay, 15% is a safe assumption.
Yes.
It could be, of course, plus minus 100, 150 basis points, but largely a trend of 15%.
Largely, yes.
Got it, sir. Now, we know that order books are healthy. One question on whether there could be significant additions to the order book over the course of the next 9 months, Mr. George. And two is on execution, sir. Considering again the uncertainties around geopolitics, how do you see execution resulting into revenue growth for you for the rest of the year, arguably for the rest couple of years?
See, the execution per se is not affected by geopolitics because most of the equipment have started coming in. So only, albeit with a higher price that I have already mentioned. So we intend to execute these projects. So there is no, I don't see major issues pertaining to that. And the current order book is around 30,000 crores, which we intend to liquidate in the next coming 4 years by 2029. So at the same time, we are expecting there is a pipeline of orders which we are vying for. And that is whether that is going to materialize and when it is going to materialize is driven by government decisions, and we are waiting with crossed fingers for that because this is the additional submarine orders, the 675I orders. Then we are also a strong contender for next generation destroyers and also for the 17 Bravo project, which is the frigate program.
Got it. Sir, would love to know. So, despite the recent revenue growth being like 15 to 20%, I believe in the call, you have said that the normalized growth could be 8 to 10%. In a high growth sector, which is receiving orders, and now there is proof of concept for Indian defense industry per se, shipbuilding industry per se, why 8 to 10%? Is it, is there a reason why growth can't be faster or larger?
So, the growth depends on there should be a steady pipeline of order book, and the nature of the work which we are executing are long gestation projects. That means the build period is long by the nature of the work itself. So those revenues will have to be recognized over a longer period of time, unlike a mass production industry. So these are the nuances of it's driven by the nature of the industry, I would say.
Okay. And therefore, despite the fact that your order backlog, right, potential order inflow, I believe you said, over the next 18 to 24 months is 2 to 2.5 lakh crores also possible, contingent on multiple things, of course. But even if that were to happen, sorry, I'm reading it out of the con call, right?
See, that would be a very, very, very optimistic figure.
Blue sky scenario. Okay.
So that is if everything are aligned in favor of us.
Got it. But let's work with an assumption, sir, that if everything is aligned and if you do get that kind of an order inflow or 10, 15, 20% lower, let's assume, order inflow, would you still believe that growth rates would be 8 to 10% or could they be higher?
Then if everything is aligned in our favor, it can be more. But at this point, we are unable to speculate on how it is going to pan out.
Okay. Okay.
So we have the capacity, we have the capability, we are on the cusp of the learning curve to receive more orders. So therefore, we are fairly optimistic. A good portion of this pie would come to us.
Okay. You have done a fair degree of capex already, Mr. George. I believe on the call you said that there are no immediate plans for debt as well because the balance sheet is healthy. If you indeed continue on this 8 to 10% growth number, would you need to do any kind of equity fundraise at all for the next 3 to 5 years? Or would you be fine with internal accruals and cash flows?
So with the internal accruals, we would be able to manage the capex with also the profit also getting accrued further. So and this capex is not a one-time spend; it's also spread over 3-4 years because there is civil works involved. These projects are also of long gestation projects, so it will also be spread out. The outflow will also be spread out in a matter of 5 to 6 years.
Yeah, of course. So, but you would not need to do any kind of equity fundraise to execute that kind of growth, I presume, right?
As of now, we are not looking at that.
Okay, but if growth were to pick up, then you might think of it as of.
If the growth has to further expanded, at that time we can consider that.
I have one final question, sir, and that is, I think on the Ministry of Shipping plans, right, for 4 large shipbuilding clusters, I believe you are open to tie-ups with multiple global players as well. Give us the sense of what does such a plan entail? I mean, does it bring in newer global technologies? Does it help you share your learnings with global companies as well? Does it expand order books and scope for business? Tell us a bit about it.
This is part of the mission Amritkal 2047 of the Government of India. The shipbuilding clusters is an imperative for a maritime nation like us, and there is a full government support for that. And we are also looking at the various options that are available. Right now, it's in a very rudimentary stage. I'm unable to give any clear picture because still we are. It's even broad contours of that are not clear to us how we have to go about that. But we are looking at that very carefully as well as seriously.
Got it, sir. Okay. Wishing you all the best for that and more. Thank you so much for taking the time out and being with us today.
Yeah, thank you. Thank you, sir.
That's Shri Biju George on Director Shipbuilding of Mazagon Dock. Well, let's move on to the other set of numbers. And Bank of India is in spotlight after reporting. What do you argue a decent set of numbers? The stock is also up about 2.8%. Asset quality improved. The provision expenses declined as well. And the conversation with Mr. Rajneesh Karnatak, who is the Managing Director and CEO of Bank of India, revolves around all of this and more. Remember, as much as NBFCs are in focus, what PSU banks are doing in terms of loan growth and asset quality is very, very important. Here are a slice of this conversation.
Your margin number has come off just about 6 basis points. Let's talk margins first. Talk to us about where does it bottom and what is the full year guidance with regard to margins?
Yeah. So thank you for having me here. As regards the margin is concerned, as you rightly said that the reduction in the margin has been only 6 basis points. So from it has come down to 2.55% from 2.61% as on March 25. There has been a stress as far as the net interest income is there. If you see the net interest income, though the net interest income, interest income has gone up, there has been more increase in the net expenses, interest expenses which have been there, which has finally resulted in a net interest margin coming to the global net interest margin coming to 2.55%. So, however, we feel that this has bottomed out for the simple reason that already the 1% cut of the repo, which has happened from February to June, it has already happened and it has been factored in our books on the loan side. 60% of our book is the EBLR book, which has already taken that thing. 30% is the MCLR book. Going forward on the liability side, the pricing will start to rehappen from the quarter 3 after the 3rd October onwards. And with that, the NIMs would start stabilizing. So we feel from the bank side that the global NIM of 2.55, which we have shown in the this Q1 of FY26, is the bottomed out NIM, and it would improve from here in the ensuing quarters.
Okay. Okay. So this is where it bottoms, and it will start to improve. So, sir, where is your full year NIM placed at?
So at this moment, I would not like to give any particular number, exact number, but a range, if we can say the number, we should be at around 2.60 in the global NIM as on March 26, because the repricing of the deposit is yet to take place. Most of the repricing would be happening from the Q3 onwards. So H2 should be much better than the H1 in this financial year, as far as the NIMs are concerned.
So sticking with the top line, the other income also has risen quite sharply, which has aided operating profit, especially when I'm looking at it YOY. What's happening there? Give us perspective.
Yeah, so other income, if you see that we have crossed the 2,000 crore mark in the other income in this quarter, and it has grown by on a YOY basis by 66%. So if you see the last 3 quarter results of the bank, our other income is more than now 2,000 crores consistently. And we feel that in the coming quarters, also in the next 3 quarters of this financial year, other income will be more than 3,000 crores, 2,000 crores per quarter. And it is backed by some income which we are getting from the treasury. There are recovery from return of accounts. There is other income which is coming from the loan products also, from process fee, LCBG commission, and upfront fee, etc. Because our loan book is also growing consistently on a YOY basis. So all these things, and also obviously the exchange income and the third party products income, all these things taken together should give a run rate of more than 2,000 crore per quarter on the other income side.
Okay. So this is sustainable going forward as well, is the understanding that I take from your answer. And therefore, sir, the sustainability of operating profit also likely to hold up is the understanding.
Yes, very much. So we have shown an operating profit of 4,009 crores, and it has gone up by 9%. So on a YOY basis, yes, as a guidance, we are giving a guidance that the operating profit should improve by 10% on a YOY basis in March 26.
Understood. The other piece that's aiding your numbers is the credit cost number, sir, which has come off quite sharply. What's the outlook with regard to that number? Is that too sustainable, or will it normalize? If it does, at what level?
So credit cost, we have given at 0.68% for this quarter. And we are very much confident that we'll be able to manage it at around 0.70, at around 0.70, 0.65 to 0.70 in March 26.
Understood. And sir, pipeline of recovery, how is that playing out? Give us that perspective too.
So as far as the pipeline in recovery is concerned, we have a healthy pipeline. As in the recovery, we have certain OTS schemes which are there in the bank, both for large corporate and small ticket sizes loans. If I give you a number, we had a gross cash recovery of more than 9,500 crores in FY25 in the full year 12 months. So this quarter has also been good, more than 2,000 crores of gross cash recovery we have shown. And we are very confident that whatever the number we had given at around 9,500 in FY25, we'll be able to repeat it in FY26.
Your gross cash recovery stands at 2,150 odd crore. You've done 2,700 plus crore in both last quarter as well as last year. So give us that perspective. Yeah. Is this seasonality? Is this maybe something which will get bridged in Q2? How should one look at that?
Exactly. So Q1 is normally a subdued quarter for all the banks, whether it is on the credit side, interest income side, or on the recovery side and collection efficiency side. But H2 is always better for the banks. So in that perspective, I am saying that the gross cash recovery that we did in the 12 months of FY25, which was around 9,500, we'll be able to maintain that run rate.
Got it. So I want to talk a little bit about growth as well. 14% growth in advances is of course strong, and I give you that credit. How sustainable is what I'd want to understand, because full year FY26, can you continue to do maybe mid-teens kind of growth on the advances front? The deposits, of course, playing a bit of catch-up, but give us that perspective to maybe deposits.
So as far as the credit growth guidance is there on the global advances side, we are saying that it should be at around 12 to 13% for March 26. The background for that is, as you are aware, that we have given a very good credit growth in the RAM segment at around 16%, within which the credit growth in agriculture was more than 12%, in MSME it was more than 16%, and for the retail it was more than 19%. So with this backdrop and the thing that we have a very robust pipeline, so we, as far as the credit pipeline is concerned, as on 30th June, it is at around 80,000 crores, which includes the credit pipeline of RAM, which is around 10,000 crores, and the international and the corporate pipeline, which is at around 70,000 crores. And the entire, this 80,000 crores will get disbursed in the ensuing 2 quarters of September and December. With this thing in mind, we are very confident that whatever the growth number we are giving of around 12 to 13% for FY26, we'll be able to achieve.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. This show gets you answers to all of your stock-related questions, and among the various questions that you could potentially have is how you should deal with all of the action in the primary markets. And this week, there are 14 issues that are opening up, 12 listings, and there's so much action that you'd be forgiven for losing track of which company is listing when, which company's IPO opens up. So then depend on us and we'll tell you all about it. In fact, that's exactly what we're talking about at the start. We're speaking about a company's IPO which opens today. M&B Engineering is set to raise 650 crore rupees. Joining me is someone who's looked at the numbers closely and looked at the company. Anushi, first of all, what does the company do very quickly, and there's also the management joining.
Of course, I'll just quickly walk by with the key issue details that we are seeing now. It's a 650 crore issue that, as Alex spoke about, with the issue opening today for subscription, and this will go on till August 1st. If you look at the price band, that is between 366 to 385, and this fresh issue is divided between a fresh issue of 275 crore with an offer for sale component of 375 crore. Overall market value, if you see, comes up to about 2,200 crore or so. Now, what the company essentially does, it is in the business of pre-engineered building player. With this, it provides turnkey solution, which includes design, engineering, manufacturing, erection of such roofing system solutions that we are looking at. In terms of how the company has fared over the last 3 fiscals, if we see, they've clocked in about a 24% growth in terms of where the revenue is concerned. In EBITDA, we have seen the number inching upwards from 7.5% to 12.8% in the quarter, while profit for tax has seen about a 69% of a jump. The key objects for these fresh issue proceeds would be utilized towards capital expenditure, along with that investment in IT upgradation, along with about a 59 crore or also of repayment of borrowings as well. But to discuss more about this in detail, we are joined with the management as well. Chirag Patel, the Joint Managing Director, along with Malav Patel, who also is Joint Managing Director of the company. Hello, welcome to the show. Firstly, my question would be to understand the overall business model of the company and how you're going to be utilizing this fresh issue towards the business going forward.
There are 2 business verticals in our company under the name M&B Engineering Limited. One is the self-supported steel roofing sector, which is into the industrial roofing market. That is one of the verticals. And the second one being Phoenix Construction Technologies, which is in the business of pre-engineered buildings. So through these business verticals, our business model is to capture the industrial capex that is happening in the country today. And the proceeds that are going to be coming in, about 130 crores we are going to be using towards expansion of our 2 pre-engineered buildings facility, one in Sanand, which is in the state of Gujarat, and the other one which just came up last year in the state of Tamil Nadu in a town called Cheyyar. Okay, the remaining 60 crores, the 60 crores we are going to be using towards term payment, which we utilize for our Cheyyar facility in Tamil Nadu, which came up last year, and the remaining 80 crores is about GCP.
Okay, understood. Chirag, with that also give us a sense in terms of how is the current capacity, where does that stand, and what is the kind of proposed addition that you expect in the next 2-3 years or so?
Yeah, so our Sanand facility is having a capacity of 72,000 tons, and Cheyyar facility is having approximately 32,000 tons. So combined capacity of 103,800 metric ton. And as a phase 2 for Sanand is going to be expanded in the first phase of 20,000 tons. And then another 20,000 tons will be added at the Cheyyar facility. So with that, our total capacity will go to 143,800 tons. We are one of the largest exporters of pre-engineered buildings out of India. We are sending our material to more than 22 countries. USA and the Northern American market are a prime focus for now in the coming years. For Proflex, we have 14 equipments, and we are adding additional capacity in Proflex as well. So with the current PLI schemes, the current semiconductor push, EV battery push, the green energy push, there is a great tailwind that we are seeing in both our businesses. For Proflex, we see a lot of new infrastructure coming for railway projects across the country, as well as agri warehousing.
Okay, and Chirag, with that, if we have to consider, you just spoke about the capacity addition that is expected to take place. What is the kind of incremental revenues that you'll drive from these additional capacities? And in what time do you see this coming in? If you can give us a sense, because if you look at the FY25 numbers, you've clocked in a 24% of a growth. So you expect this to sustain going forward as well?
Yes. So going forward with the current utilization, better utilization of both the plants in the current year and the 2 expansion that I just spoke, will give us 20 plus CAGR in the coming few years.
Okay, fair enough. And Malav, coming to you, my final question is about the exports that we are looking at. Currently about 6.5% of a mix. The focus is to increase this forward. How do the margins differ here? What's the kind of margin trajectory as well? You can give us a picture here.
Yes, we have been working in the US market, as Chirag bhai said. The major thrust in the coming 3 to 5 years is from the in the exports business is going to be coming from the North American continent, the US and Canada put together. We have been doing business in these countries since the last 5 years. Last year we did about 2,000 tons. This year we have began the year with a robust order book, and the projections that we have made for the current year and the time coming forward, we are going to be seeing at least multiple times growth. As we speak, we have an order book for the United States of about 6,000 metric tons. We have targeted 10,000 metric tons this year, so we are confident of achieving these targets. And in terms of margins, yes, these markets offer a much robust margins compared to the domestic business, but both put together, we are very confident that the EBITDA margins will be growing at a steady rate as we move forward with time.
Okay, well, thank you for that. Thank you, Malav and Chirag, for joining in and sharing that perspective on the company. But you know, with that, Alex and Mahima, if you have seen, it's been an IPO frenzy sort of a week that we are looking at. Even the recent listing that we are seeing, GNG, it has clocked in strong listing day gains as well.
Yeah,
right?
absolutely. Anushi, you said it. And thanks so much for that interesting update, speaking with the management of MNB Engineering, just one of the companies that are heading to the Lal Street. In fact, I pointed out, this is Ask Profit. Mahima Vachajani is joining me as always. Mahima, you looked at the new listings. What is looking good on the screen right now?
I think it's GNG, as Anushi mentioned, stellar listing, 50% of listing gains, and that's not been the case this year so far, right? So it's very interesting. There's IndiCube, which has seen a downtick of around 10% listed at a 7% discount, and there's RM Drip Sprinkles and Solutions, so that's around 4% uptick. But I think GNG stands out of the three of them, because a 50% listing gain is not something that we've seen so far in the calendar year 2025, and it's into an interesting business as well. It's into refurbishment of laptops. So if you've given your laptop for repairing, or it's a second-hand sale, then this company refurbishes and then sells it further. So I think it's the only player in this space, at least in the mainboard space. I think there is one company that does this, but it's in the SME space.
This is GNG Electronics.
Yes, GNG Electronics. So it's an interesting company certainly to keep your eye on. But a 50% listing, I mean, I was shocked to see that on the screen.
How much was the oversubscription? Do you remember that?
No, but I'll try to pull that up.
Yeah. Pull that up. In the meanwhile, let's look at the secondary market and see what's happening. You have the benchmark indices that are trading more or less flat, and given up the early gains that you saw, may not be a second day of gains on the trot. We'll have to wait and see how that pans out. Of course, yesterday we broke a 3-day losing streak for the benchmark Nifty 50. I wonder what will happen today and heading into the monthly expiry as well. The broader markets have also given up ground and are trading lower, but the cuts are not very sharp. Down about 0.2% for the mid-cap index and about flat or thereabouts. Very little change from yesterday's close for the small cap index. Very quickly, let's also take a look at the advanced decline ratio just to see what the breadth is like at the start today. And here I'm talking about the start, we're pretty much at 10:30, so it's just about an hour and a half in, and it's more or less even Stevens at this point. Also pull up the sectoral indices to see what is buzzing. Yesterday you saw quite a breath of fresh air, quite a few sectors in the green. Today it's the opposite, and in fact you have only pharma that's once again standing relatively tall, gaining only about 0.1% or so, but you have realty that's once again languishing, losing about 0.9%. Oil and gas losing a bit of steam, losing about 0.7%. Of course, oil prices have gone up quite substantially overnight, and you have quite a few of the oil sensitives therefore that will lose a little bit of ground. We're joined this morning by Rajesh Agarwal, who's a head of research at Om Capital, and we will soon have Vaishali Parekh joining in as well. Very good morning, Rajesh, and thanks so much for taking the time. There is so much action in the primary market, so let me ask you this: do you have a subscribe rating on any of the IPOs that are still underway, still yet to open or have opened?
Good morning, Alex. Good morning, Mahima. Yes, we do have a subscribe rating on some of the IPOs, one of them being NSDL. That's one of the star of this week, I would say. This week we have almost 14 IPOs 5 from SME, 5 from main board and 9 from SME. Out of which we think NSDL obviously stands out because of the brand, the kind of clientele it has, the kind of assets it has under its custody. Yes, the margins are somewhat lower when compared to its its peer company, but still, I think NSDL is one of the issue which one should subscribe going forward.
Okay, NSDL is one such IPO to subscribe, is the view that Rajesh has. All right, I'll go ahead and take the first question then, which is on Star Health. Mohit from Ludhiana has purchased 200 odd shares at 590 a piece. He's saying, considering the low penetration of health insurance in India, give us an outlook on Star Health going forward for the next 5 odd years. Rajesh, I'll come to you on this one. The earnings came in. The stock, let's try to pull up how the stock is done so far. At retail, we're trying to pull that up. Your view on how one can see this particular counter. There you go. It's up 3% on the back of its earnings.
See, I do agree that the earnings were good and the stock is doing well. But what I feel is in the healthcare insurance sector as such, there are better choices. I think ICICI Lombard fits the bill. It's better to switch from Star Health to ICICI Lombard.
Talking about Star Health on Know Your Company, which, as you know by now, because I've repeatedly told you about it and because you watched it, we have Know Your Company at 11:30 every day, and that is a show that gets into the nitty-gritties of one particular stock, and that stock today is Star Health. The next question we're taking is on, okay, this is a short-term perspective, so Vaishali will join in a bit, and I will ask the question to her. But transformers and rectifiers is the next question. Siddharth from Noida has bought 100 shares at a price of 488 rupees per share. The stock is currently trading above that, 507, and he is looking to add more at this point for a longer horizon, and he's looking at the next 3 years. What's the view, Rajesh, on the chart, on the fundamentals?
We are very bullish, not only on this sector, but this company too. Power is going to be the next in thing. The kind of power shortage the country is witnessing with the focus of government on increasing power supply and all. I think these kind of companies are going to do well. And transformer and rectifiers, the fundamentals are strong, balance sheet is strong, order book is doing good. And in the last 2-3 quarters, we have seen the numbers improving. For a long-term horizon, yes, it's a good buy. The only issue with this company is low volumes. But still, when you are looking for a long-term horizon, I don't think volumes should matter such. So one can continue to hold, and if one wants to add, even one can add.
Okay, so that's with regards to where transformers and rectifiers India stands. We've got a first caller for the day. Sanjay is calling us from Gujarat. Sanjay, hi, a very good morning to you. How can we help you?
Good morning.
Good morning.
Yes, I have BHEL. Last 5 years.
Okay.
Price is 34 rupees 25 paisa.
Wow. Okay.
And but I want to know that last 2 years the stock is around 240 to 250 range from last 2 years. How can it break, or I can move to BHL to other stocks like L&T?
Okay. Sanjay, first of all, congratulations, because you've got the stock at such low levels and sitting on profits of over 2 lakh rupees. So congratulations on that. Before I go on to the guest and ask about BHEL, just wanted to understand as to what was your thinking behind buying BHEL at such low levels?
Because at that time, the all companies of the state level and national level companies are capital of the company, and companies fundamentals are very strong, but the rate of the company in stock markets are very low at that time at the COVID level. Because of that, I can buy NCC, BHEL, IOC at that time on very cheap level of the COVID time.
Right, and Sanjay, that's the correct way to approach investing. So kudos to that. I'll take this up with Rajesh quickly. Rajesh, BHEL, should he book partial profits? What he's saying is it's stuck in that range of 240 odd rupees since a few months now. Should he stick to the counter and see more profits on the cards, or should he book some now?
Mahima, you shared it right that it's a good strategy to buy when there is blood on streets. Nobody is going to buy. Nobody is willing to buy it. that time you get good returns. And we have example of this gentleman in front of us. BHEL as a company is doing very well. As I discussed just now, that power as a whole is going to do well. BHEL is one of our good company into that sector, having good order book, and they have been getting new orders every quarter. But the gentleman has said that he wants to switch to Larsen, and I believe that Larsen is way better than what BHEL is now. I do not say that BHEL is a bad company, but Larsen is a better choice. And with the kind of numbers which we have seen yesterday, 6 trillion plus order book, execution capacities every quarter, new orders coming in, margins improving. And a large part of the order is from UAE and other countries. So it's not only a domestic play, but an international play too. So Larsen is a very good choice. If you want, you can switch from BHEL to Larsen.
All right. So what a fantastic story, right? Buying BHEL at a price of 34.25 and having the patience and the gumption to hold for that long. Kudos to you, Sanjay, and this is the way that long-term investing should be done. Ravi from Vijayawada has got the next question, and Vaishali Parekh has joined us. Vaishali, very good morning to you, and thanks so much for taking the time. I will come to you on the first question that we have on the shorter end of the spectrum, and this is on NTPC. Where Ravi has bought 351 shares at a price of 344 rupees a piece, and he's wondering whether to hold and what the upside potential is. Where should he put the stop loss?
Hi, very good morning, Alex. So NTPC has been quite a laggard right now, but currently, I think if it is for a short-term period, keep your stop losses at 325. But till then, if it's a long-term perspective, continue holding. 350, 360 should be the near-term hurdle. Once we see the stock surging above, you can see higher returns coming in towards 385.
Okay, so that's with regards to where NTPC stands. We've got our next caller. Srinivas is calling us from Hyderabad. Srinivas, hi, a very good morning to you. How can we help you today?
Yeah, good morning. I'm holding Yatra shares, 700 shares. So I want to know the fundamentals are good to hold for the next 1 to 2 years. Or can I buy if there is a dip? Can I add more?
Okay, Srinivas, I got your question. Rajesh, I'll take this up with you. Yatra Online is the counter that he's purchased and wants to know if he can continue to hold for the next 1 to 2 odd years or even add more. I'll further go ahead and ask you if this is the right counter to play the tourism theme right now.
See, tourism as a sector has been doing very well since COVID. And every quarter we have seen numbers jumping in the entire sector. Almost all the companies doing very well, be it hotels, be it airlines, and other ancillaries. But I don't think Yatra should be a good choice for a long-term horizon, maybe like 1 or 2 years down the line. Yes, it can be held for a short-term trading opportunities here and there, but for a longer-term horizon, I think better names like ITC Hotels or a Lemon Tree, even Park Hotels can be a good space in the hotel space. Indigo in airline space can be a better choice rather than going for Yatra. Or even railways, I think IRCTC is one of the stock which has not done anything from a long period of time, despite having monopoly status in 3 out of 4 businesses it does. So I think these are better choices in the travel and tourism space rather than going for a Yatra.
All right, so that's the view on the hospitality space, and Tej is writing in on WhatsApp. He's got the next question, and he's asking about a couple of stocks that are in a sector that is in focus today and has been in the recent past. Dr. Reddy's Laboratories and Sun Pharmaceuticals for the long term. Rajesh, a lot of attention in the recent past on CDMO players, contract drug manufacturing companies. Would you say that these are the way to, or this is the way to play the pharmaceutical space for the medium term to the long term, or would you go with what he has suggested? Would you add to something else? So, for example, Cipla had a pretty decent set of numbers, and the stock was up also quite substantially in the recent past. A lot of technical analysts seem to be suggesting that the upside potential is interesting in the near term. I'm just asking for a holistic view on the pharmaceutical space.
The pharma as a space is looking very good. From the last so many years, it has done nothing. It's only in the last 5-6 months that it has started performing. The only issue at this point of time is the sword hanging on our head about the Trump tariffs, especially on the pharma sector as such. When that goes behind, I think this sector is going to do very well. Some of the choices in this space, I think, as you said, CDMO space, I think Laurus can be a best pick out of these because of the kind of capex it has done. It has got a land in EP from the EP government for setting up new facilities. The numbers in the last 2 quarters rather, I would say, have been very good. The share of CDMO in the entire revenue space is going up. Apart from this, Cipla and Dr. Reddy, Sun, these are large cap names doing very well and fundamentally very strong names. So one can have a look at them also. One company that is showing a good turnaround is Wockhardt. That can be a very good long-term play, and a new listing, Blue Jet Pharma. That's one company which is in our radar and which for which we have come out with an initiating coverage report around 6 months back. And that is also looking very good. These are some of the names in pharma spaces.
Okay, so those are the names that Rajesh is liking in the pharma space. We've got our next question from Mahalakshmi, who's writing us from Hyderabad. A lot of viewers from Hyderabad writing and calling us today. Interesting. Her question basically is that, and she's saying that she's a regular viewer of this program and a senior citizen. She's holding 1,500 odd shares of IDFC First Bank since 2016, and she's saying that she's bought at an average price of 56 rupees. So sitting on profits of 19,000 odd rupees. She now wants to sell them and invest them in HDFC Bank for the benefit of bonus. She's already holding 500 odd shares of HDFC Bank in total, and she's saying banking sector of her total portfolio is 20% concentration right now. Wants to know, Rajesh, from you specifically as to what should she do. Should she continue to hold IDFC First Bank and see some more profits on that counter, or book profits and go to something like an HDFC Bank? And 20% concentration in banking, is that advisable?
Yeah, at this point of time, 20% concentration is advisable because we think going forward, banking as a space is going to do well, not only because of the kind of liquidity infusion or interest cut that has been done by the RBI. We still feel that there are more room for more interest rate cuts. And it's just a matter of time when rate of take starts taking place. As far as switching from IDFC to HDFC Bank is concerned, I think that's the best strategy at this point of time. IDFC First Bank, the numbers have not been that good. It has been languishing since very long period of time, and I think it will take much longer time to give some meaningful results. It's better to switch to HDFC Bank, where the numbers were good. It has become a very large bank after the merger. It's one of the 6th largest bank across the world. NIMs have been good, asset quality is good. And we believe that in FY26, the bottom line would be somewhere in the range of 80 to 85,000 crores. A bank earning 80,000, 85,000 crores, it's definitely a must have in one's portfolio. And not to forget the additional benefit of bonus, which is going to come in the near future. So one can switch from IDFC to HDFC Bank.
All right, switch from IDFC First to HDFC Bank. Mahalakshmi, I hope that answers your query. With that, it's time to slip into a very short break, but we'll be right back answering all your queries on the other side, so do stay tuned.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory. Welcome back. You're watching Ask Profit and NDTV Profit, and we generally speak about stocks, but we should be bringing your attention, and we are bringing your attention to what is happening with the Indian rupee, because you've seen a very surprising slide in the rupee. It has breached that 87 mark on the downside, And this is not something that a lot of people had anticipated. Why is this happening? Is this a short-term move that is likely to reverse? Vishwanath Nair has spoken to a few traders and people in the know, and he's got some information. Vishy, what are you picking up?
Right, Alex. So, as you pointed out, this is a bit of a surprising move for the broader market because if you look at where the dollar index is, there you're already seeing some weakening. You're also seeing the other Asian currencies performing relatively better, but there is a lot of pressure on the rupee. What traders are also noting is that the importers weren't expecting this 87 number to be breached simply because of where the dollar index is. So this is leading to some amount of pressure on the rupee. What traders also pointing out is the uncertainty on the trade deal. We know that last evening news reports came out that Donald Trump had pointed to a 20 to 25% tariff on India. That led to a lot of fear in the overnight market for the rupee, where the 87 mark was breached, stop losses were breached. Since then, also you're seeing, because of a lot of concerns around the trade deal, FPIs are exiting the equity market as well. So that is primarily leading to the pressure on Alex.
Got it. Vishy, thanks so much for that. Abhishek Goenka is joining us just to make sense of this, founder of India Forex and Asset Management. Abhishek, thanks so much for taking the time. Help us understand this. It's a very surprising move based on what Vishy's told us. Beyond that 87 mark, the question is this going to be a short-lived phenomenon? Do you see a move back above 87 in the near term?
Hi, good morning.
Good morning.
See, the recent move in the rupee is simply, number one, on the expectations and uncertainty on the tariff. Otherwise, there is no solid reason why rupee should depreciate so much. Yes, there are growth concerns in India lately which have come up, and continuously we are seeing FII outflows and some concerns on the debt market, because interest rate differentials in India and America is reducing 100 basis points. And now because of growth, if RBI have to do more rate cuts, then the gap further reduces. So that's the only part, the tariff and the interest rate differences. Otherwise, from a current account angle, fiscal angle, from a BOP angle, everything has been broadly okay. So stock markets have corrected a little bit, but not a lot. So I think if you also compare it with the other currencies in Asia, the currencies have not gone so much. I mean, one currency which we track very closely is China. So China, against China has not depreciated so much. In fact, our Chinese yuan versus INR is almost at the super resistance of 12.25, which typically is the level where RBI try to protect. So I would not be very pessimistic on the rupee. If something good comes out of the tariff, and if things are not so bad, then rupee should correct also. That's the feeling I get.
Mr. Goenka, Vishwanath here. I just wanted to pick up this question around the tariff announcement. Now, we know from sources that another meeting is slotted in India towards the end of August. Assume that there is no firm announcement by 1st of August and that things get pushed to maybe August or September. Does that continue to put that pressure on the rupee then? And if that is the case, where do you see that the rupee ending towards the end of the month?
See, frankly, this last 1 rupee, what has happened for rupee, there is no fundamental reason for it. You see, the oil is fine, and all the numbers which I mentioned is all okay. Inflation is okay. So, why has the rupee dead? Because of the uncertainty. Now, what levels it can go, obviously it's anybody's guess, maybe another 0.5% or something. But is it likely to sustain at higher levels despite our current account being okay? The answer is no. So I would say any levels above 87, 20, 30 are good levels to sell the US dollar against the rupee, because the broad trend of the US dollar globally is also weak. So as a country, we cannot keep depreciating our currency in the medium term. So if the broad trend of dollar is weak, there is no point to panic on the rupee.
Thanks so much for that perspective, and Vishy, thanks so much for bringing us that story. Important one to track this morning. Let's keep a watch, of course, on that tariff deadline and see if anything emerges, and also a very close eye on the outflows from foreign institutional investors. 7 days in a row, 7 sessions on the trot, where you've seen a considerable selling in the equity market by foreign institutional investors. We've got the next question from Satya, and Satya is asking about MGL. He's bought at levels of 1,490 rupees last month for a short-term view, and he's wondering whether he should hold for another month or two or shift to something like an RHI Magnesia or something like a Tarrell, which is a Transformers and Rectifiers Limited. Vaishali, what's the view?
Well, I would definitely suggest that should go to Tarrell because technically also the stock is looking very positive, very fairly placed. But if he yet insists on holding on to MGL, keep a stop loss of 1360 and expect a bounce. If this support is respected, expect a bounce coming towards 1420, 1440, and that would be the level to exit.
Okay, we've got our next caller. Dheeraj is calling us from Hyderabad. Dheeraj, hi, a very good morning to you. How can we help you today?
Good morning, ma'am. I would like to invest rupees 2 lakhs in ABB or Interglobe Aviation, where Interglobe Aviation will declare results today and ABB would declare their results tomorrow.
Correct.
So, for short term, would you suggest both of them, 2 lakhs in each stock at current levels, or which one is a better pick? I would like to know Vaishali ma'am's view on this.
Okay, got your question, Dheeraj. I'll take this up with Vaishali. Vaishali, first of all, before I go on to his question, would you recommend, making an entry into a stock just before the earnings? He's talked about 2 stocks, ABB as well as Interglobe Aviation, and he has 2 lakhs to invest in right now.
So I would say don't really play results. Of course, both stocks are very, strong even fundamentally. But if you were to ask me technically, which is very well placed is ABP. It has not participated in the current rally, the recent rally that we have seen. And I think it's a fair risk-reward ratio to get into the stock for a longer-term perspective. So ABB makes a good bet. And Indigo also, if you have to buy, hold on, wait for some corrective move because the stock has already surged in very well. So I think 5,500 would be a better level to get into this stock. So of course, I would definitely suggest distribution on both these stocks, but wait for a dip in Indigo.
Okay. All right. Dr. Venu Verma is writing in from Vijayawada, Andhra Pradesh, and asking about Lloyd Engineering Works. If I remember correctly, this is a company that posted numbers yesterday or day before yesterday. I'm just wondering if you have coverage, Rajesh, and if so, would you hold if you bought at levels of 92?
See, we do not have coverage on this, but yes, we have gone through the numbers that were declared day before yesterday, and the numbers were pretty good, I would say. Going by the numbers purely, I think one should continue to hold because if this company keeps performing as it has done in the last quarter or so, I think 90 would be a decent target to expect in the next 2 quarters. So at this point of time, it's a hold from us side.
Hold is a view on Lloyd's Engineering. We've got a next caller. Murli is calling us from Bengaluru. Murli, very good morning to you. How can we help you today?
Very good morning. I bought Atul Limited before the results recently. 150 shares at the rate of 7,365.
Right.
I bought it keeping long-term view in mind, and there are green shoots in the chemical industry. Returning back to normalcy now after 2 years lullness.
Right.
So what is the view, long-term view, at least about 15 months, whether I can make 15% return at least?
15% return over 15 months. Okay.
1 year per annum, 15%. If I have to wait for 2 years, I'm willing to wait.
Understood. Rajesh, the purchase price is slightly higher at 7,300 or thereabouts. But do we see the prospects of an improvement? A few pockets in the chemical space are seeing green shoots. Would you agree?
Yeah, I do agree. A lot of companies are doing well. The numbers have been improving. Management commentary, in most cases, are very encouraging. Some of them even started capex. And we have seen after the 2-3 years lull, chemical industry again turning around. Some of the companies have even run up quite a lot in forces. Atul, is a very good company. I would say fundamentally very strong balance sheet in dyes and chemicals. It's one of the leading companies. And an expectation of 15% in the next 12 to 15% is a very conservative expectation, I would say. And I won't be surprised it even exceeds that. It's a hold from a side. And by any chances it falls to around 6,000 odd levels, it would be a great buy. So at this point of time, somebody holding can continue to hold.
Continue to hold is the view that Rajesh has on Atul Limited. All right. The next question is on Thyrocare technology. Now, this is an interesting one. Riddhi Vikram from Pune is asking us whether she can continue to hold from a shorter term perspective or not. She's holding 100 odd shares and her buying price is 1336. Vaishali, I'll come to you on this one. On the charts for Thyrocare Technologies, what is the support and resistance that you're seeing?
So I think continue holding with a trailing stop loss because it is already in an uptrend and right now we are seeing a minor consolidation. So I would say keep 1220 as a stop loss and look for a target of first level to look for is 1380. And once we see a clarity of the stock sustaining above that, you may get your 1450, 1500 targets.
Okay, all right. So that's the view on Thyrocare Technologies. Riddhi says that she tunes in every day. Thanks, Riddhi, for spending time with us. Zuari Agro is the name of the counter, and Mayank Saraf is asking this next question. He's asking whether he can add more for a period of 2 years. He points out that it is trading at a discount to the companies that it is holding stake in. And I have not verified this, I have not gone into the shareholding patterns, but he's looking at stake held in Paradeep Phosphates as well as Mangalore Chemical. Rajesh, I'm pretty sure you know this. He's sitting on a very substantial gain, 3 lakh plus. Should he hold? Should he add more? The stock is up 11+% today itself.
It's a buy from a side. Even after this kind of run up which I've seen today, it's trading at less than price to book. And if you add the market value of the holding company holdings which it has, you said it right, Paradeep Phosphate and Mangalore Chemicals, that would be huge. EV by EBITDA is also on a higher side. You have good, if you do sales by market cap, that you will find it's almost 5 times. So it's a very good buy from a side. It gets a holding company discount, and at this price, I think even after this kind of run up, it can go up to almost 400 plus levels in the next 1 or 1.5 years. So any dip should be taken as an opportunity to accumulate. Somebody holding can continue to hold.
Any dips is an opportunity to buy for Zuari Agro, and the stock is up 11% today.
You remember what happened to Paradeep Phosphates, right?
Yes, exactly.
Pull up the weekly chart if you can for Paradeep Phosphate. No, not today. The weekly chart. It's down 3.5% today, but yesterday it moved up very substantially, 10%. So it's given up a little bit of ground.
Some profit booking seen in the counter today. All right, we've got our next caller. Kirti is calling us from Vijayawada. Kirti, hi, a very good morning to you. I believe you have a question on Max Financial.
Good morning, Mahima and Alex. Actually, I'm sitting on a loss with MFSL and I'm holding it for a short term.
Okay.
Yeah. Can I reach my target for like 1600?
And can you define short term for me?
It's like 3 to 4 months.
3 to 4 months. Okay, Kirti, I'll take this up with Vaishali. Vaishali, she's sitting on a loss of 31,000 odd rupees right now, and she wants to know if the stock could reach that 1600 mark in the next 3 to 4 odd months. Is that something on the charts that is available, or do you see further downside on the counter?
So definitely, I mean, chartically, of course, it is shown a lot of profit booking. So near-term stop loss should be observed at this 1450, because if those levels break, then it can further slide to 1400. But I guess don't keep a time period, because this stock fundamentally also is very good. The long-term trend is intact. So 1400, 1450 is a support level, and from there on, you can see a pickup. So my suggestion, add more at these levels to average out your cost, and look for a rally from there on, and that would give you a better rate.
Yeah, all right. Next question is from Jeffrey, who's writing in from Bengaluru, asking about HCL Tech, bought at levels of 1,771. And he's asking whether there's a potential for the price to go down further. On the charts, Vaishali, what's the view?
Well, right now we have seen the stock for the near term. It has shown tough resistance right from 1750 to now at 1470 levels. So technically, if we were to talk about full IT sector, it's in deep oversold and they're attempting to give a bounce. So I would take a very short term view. 1450 would be the final support level, and if this stock also bounces back, we can see a upward move coming towards 1520, 1550. Actually, the clarity will come only above 1600 for a trend reversal. So till then, just continue holding and observe your stop loss and wait for a bounce to see how it goes.
Okay, so that's the view on HCL Tech. A little bit of pressure in the IT space. Ramesh is calling us from Mumbai. Ramesh, very good morning to you, and how can we help you?
Yeah, I'm holding 400 shares of Mazgaon Dock, purchased at the rate of 2275.
Right.
I want 3 years view.
Okay. You want a 3 years view. Okay. So, Rajesh, then on the fundamentals, and by the way, Ramesh, we spoke with the management of Mazgaon Dock. I would invite you to check that out on our YouTube channel as well. But Rajesh, on the fundamentals, it's been a couple of soft quarters, and this is understandable because of the business that they're in and the kind of products that they make, which is shipbuilding. It takes a while for revenue recognition to take place, and there is chunkiness sometimes. So what would you say about buying more and holding for 3 years?
The defense as a space is looking very good, considering the fact the kind of geopolitical tensions going on across the world, the government's focus on indigenation, and the kind of order book these companies have. I won't be surprised if some of these companies get international orders too. Mazgaon Dock has a tie-up with, recently did a tie-up with some companies for business expansion. That's going to do well for the company. Order book is very strong. It has seen a sharp correction in the last 1 year or so. At this point of time, there might be some more downside left because of market condition, but for a long-term horizon, that gentleman is talking about 2 to 3 years. I think it's a good buy at these levels because these are times when you get good stocks at discounted prices. So if you have extra funds, you can even invest. Otherwise, whatever you are holding, continue to.
Okay, continue to hold, or if you have extra funds, go ahead and buy Mazgaon Dock is the view that Rajesh has. The next question is on Thomas Cook. Siju from Kerala is asking this question. He's bought 1,000 odd shares at 184 a piece last week and wants to know if he can continue to hold or sell and book losses. Vaishali is sitting on a loss of 15,000 odd rupees right now. What are the charts indicating for Thomas Cook?
So there's nothing much happening. It's just consolidating. But on near-term basis, 160 acts as a good support. And observe a range of 160 to 185, 190. So that's how I would look at it because there is no confirmed trend as of now.
Okay. I want to know whether Mahima can guess what this next question is. Aniket Hiremat is thinking of investing in the Lotus Developers IPO because of?
Shah Rukh Khan. Because he loves Shah Rukh Khan is what he's saying.
Rajesh, so I don't know about this being a relevant reason for you to invest in an IPO, but and you probably can't see me on screen. I spread my arms wide. I was indicating to Mahima why I was saying what I was saying. Maybe you can do the pose as well, but would you subscribe to Lotus Developers?
Steve, there are fans of Shah Rukh Khan, and the signature style which you did right now is the signature style of everybody like this, doing like this. So this happens, and there are, I would say, mad fans. Pagal log hain duniya mein. So they might go for just investing just because of Shah Rukh Khan, but I would say that being a fan of a celebrity is a different thing and investing is a different thing altogether. They might have some other long-term views on the company where they invest. So don't try to copy them. But yes, if the fundamentals are good, one can invest in the companies with their idols are invested. As far as Lotus Developers are concerned, I think at this point of time, we would give an avoid at this.
Okay, but the fact that Ashish Kacholia is also investing in this counter makes it attractive, if not Shah Rukh Khan.
May not be Shah Rukh Khan, but
yeah. All right, we've got our next caller. Mohammed is calling us from Karnataka. Mohammed, hi, a very good morning to you. I believe you have a question on Trent.
Yeah, very good morning, madam.
Good morning.
जी, मैडम मेरा I have TCS Trent shares, madam.
Okay.
1,000 shares at the rate of 5,700.
Okay.
I'm facing huge loss now.
Okay.
Other is TCS also, madam, 2,000 shares at the rate of 3,700.
Okay. Mohammed, I'll take your question on Trent. Rajesh, I'll come to you quickly on this one. Trent is sitting on a loss of 6 lakh rupees, over 6 lakh rupees. Should he book some losses right now or continue to hold?
Yeah, I don't know about the time horizon. If it's a time horizon, if 1 year, continue to hold, no doubt on that. The company has been doing well. They've moved to lab-grown diamonds, and their hypermarket business is doing well. Zudio is doing exceedingly well. In short term, there are corrections because of the kind of run-up it have seen, but long term looks very good. If you have a long-term horizon, continue to hold.
Okay, all right. Mohammed, remember that the next time you call us, we're comfortable speaking in multiple languages, including in Hindi. And if you want to speak to us in Kannadiga, we'll get somebody here to translate for us. It's time to hit the rapid fire round, and this is where we take as many questions as possible over the course of the next 2 minutes. The first question is on Affle India, and this is a question from, I do not know who, but would you buy for the long term, Rajesh?
No. Short term, yes. Long term, no.
Okay, the next question is on IGI. The current price, the price at which is bought is 395. Vaishali wants to know if she can continue to hold the counter or not. Vaishali, on the charts?
Hold.
Suzlon is the name of the counter. Buying price is 65. Should you add more at this point? Tejas wants to know. Vaishali?
Add near 60 to 58 levels.
Okay, Raymond Limited is the next counter. Shashwat has been holding this counter. Rajesh, your view, Raymond Limited, should he continue to hold after the demerger?
Yes, continue to hold.
IOC has been bought by Pranay at an average price of 149 rupees or 150 rupees per share. Is it an accumulate right now? Vaishali?
Stop loss of 145 and hold.
Okay, Zentech is the next counter, locked in lower circuit since the past 3 or 4 odd sessions. Vaishali, on the chart, should Prasad continue to hold? He's holding 20 odd shares at 1940 a piece.
Hold and wait for a reversal to add more.
5-star business bought at an average price of 725 has Venkataramana. He's asking whether to hold or to sell, and if so, buy Poonawalla or Jio Finance. Rajesh?
Switch to Poonawalla or Jio Finance, or rather 50-50, 50% in Jio and 50% in Poonawalla.
Okay, Hudco is the next counter. Average price of buying is 314. Should she continue to hold or should Pradeep continue to hold or book losses? Your view on the charts, Vaishali?
Short term is corrective. If long term, hold.
Okay, Sterlite Technology bought at levels of 118,000 shares. Raghuram wants to know whether to hold long term view. Rajesh?
Book partial profit.
Okay, all right. IOL Chemicals, okay, we'll take that tomorrow. Unfortunately, we ran out of time. Rajesh and Vaishali, thanks so much for taking the time. Always a pleasure speaking with you. And that brings us to the end of this edition of Ask Profit from Mahima and myself and the team that put the show together. Thank you so much for watching. Up next is Know Your Company, and this is NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary.
Hello and welcome. You're watching KYC. Today we're going to talk about a reasonably large company, 25,000 crore in market cap, is the largest standalone health insurer in the country, which is Star Health, and a company in which Rakesh Jhunjhunwala had a stake pre-IPO and continues to hold. So that's where it starts to get very, very interesting. And why is Star Health so interesting is because from the point of IPO till now, we've seen a sustained underperformance in the stock price. And can that underperformance actually change? Can there be a turnaround is really the question we're asking today, and probably we'll hopefully find answers to that. Trends with regard to competition and pricing in the health insurance space, that's the other thing I want to talk to them about, because Lombard has come into health insurance in a big fashion. So we have a large competitor coming in a big fashion, and therefore competition is tough. On top of it, they already have a market share of 33%. How much higher can it go? That's really the question. Is that sustainable in terms of a trend, or will they just try to maintain the 33%? Maybe some indication there as well. How much can the combined ratio improve? Now, in layman terms, the combined ratio is nothing but a measure of profitability on the top line. It factors in the expenses, the management expenses and the overheads of the company, and thereafter factors in all the claims that the company has received and paid out. And thereafter, you arrive at the bottom line profit. So a combined ratio of 100% will mean you're at a no profit, no loss in your business. A sub 100% will mean you're starting to get profitable, and above 100% means you're yet to break even on the operational side of the business. So I want to understand where does that go and how much can it improve by. What to expect on the investment income front. So one part of the top line is obviously premiums that you make as a health insurer. The other part is the investment income that you make on the money that has already been deposited with you by the customers. Say for example, you're a customer in a health insurance company. You've paid out a premium in year 1. In year 3, how has the company reinvested that premium, earned a yield on it? That essentially is the investment income. And there are certain levers which they are trying to tweak with regard to the investment income. So we will try and understand that. What are the levers therefore for profit growth? We'll speak about the combined, we'll speak about investment income, we'll speak about top line growth, and therefore those are the key levers, of course. But how do they move, and therefore where does profit go? They've guided for a doubling of profit, a tripling of profit, I beg your pardon, and doubling of top line by FY28. So I want to understand how confident are they of that journey. What is their ROE target? Because at the end of the day, shareholders want returns, and your returns are linked to the ROE number that the company clocks. So is there an ROE target internally, and how sustainable is that target across cycles? Because with COVID comes health insurance claims, and therefore it's a cyclical business of sorts. So you want to understand how sustainable that number is as well. We'll try and explain and try and get an insight on all of this. But first off, as we always do, let's start off with what the company is all about. It's, as I did mention, it's the largest standalone health insurer in the country. It was founded in 2006. It's pure play into health, focused on retail, which is individual and family. And it also now has started to do wholesale in a bigger fashion. It commands a 33% market share in the retail health space, 44% among standalone health insurers. It has a network of 900 branches, over 7.5 lakh agents, and 14,000 partner hospitals. How the model works is, you pay a premium to the company. If at all, God forbid, you were to be admitted to a hospital, the tie-up with the company ensures a cashless claim to you. So therefore, this number starts to become important when you're looking at a health insurance. Now, last off, it's a listed entity, major shareholders, and it got listed in December of 2021. Major shareholders include the likes of a Westbridge as well as a Jhunjhunwala family, all of which sit within that promoter group. So you want to take care of that when we go to shareholding pattern in our metrics. Now let's look at the products. Retail health insurance is the flagship product. There's also group health for corporate, SMEs, MSMEs, and there's personal accident, and there's also travel insurance. They have cancer care, autism care, cardiac, women's health, and braille policy. All of that is and industry first is what they pride themselves for. They've done innovation in terms of digital products, wellness integration, and they have certain sector first features. Ayush and mental health is covered in all of their retail plans. So something again which stands out. Let me talk about the business model, and I spoke a little bit about it. So first off, it will sell health policies. It will collect a premium. That premium will be collected over many years. Hopefully you don't have a claim. Good for the company, good for you as well. And that premium is invested. Invested in where? Debt, equity products, right? And a percentage of the loan, the mix of equity is going up. It was sub 15%, it currently stands at 17.2%, just for your knowledge. The core revenue, of course, comes from premiums. In terms of the channel, 82% of the premium comes from the agency channel. It's expanding in digital as well as banca insurance, which is the banca channel, which is selling policies through banks. That's also something they're focusing on slowly and gradually. Otherwise, they've largely worked with agents. They sell to retail customers, but now have started selling to MSMEs, group businesses. The competition, of course, is the likes of an HDFC Ergo, ICICI Lombard, a Max Bupa, a New India, a Care, and market share. They have 33% of market share. We've spoken about that. Some concerns. It's a single line of business. They don't do too many lines of business. So that's one possible concern to take care of. Also, the claims have been elevated in recent years. COVID was one tipping point, but outside of that as well, claims have been elevated. The loss ratio has held up around the 70% number, which is a bit of a concern. Even though on the retail health side, the loss ratio is 65%. Because of wholesale growing, the loss ratio is elevated. There's a slowdown in profitability due to certain underwriting losses that they are making, especially with regard to claims. A claim ratio, a loss ratio is largely the same. That's how we're seeing the likes of a Star Health. Now let me talk a little bit about the key metrics that we'll focus on. An insurance company, and therefore you want to understand that the metrics might change a bit. We look at the income statement, then we look at key ratios, and I'll stick to only the key ones. I won't try and give you the whole hog. The balance sheet as well, we look at return ratios, we look at shareholding pattern, and everything else remains the same: street cred, street coverage, and valuations. So that's how we'll stack it up on a KYC in terms of the metrics. Let me start off with the income statement. Now, if you look at the income statement and how it's evolved, the net premium is around 14,800 odd crore in FY25. The 3-year CAGR on that is around 15 odd %. And it's been a steady growth, frankly. FY22, it was sub 10,000. It grows to around 11,000 in FY23, as you can see on your screen. FY24 was nearly 13,000 and currently sitting at 14,800 odd crore. So you've seen a steady 15% kind of growth. Your investment income, and I explained this, is up 18% on a compounded basis. Your claims, which also we spoke about, FY22 as the base has gone up by 7% CAGR, but FY22 as a base is an extremely tough year. Mind you, we had the second wave of COVID in the middle of 2021 calendar year. So therefore, the spillover of that has happened in FY22. And therefore, the claims in that year were quite large. It was significant. In fact, the claims ratio at that time was an 87% versus the 70% currently. And the claims ratio gives you the ratio of the claims versus the top line. So it was quite large. It was significant. So from there, from that higher base, it's grown at 7% CAGR. Just giving you that perspective that claims were anyway elevated, and on that base, the 10,000 crore of claims in FY25 still looks quite a bit elevated. You might want to work on that claims number, especially where Star Health is concerned, something you want to see. Where OPEX is concerned, this has been a steady state. They've been able to control OPEX well. It's been 11% 3-year CAGR on that OPEX number. And the commissions number, mind you, they have to pay commissions as well to their agents for every policy sold. So their commissions number also grew in line with the top line, which is 15 odd %. So no leverage being taken on the commissions number, but some leverage being taken on the OPEX number. So that's how it essentially looks like. Now let's look at key ratios. The combined ratio sits at 102.1% in Q1 FY26. So it's quite elevated. I explained to you that the combined above 100 means that on an operational top line basis on the premiums, the company is making a loss. So therefore, you want to start to see how does Star Health make a profit, right? It's on the investment income technically that they start to make profits. But broadly, this is the problem. The combined ratio has been elevated. FY23, we saw the combined ratio sink to 95%. FY22, it was elevated understandably because of COVID. We did discuss that. FY24, it spiked up. FY25, it spiked up further. And FY26 Q1 has been at 102.1%. So quite elevated. When you're looking at the investment yield on the portfolio of investments, it's come off. And that's also because debt or the cost of debt has come down. And therefore, you're starting to see investment yield come down to a certain extent. That's probably what's hurting the number. When you look at the claims ratio, that will give you perspective on what's hurting the combined. And the claims ratio, 87% in FY22, sank to 65. In the year in which it was 65, very good profitability. 66.5, very good profitability. FY24, we looked at that profit number. It was extremely strong for FY24. FY25, 70%. Q1 FY26, 70%. So you want that claims ratio to come down. We've given this a neutral as well. Because if the claims were to come down, there is scope for profit expansion. So you want to wait and watch whether that actually translates or that does not. Balance sheet, and this is of course more broad-based in terms of how one looks at the balance sheet. You look at the net worth, which is around 7,300 crore. It trades at around 3.5 times price to book, which is on the net worth. The net worth grows decently well, around 2 to 3% every quarter is what it's been demonstrating in terms of growth, maybe 3 to 4%. And the investment that it makes is on that bottom line, 18,000 odd crore in terms of investments. Let's look at the return ratios. And again, volatility is evident. FY22 was a bad year, so was FY21, understandably. FY25 was sub 10%. So we'll give this one a neutral as well. Let's look at shareholding. And this is a clean thumbs up because you've got very good shareholders sitting here. No explanations needed on this one. Let's look at street cred. The near-term stock performance is tough. 1 month, 6 month, year to date, and 1 year. Since IPO, the stock is down 50%. Could this be an opportunity is really the question. So that's how street cred stacks up. Let's slip into a break. I'll come back with more on Star Health.
That's huge. That is a biggie. It's on.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about
Thanks for staying with us on KYC. Now let's look at the street cred. How has the street rewarded shareholders? 4% up in 1 month, 1% up in the last 6. Year to date, it's been a dismal negative 9% return. 1 year, the stock is down 29%. And since the IPO, the stock is down over 50%. So could this be a potential opportunity is really the question. And of course, we'll have to understand and wait and watch for that. But let's look at valuation straight up. And you look at the price to book, we spoke about that. It's currently trading at around 3.6 times book. This is FY25 book, mind you. We looked at Q1 FY26 book, but broadly that's the number. The price to earnings ratio is around 40 times, and the four-year average price to earnings since FY21 listing is 41 times. So very, very neutral on this count. But if the profit were to double by FY28, the price to earnings will shrink very, very rapidly. And that's where you could see an opportunity. So you want to wait and watch as to what's happening here. And the re-rating could be sharp if management guidance is followed. Because from the 600 or to 700 crore PAT that they're doing currently, they could well do 2,000 crore of PAT by FY28. So you want to see whether that is doable or not. We'll wait and watch for that. Now, last off, on analyst recommendations, there are 14 buy calls, 6 hold calls, 5 sell calls with just a 4% upside on this stock. Not looking pretty, but given the kind of buy calls, we've given this a neutral again. And therefore, that stacks up all of our 8 KYC rating parameters. Let's go across and see what is the final rating that we get for a Star Health on KYC. Pretty much all neutral. Shareholding is a clear thumbs up. Street cred is a clear thumbs down. Street coverage and valuations too are neutral. 4 out of 8 is what Star Health gets on our KYC rating, but plenty of moving parts, a turnaround at play. Let's go across to the management. We spoke to Mr. Kambli, who's the CFO of Star Health earlier today. Let's go across, listening to a slice of that. How are you tackling, so let's go line item wise. In terms of top line growth, how your growth seems decent. Can you hold on to market share? Can you build on the market share? Is competition coming in a big fashion? How are you standing out? Just talk to us about top line first, because that is your key driver for bottom line growth, is what you're saying.
Yes. So, as we see for the quarter for last year, we have been holding to our market share of 33% on an annual basis. For quarter one, the market share is 31% when it comes to retail health. With the kind of scale that we have in terms of our agency base, the way we have built our digital business, we believe we'll be holding on to the market share as well as keep on improving on it. But in the areas where we want to focus, we just don't want to go all out. We see a lot of growth shown by competition, but that is based on portability. Portability for us is only 10% of the fresh business. So we continue to grow with all the operating parameters working in our favor. In terms of competition, we see that competition is always there, will be there. It helps to expand the reach of insurance in this line of business.
Sure. So pricing at this point, you feel there is still some price hike warranted, or you're comfortable with the way pricing is played out over the last 12 months and now no more price hikes in the system?
See, we believe that pricing is an annual thing, with the kind of inflation and the severity that we see. Pricing is an annual exercise. We have taken price increase for 65% of the portfolio last year. It's in the range of 8 to 9%. If we go back in time, the pricing used to happen every 3 years, which was in the range of 20-25%. But what we see is that the annual pricing is much more relevant. It doesn't pinch the pocket of the customers, and it helps us to bridge that gap in terms of loss ratio. So the price increase will be an annual affair for our portfolio.
Got it. But sir, so how does top line growth ensure that you get a better combined ratio? Because largely, wouldn't you believe that new customers coming in will have a similar kind of a vintage?
Absolutely. So when we talk about price increases, we talk about claim-based discounting as well. The customers, who are not claiming, we have our, provisions to give them discounts. We have various methods to give discounts to the good customers. We have something called as a network-based discount. Customers who are ready to take treatment in good hospitals, not necessarily in tertiary care hospitals, there is a discount available to them. So while ensuring affordability of the price for the new customers, we ensure that the overall portfolio yield is maintained. And that is how we want to maintain the loss ratio of the business.
Right. So now the other line item with regard to investment income, your investment yield has actually come off. It's come towards the 6.5%, but the equity as part of your investment corpus has gone up in percentage terms, and that tilt is likely to continue towards equity going forward. Give us that perspective, and therefore what is the impact on the yield maybe over the next 2 years that you're seeing?
I mean, first is to counter the 6.5%. The equity investments, the rates investment, which does not have a fixed income flow, is now 17.5% of our portfolio. Now, if you calculate only the fixed income yield on the total portfolio, it will always be lower because we have increased our proportion of equity business. What we see is, with a mix of fixed income and equity portfolio, the average portfolio yield should be closer to 8%. That's the objective of the business. Whereas when we invest only in the fixed income, it is closer to 7.25%. So we see with the right mix of fixed income as well as equity portfolio, the yields to improve over a longer periods of time.
Got it. So where should your combined, or where do you envisage your combined? And I'm not asking you for a guidance, but just for a broad parameter on where one should envisage both combined as well as claims in terms of a ratio. And I'll go into retail versus group. But for the moment, just combined versus claims over the next 2 years, where should that number broadly go towards?
See, Harsh, what we're looking at is a ROE target. We see that claim ratios will be a function of the pricing by the healthcare providers, by the company, mix of retail and group, a mix of indemnity and benefit. So there are various factors that will play out. What we are saying is we want to maintain an ROE target, which is upwards of 15-16% over the next 2 years period, by FY28. That's our stated objective, and we are well on course to achieve that. We believe as a measure to improve operating profitability, expense ratio has to be controlled. A lot of effort is going into it. Claim ratio can be slightly cyclical as well as a function of the various product mix and the indemnity benefit, all those segments of the business. But the objective is to ensure a healthy ROE of 16% and above on a consistent basis.
And how confident are you of achieving that, sir? A 16% plus ROE consistently?
So we are very much confident. All the business actions and the strategy that we're working is playing out. We are confident about it, and there is a clear strategy to achieve that ROE targets.
Point taken. Okay, I want to also delve a little bit into competition. I know you've touched upon it, but there is one competitor in particular which has been aggressive in the health insurance market. Do you believe that the growth therefore might be limited in terms of a window? I know you've grown 18% excluding 1/n, which is the new accounting norm, but excluding that, I know you've done well. But do you see pressure there on that number?
See, again, we believe India is a huge underpenetrated market. The options are huge. You have to see the business that we come from. A very significant portion of the business is from tier 2, tier 3 cities where we are the market leaders. Even in all the states of the country, we are the market leaders. And that's true because of our agency workforce, because of the investments that we have made in digital, because of the product innovation and the product features we are able to come on a regular basis. So we believe competition is good, competition is there and will always be there, but the strategy that we work with will ensure that we maintain and improve on our market share.
Okay, so that's all the time we have on KYC today. In fact, that was management interaction with regard to a Star Health. The stock picked up in trade on the back of numbers. Stay with us. Completely out of time on KYC, but more action will follow.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange.
NDTV Profit. I I'm Mahima Vachrajani. Asian Paints is in focus on the back of its earnings, and to discuss as to how the quarter has gone by and how things are shaping up for the entire paint sector, we're joined by Amit Singhal, MD and CEO of Asian Paints, joining us now. Mr. Singhal, always a pleasure speaking with you. I was listening to your con call yesterday, and I picked up a few things when you said that there is green shoots being seen in the urban demand. There's volume recovery that's also taken place this quarter, but I just want to get a sense from a longer term perspective, because paints now has been under pressure in the past 5 to 6 odd quarters. Just want to get a sense in terms of recovery. When is the actual recovery expected on cards? From what I understand is cements is something that has picked up this quarter, and I believe that paint should follow that up as well. So in how many quarters are you expecting that recovery to happen?
So overall, as we see, I think, this quarter has been definitely much better in terms of what we have seen in the earlier quarters. We have seen good demand coming up in urban centers. At least the shoots of recovery are definitely much positive in terms of what is there. The rural segment, the sentiment is quite positive given the good onset of monsoons in terms of what we are seeing. The industrial sales have been very, very strong on the back of, a lot of capex which is getting invested in the country today to that extent. And we have been seeing a good surge in industrial, whether it is the auto, whether it is protective paints, or whether it is the industrial paints in terms of what go into the segment. The institutional B2B segment also has done fairly well on the back of government support, infrastructure investments in terms of what are taking place, airports, highways, and so on and so forth, everything coming up galore in terms of what we are able to see. I think these are very, very positive signs in terms of what possibly we are seeing in the environment in terms of looking at it. However, as we go forward, we will have to really look at the environment, some of the geopolitical stuff happening, some of the tariff structures which are achieving, because if I look at the entire FMCG and the consumer durable industry, that has been in pressure for some time, and today I think paint is a hybrid of the two industries in terms of how we see overall in terms of going ahead to that extent. So we are still kind of cautious in terms of looking at how demand would really pan out. We also have a shorter Diwali season this year as compared to last year, because Diwali is on 20th October. Overall, how it pans out. But I think one thing is which is certain is that I think the trends from industrial, trends from institutional would definitely continue. I think retail would possibly depend in terms of how the environment really pans out, how demand kind of opens up. But I think the early signs from the urban centers and from the rural centers seem to be pretty good in terms of what they're showing for the year.
So, but no sharp recovery can be expected this year. Is that reading correct?
Definitely, I think H1 we can't see there. H2 we will have to watch out in terms of what really happening, but we are not seeing that there is something which is magical happening, which is really kind of bringing back the demand in a very, very big way.
Okay. You also mentioned that the value versus volume growth is narrowing. You've seen a good recovery in terms of your volume growth this quarter. Just want to get a sense as to how this quarter has shaped up, because revenue growth was flat, but there was a good 3 to 4% of volume growth. So how has that happened, and plus any price hikes that you've taken?
So overall, as I said, April month was quite good in terms of what we see and experienced in terms of demand, and so was May relatively better as compared to the previous quarter. June we had pressure of an early monsoon which came in, and today for the paints industry, rains do kind of really upset the exterior painting very strongly to that extent. And I thought we got hit a little bit in June to that extent. Otherwise, this quarter would have been definitely much better from what we have delivered this time. Overall, the institutional, which is the B2B business where we cater to large building projects, we look at supplying to infrastructure projects, government, and so on and so forth. I think that has been still much better than the retail in terms of what we are seeing. Overall, from a point of view of industrial, again, if we look at, I think that has been a strong area. Auto has done well for us, industrial has done well for us, and protective paints have done overall quite well for us. And I think that is something which is a trend which we are seeing seeing for the last 2-3 quarters to that extent. Urban centers definitely did relatively better, but I think so did rural. This thing for us, both urban and rural have done equally well in terms of looking at this quarter, in terms of what we see. So overall, I think those have been the larger trends, along with the fact that our global business has done quite well. In volume digits, they are double digits, and in value, they are at about 8% growth. So overall, I think across international, industrial, overall in terms of the core business, I think we have seen definitely a much better quarter.
Interesting. You did mention this, that industrial, automotive, as well as the protective coats segment has done well, and this has been the story in the past 2 to 3 odd quarters as well. Do you see some kind of segmental change mix or product mix that is happening because of these segments performing better than your home decor?
Yeah, see, I think as a stage in the overall kind of globalization and the industrialization of the country, I think we are seeing a very strong stage of the last 5-7 years where the rate of industrialization in terms of what's happening in our country is much stronger. I mentioned about new technologies coming, a huge amount of new capex coming into new industries, and a lot of expansion which is taken in terms of the overall manufacturing industrial segment to that extent. And I think given this globalization which is impacting, I think we see a little bit of a segmental change in terms of an uptick of an industrial going much stronger in terms of overall rather than just the core retail in terms of what we see. The other change which we see is that the whole B2B business would possibly surge much stronger, where government would play a very, very strong part in terms of their contributions in terms of how they come in. But at the same time, I think home is a very interesting segment there. I think excitement will continue. I think given our population, investments into new homes, investments into rental homes would continue. So I think all in all, these things would kind of augur well in terms of looking at how future of this country goes from a point of view of paint industry.
Interesting.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, credit cards, a lot of people view them as a fantastic tool to manage cash flows. They can also give you amazing rewards in the form of points. They can get you a business class trip to a location of your choice. They can get you free air tickets. They can get you free movie tickets and everything besides. But the dark side of that is that if you go overboard, there is a potential to slip into a debt spiral. And incidentally, based on the data that Cliff Highmark has pulled up, there's a substantial increase in the overdue amount for credit cards between 90 days and 365 days. This is essentially when they become non-performing assets. And that number stands at 34,000 crore rupees at the end of March, and the increase is of as much as 44% over the course of the last financial year. Joining me now in the studio to talk about some of the trends that are emerging is Sachin Seth, who's the chairman of Cliff Highmark. Sachin, thanks so much for taking the time.
Hi Alex, my pleasure.
That number seems very alarming. Anecdotal evidence does come through, people saying, hey, you know what, I have too much of credit card debt. They're paying their minimum due amount, but there's a significant overdue that they have, and this is piled up. How has it come to this?
Yeah, so Alex, if you see, the credit card is one of the means of unsecured loans, what people use. And if you look at the situation in last about a year or so, I think many of the loans categories have had a bit of a stress. So credit card is also one of them. And if I give you the overall statistics, see there are about 11 crore cards in the market.
Right.
Total outstanding is ranging about 3.7 lakh crore. Now, as you rightly said, it was around 30,000 crore as of last year, but this year has increased significantly, and one of the reasons for that is obviously because the stress is there in the unsecured loans in other portfolios as well, right? So credit card also happens to be one of the type of categories which people are spending, but they are finding it difficult to pay back because of various reasons. So that's where it has gone up quite substantially.
So, but let's talk about this, because the data that you pulled up also seemed to suggest that card companies or issuing companies, banks, are reducing the number of cards that they send out. So on the one hand, there are fewer cards being issued, but the usage of credit cards is still going up. So it's actually quite interesting that people are spending more on the cards that they already have, and new issuances are not taking place. Why is this happening?
Yeah, so see, as I mentioned that, card is an unsecured product from loan category perspective. So there has been, because of delinquencies increasing, most of the lenders have become very cautious, and as part of the cautious approach what they have taken, and even regulator has advised being cautious on unsecured lending. So from that perspective, companies are become more stringent about whom they give the card, and they are doing a better underwriting at this moment. They are trying to contain the risk as much as possible in the new issuance, and that's why the new issuance has gone down by about 27%. And but yes, there has been another category of card coming in the market, which is called secured card backed by FD. So that is something, a new phenomena which is evolving.
These are credit cards.
These are credit cards, but the people who do not have as a strong credit score or credit history, what they can do is that they can actually put a FD in the bank and get a credit card which they can use it so that the bank is secured. So that tomorrow if they are not able to pay back, then bank can dip into the FD.
So I'm sure that you've collected a lot of granular data here. So anything to add color to this is that in these instances where there are delinquencies or there are people that are overdue on their payments, are there instances where people have multiple types of debt, and this credit card debt is only one of those? So for example, they have a mortgage, they have a loan on a car, they have a loan on electronics, and they have a credit card. Is that the situation?
Yeah, that's normally the case. So if you see when anybody is issued a credit card, the person needs to have a certain level of credit history. Then only banks are comfortable giving the card to them, because they understand that what's the payment behavior in the past. So naturally the person would have had...
I'm talking about concurrent.
Yeah, I'm talking about that. So I'm coming to that. So basically, which means that people are in the category of taking multiple types of loans. They could have at this moment certain personal loans, consumer durable loans. They could have, auto loans. Or they could have basically the loan against property, or let's say a housing loan, right? So definitely most of these players, 50% at least, we see that they would have some other loans, right? Now, question is that which loan they will default will depend on multiple factors, right? So in case of credit card, they obviously have option to revolve or pay minimum balance, etc.
But the interest still accumulates.
Interest accumulates. Yeah, there's a it's a highest interest rate product. And but yes, it's not that they would not have other products, and it is not necessarily that if they are defaulting a credit card, they will not default on other products. There could be a simultaneous default also.
But the fact that and the data that you pointed out, right? So up to 30 days, 30 to 60 days, 60 to 90 days, and 90 and beyond is how you look at it. And 90 and beyond is when it becomes a bad loan, right? When it becomes a non-performing asset.
Yes.
And what you have actually witnessed is that there's a substantial increase in the 90 plus category, which seems to suggest, correct me if I'm wrong, when you're talking about credit card usage, people have revolved till the point where they can't afford even that minimum payment, and it's gotten too big to handle. Is that the right understanding?
That's correct. So basically, they've reached a situation wherein it's gone beyond 90 days in terms of default, and basically lenders are now in the process of, they have classified as per NPA, as per the nomenclature, and at the same time they must be in the process of engaging with those borrowers to see how they settle. Or how they recover.
I want to clarify. When you pay the minimum due, it's not a default.
It's not a default, but yes, but it does impact it does show into your credit history point of view, but it's not a default.
So, but then what we're talking about, the 90 plus days, this is overdue with not having paid that minimum due, right?
Yeah, absolutely. So they're not paying.
They're not paying at all. They're not paying at all. So therefore, it's important to make that classification. So from your perspective, in terms of good credit behavior, is it always a good idea to pay the entire credit amount and not have that minimum due that is used to circulate credit?
Well, absolutely, and I would go one step forward and say that do not use your credit cards unless in exceptional situation to a max out limit. So one should use the credit card judiciously. One should have a limited number of cards what you can really manage. And if you,
Sorry, I want to stop you there because a limited number of cards to manage is an important question. I wanted to come to that later in the conversation, but now that you said it, you hit the nail on the head. A lot of people go out and try to get the best possible cards.
Yes.
You have social media videos saying this is the best possible card for rewards, and everybody wants that card. So you end up having 3, maybe 4 credit cards, and that's pretty normal. Even for somebody who is relatively risk averse, they'll be like, okay, fine, I need that air miles, right? So what have you witnessed in the data? Has that borne out? A lot of people have multiple cards?
See, having multiple cards is a very common phenomena, because once you are entitled or eligible to get a card from a bank, you typically are entitled or eligible to get it from other bank also. Now the question is that when I said that one should be judicious enough to basically have number of cards, is that the more cards you take, it shows as your basically the line of credit. Right? Which means the bank has offered you a line of credit. It could be 2 lakh rupees, it could be 5 lakh rupees based on your income, what they have done a calculation. So the more you have, it shows that you are credit hungry, which is obviously not a good sign beyond a point. And second point is that if you are using the card to a higher limits always, it shows that you are stretching it. Basically, your credit requirements.
You're maxing it.
Your credit requirements are higher, and that's where.
What is the definition of overusage?
See, when you say if you are using around 30 to 40%, a credit card is reasonably normal phenomena. But if you start going to 70 or 80% and every month, see if it happens like couple of months in a year, etc., it's fine, because then you may have to buy something which is on a festive period or something which you would like to specifically take from a particular card. That's fine. But if you start using card for a higher utilization all the time, then definitely it reflects that you are basically in the need of higher credit. And that is where the balance has to be there, that how much you use the credit card versus other means of taking the loans. And that's where, so these are some of the things which does impact from credit behavior perspective. But coming back to the point, the people who, like your question you had, is that the people who have credit card, will they have other loans? Absolutely. Chances are very high. Will they be defaulting on some of the loans? That's also a possibility. So
and then a follow-up to that. You said multiple credit cards. There is a perspective that if you are closing out on a credit card, they can impact your credit score negatively, because you're closing out a credit a line of credit. Is that true?
Not necessarily. I mean, see, first of all, the credit score is built of multiple parameters. Every parameter has a certain weightage. Certain weightages are for the the credit limits what you have, and certain weightages are for the type of repayments you are doing on time. So I would say if you have a larger number of cards, let's say 8 cards, and you close 2 cards or 3 cards, it will not negatively impact. In fact, it could be a positive side to show that you don't want to have.
So question to you: there is good practice when you are managing credit. How many cards is too many? How many cards is okay?
Well, it's a very individual assessment, because if somebody has, let's say, higher income, if person falls in a high net worth individual category and the person has a substantially high income, person can afford to have 4 or 5 or 6 cards very comfortably, and could have the limits there, because assessment is done accordingly. But if a person is a young person who has just started career and probably is in the early stage of his career, then probably the person should not have too many. Then the person should start with 1, maybe 2, and then build their score, build their repayment profile, and then they should look forward to have higher income and the more credit cards.
And the final piece of advice, because you look at a lot of these situations when you're trying to get rid of this loan, or you're trying to repay in a situation where you defaulted, and it's credit card debt. It's the most expensive kind of debt. 40+% is what you're paying on an annual basis. How do you get rid of that?
Well, I mean, the best thing is that engage with your lender. Discuss with them your situation. Figure out a way that you settle it. Because most of the lenders also do not want to carry NPA or provisions on their book, right? So they would also be forthcoming, and there are means to address that. But definitely anything you settle or anything you basically not pay definitely will impact your credit history. But engaging with lender and settling it would be the best way to really come out of the situation.
All right. Thanks so much for joining me today. Always a pleasure speaking with you.
Alex, thank you so much. Thank you for inviting me.
Thank you so much for staying tuned, and you're still watching Markets at 12. Tell you what, let's take a look at the markets first things first, then nothing to write home about, nothing to complain about as far as the Nifty is concerned. Managing to hold up near those 24,900 levels thereabout at this point in time. Let's take a quick look at the list of gainers as well. Before we do that, when you take a look at the sectoral gainers, you have energy, oil and gas, defense, IT, rural, as well as PSU bank sectors making it to that list. And other than that, of course, in terms of the top gainers from within the Nifty 50 pack, there's an L&T, NTPC, Tata Consumer, Grasim Industries, even Maruti Suzuki as well as Axis Bank. So those are some of your top gainers from within the Nifty 50 pack. On the flip side, there's a Tata Motors that's on the flip side, declining just about 3.5% thereabout. Hero MotoCorp, HUL, IndusInd Bank as well as M&M also on the back foot, down anywhere between 1 to about 3%. So those are some of your top losers. Add to that list Shriram Finance, Dr. Reddy's, Coal India, Hindalco as well as Kotak Bank, and we'll be getting you some more updates as far as the RBI's launch of new liquidity management framework is concerned in just a bit. And of course, there's another story which is going to be making headlines. But before we come to that, before we talk a little more about what is buzzing in trade, sources in fact tell NDTV Profit that RBI is likely to announce its new liquidity management framework in the coming policy. In fact, Subhana is standing by with all of those important details.
Yes, so sources are telling us that the Reserve Bank of India can actually come out with the new revised liquidity management framework by the end of this month, or largely by the August policy, which is next week. Now, what sources are telling us that RBI usually meets with bankers, economists, and primary dealers, largely market participants, before they conduct the policy. Now, they met with market participants on Monday and economists with last week. What they're saying is that RBI could actually anchor liquidity operations around 7-day variable rate repo auctions, which are the VRR auctions, which is used to infuse liquidity in the banking system. Now, they could operationalize 7-day as this tool, as this liquidity management tool. And also, they would move away from doing long-term VRRs. Like since 2020, RBI has been doing 14-day VRR to infuse liquidity in the market. So they would move away from that and move to 7-day, because bankers believe that this would help banks in order to manage their liquidity and whatever mismatches or incremental outflow that they would have. Also, another thing on the liquidity management framework would be on the bank's push for a fixed rate repo window of 1% of NDTL. Now, banks have been asking RBI to actually do these auctions on a fixed repo window of 1% of NDTL. What that means is that currently these auctions are being done at market determined levels, but now they could be done on the repo rate levels. This could actually help in reducing the volatility in overnight rates. Now, the new RBI Governor Sanjay Malhotra, what we're gathering from sources is that his focus has been on stabilizing the overnight rates. Now, another thing that could be on the radar, that could be introduced in the new liquidity management framework, would be the final launch of SORR, which is a secured overnight reference rate. Now, that is based on the TREPS market rate. This would also be a move away from MIBOR, which is based on LIBOR. Now, MIBOR, which has actually lost its relevance, that is why RBI is introducing SORR. They had mentioned about the introduction of SORR back in the December policy, but now it could be introduced officially in the new liquidity management framework.
Well, and thanks, Subhana, for getting us all of those important details. Tell you what, on to another story which is making headlines at this point in time. Sona BLW is the one that is under pressure as the family war turns ugly. In fact, Vishwanath Nair is joining us with the latest on this one then.
So what's happened is that a cease and desist letter has gone out. Essentially, the cease and desist letter states that that Rani Kapoor and her group of people need to stop defaming the company and that they have to withdraw the letter that was sent out on the 24th of July. Essentially, that letter, in that letter, Rani Kapoor had requested the board to stop the appointment of her daughter-in-law, Priya Sachdev Kapoor, onto the board, and that she needed to take 2 weeks to essentially look at all the legal issues there. She's pointing out that there were a lot of illegalities happening within the company and that her rights were being stolen from her. So now, of course, after that, Sona BLW did put out a statement to the exchanges claiming that she has no rights in the company. She's not a direct shareholder. She does not hold any indirect position in the company either. Rani Kapoor's wealth is tied to Aureus Investment, which is the promoter firm that owns majority stake in Sona BLW, and in that company, her stake is held by a family trust. So essentially, this fight between Sona BLW, its current owners, and its family members is all becoming a little bit ugly. Clearly, the cease and desist letter, we need to see what exactly the response from the Rani Kapoor camp is. So far, they have not yet decided what they are going to do.
Alright, then let's take a very quick look at the stock as well. Thanks, Vishy, for getting us all of those important updates. A sharp knock on the stock, as you can see on your screens as well, hovering close to those days low levels. That's Sona BLW that I'm talking about, 3% downtick as far as that particular counter is concerned. But tell you what, let's move on to another important update then. And you do have Indian-born executive Shailesh Jejurikar, who will be taking over as the CEO of American FMCG giant Procter & Gamble, effective January 1st, 2026. In fact, he's going to be the first Indian to lead P&G in the last 187 years. Let's go across and listen in to what his brother Rajesh Jejurikar, who's also an executive director at M&M, had to say about this appointment.
Yeah, I'd like to take this opportunity to congratulate Shailesh, my brother, and getting this huge opportunity to lead one of the top 25 valuable companies in the world, Procter & Gamble. It's a company we've all admired through our years. I think having spent time and the openness and willingness to learn and go around taking different assignments around the world has been one of his key strengths. He is a holistic person, builds relationships, has fun, loves travel, reading, fitness, and has been particularly fond of sports. So, we as an Indian and of course as part of his family are delighted that he gets this opportunity and congratulate him for it.
Alright, then that's the latest on that appointment, an important one at that. First Indian to be leading P&G in the last 187 years. But that's all the time that we had on this show. Thank you so much for tuning in.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
investment?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. I'm Hiral Dadia and with me is my colleague Varsha. Varsha, good afternoon. Good day of trade. A surge that we've seen in terms of markets, and that is what is important. 180 points coming in terms of the Sensex, Nifty 50 as well. If you quickly pull up that one on the screens, you'll see the kind of uptick, and let's see whether that sustainability is there or not, because you're talking about 24,800 now. In fact, 24,850 is where Nifty 50 is hovering at. It's cooled off slightly from the day's highest levels, but the day is seeming pretty steady so far. Let's quickly pull up Bank Nifty on the screens as well and see what Bank Nifty is doing in trade. And along with that, we'll look at the sectoral indices. A pretty flattish day of trade in terms of Bank Nifty. And let's see Private Bank and the PSU Bank, because there has been a divergence over the last couple of trading sessions there. What's standing out today is Nifty Infra, which is up in trade. Apart from that, energy is trading in the positive. Defense has seen a recovery after the kind of slump that we've seen over the last couple of trading sessions. So some bit of buying interest that's coming in with regards to where the defense pack goes. Apart from that, FMCG is also slightly in the positive. IT has seen a mild recovery in trade today. What's lagging is auto, and it's Tata Motors which is putting pressure in terms of Nifty Auto. And you just have the auto sales numbers that will start trickling in the next two trading sessions. In fact, it's Tata Motors, Bharat Forge, Samvardhana, Hero Moto, M&M and TVS. In fact, TVS will be reporting numbers tomorrow as well. Let's quickly look at this heat map in terms of Nifty 50, and we'll look at broader markets pretty closely after that. If you see in terms of Nifty 50, L&T, a smart outlier today. Again, this is on the back of earnings. NTPC is also seeing some strong moves. Bharat Forge, Samvardhana, Hero Moto, M&M and TVS, in fact, TVS will be reporting numbers tomorrow as well. Let's quickly look at this heat map in terms of Nifty 50, and we'll look at broader markets pretty closely after that. If you see in terms of Nifty 50, L&T, a smart outlier today. Again, this is on the back of earnings. And apart from that, Tata Motors, IndusInd Bank, M&M, RIL are few of the top losers in trade. Let's quickly pull up the broader markets in terms of the mid-cap and the small-cap index, and then we'll look at stocks a little later. But the mid-cap index is up 0.1%, pretty much in line with what the benchmarks are doing in trade, and similar flattish move coming in terms of small-cap Tube 50 as well. But time for an NDTV Profit exclusive. Exchanges are actively monitoring only Jane Street among high-frequency trading firms with no current SEBI mandate to track others such as Citadel or Millennium. Charu joins us more with the exclusive details. Charu, what are you picking up? Because this has been an important aspect when we're tracking markets to see the way volumes are moving, the kind of volatility that Jane Street had created. And you're talking about few other players as well, which SEBI as of now is not looking at.
So we must understand that exchanges, being the frontline regulator, have their own alert systems to sort of understand if there is something shady going on the part of a high frequency trading firm, a quant firm or investment management firm or any other entity that is involved in the derivatives market or in the markets in general. And the regulator, the Securities and Exchange Board of India, had after its order, after allowing Jane Street entities to come back into the Indian markets, had asked the exchanges to be more cautious and monitor the entire situation very closely. So now we have come to know from the exchanges that despite several speculations and reports that Citadel or Millennium or other firms might also be under SEBI's scanner for manipulation in different indices, currently exchanges have not been given any mandate to look into Citadel's or Millennial's trade or any other high frequency trading firms trade for now. There is no SEBI mandate to do so. So currently they have only been asked to sort of monitor the Jane Street situation. Additionally, they have also not received any speculative, shady or mysterious activity on the part of other quant firms either. There has been no mysterious or alarming voluminous trade situation that their alert systems have picked up. One of the highly placed sources said that if such a situation arises, they will be going to the regulator about it. Now coming back to Jane Street entities, it was reported by NDTV Profit exclusively about 4 days back that Jane Street had sought more time from the regulator to give its reply in the process that it is undergoing with the regulator, and is currently staying away from any voluminous or high level trades for now because of the active monitoring situation. So let's see how further developments on this roll out, or if exchanges are further directed or mandated in future to look into the high level trades of other high frequency trading firms that are operating in Indian derivatives market.
Thank you so much, Charu. That's an interesting aspect to look at as well. Citadel and Millennium, two are the other firms which SEBI is not looking at because they're not seeing any speculative activity which is or suspicious activity that's coming from them. And with regards to Jane Street as well, what they have said is that they would be arguing that retail demand is driving its India trades so far. In fact, yesterday there was an alert as well from Bloomberg indicating that they are seeking 6 weeks for India response, though they may get some lesser time from here on. So this is a developing activity and a story that we are tracking pretty closely at NDTV Profit. But moving on, results is the focus. Dilip Biltcon has reported numbers. Let's quickly look at what the stock is doing in trade, because there has been a dip in terms of revenues, but margins and profitability has expanded this time around. 2.5% up move coming in on a Dilip Biltcon. Rohan Suryavanshi, head strategy and planning at Dilip Biltcon, joins in. Rohan, good afternoon and welcome to the show. Always a pleasure to speak to you at NDTV Profit. My first question coming to you is a downtick in terms of revenues. It's a lowest number, if I'm not mistaken, to a 4-quarter low, but an expansion in terms of profitability as well as margins. What has worked to aid both these aspects, and what has not worked that we're seeing a dip in terms of the top line?
Hi, Hiral. It is such a pleasure to talk to you after a while. So good questions. So in terms of our revenue, obviously it's been a little lower in the last and from the last few quarters. The primary reason for that is that we have a depleting order book. The government ordering in the last 2 years has been kind of muted, and even the orders that have come in, there has been fierce competition in that. So a lot of the smaller players who are not listed, with a lot of, and with smaller net worth and smaller top lines, they have been very aggressive in terms of bidding, because of which in the last 2 years, the orders for NHI and MORTH 90% plus have been won by smaller, unrecognized players, which is why we and along with us, the rest of the industry has also kind of faced that trouble. So that has reduced the revenue. In terms of the PAT coming up, we have been doing a bunch of things in terms of tightening our belt, reducing our costs. Plus, we've also changed our business strategy a bit, so that has also helped. Plus, there are some exceptional items as well that has kind of done. The larger thing that we have told the markets overall and our investors, that while we are in a phase of degrowth because of the external environment not being that great in terms of new orders coming in till now for the last 2 years, but this year we're expecting good order flow coming in. Plus, our other revenue streams are firing well. So more than just looking at us on a standalone basis, we've constantly said, please look at us on a consolidated basis, where you will see growth quarter on quarter, and you will see growth year on year going forward in both top line, and more so in the bottom line, you will see a bigger growth coming there.
Right. Hi, Rohan. This is Varsha this side. Pleasure to have you. Well, on the order book, Rohan, even NHAI order activity has remained muted. Is there a pickup, and what is the current, bid pipeline looking like?
Absolutely. So the last 2 years, like you rightly said, has been muted, but NHI and MORTH put together this year are targeting to bid out about 3.5 lakh crores of projects. These projects include EPC, these include BOT, and these include your purely toll roads as well. So HAM as well. So all these put together would come to about 3.5 lakh crores, both these agencies.
All right. And also, so on the order inflow side, what is the order inflow expected when it comes to FY26 and also the revenue target that you might have?
See, though, we are working in 8-9 different sectors right now. Earlier, we were a more road-focused company, but over the last decade or so, we quietly kept expanding into other areas. So we're doing irrigation as well. We're doing water supply projects as well. We recently entered into the optical fiber sector as well. We're doing metro, tunnel, special bridges, airport, mining, all these different sectors. We are targeting to at least win about 12 to 15,000 crores of new orders in this financial year. And the revenue guidance that we've given is about 8 to 8,500 crores for this financial year.
Okay. Rohan, interesting when you mention about 12 to 15,000 crore worth of additional orders. Does that say that your order book would somewhere come back to that 25, 26,000 level, which was around 3 years ago? And secondly, in terms of the other businesses, if you talk about irrigation, water supply, optical fiber, and metro tunnels, how much of your order book and revenues would come in from these segments?
So hoping to have our order book expand over the next 2 years, yes. What will be the actual number? It's very difficult to say right now. But yes, it should expand currently because we are at an historical low. But it should definitely cross that number going forward in the next 2 years. If I talk about specific industry-wise, how much we will win, it's very difficult to predict right now, because while we are bidding across the different sectors and different verticals, what you will win eventually is purely a game of luck, and how that pans out, we will eventually be able to answer. So it's only in hindsight you'll be able to say, okay, this is. Currently, we are spread across all these, roads is probably 17-18% of our order book. Irrigation is currently about little less than 22%. Mining is about 28%. Different tunnels about 12-13%. Optical fiber 7-8%. So we're doing across different segments. But the real numbers will come when we finally win, and depending whether we win 2 extra metro projects or 2 extra road projects. So it will all depend on that.
Rohan, my last question coming to you is with regards to debt goes. I mean, debt reduction has been on the cards as well. I think 2,000 odd crores is what you were looking for FY26. So how much is done, and what's the current position? And secondly, the change in business strategy that you have adopted right now, how long will it take for that strategy to play out and reflect on the financials?
So sure. So let me first talk about the larger strategy before I answer the debt question. when, and we've been interacting for many, many years, Ayril, DBL was always a primarily EPC focused company, and we've prided ourselves on our EPC capabilities. And we were always a very hungry company when it came to growing, year on year. Obviously, and the model that we adopted was having our own equipment, our own people, and doing everything in-house. So that was a very capital-intensive model. What we have done post-COVID is we have kind of rethought that model a bit, and basically reduced all our capex commitments that we were doing. Earlier, we would do 500 crores of capex commitments every year, which has now come down to less than 50 crores a year, which is only replacement capex. So that taking care of doing manpower reassessment and seeing how much do we need, where in what sector do we need to work in, reducing our focus from one sector and going to various different sectors, and also looking at long-term contracts. So those have been the kind of things that we have kind of done. And along with our EPC business, we've also tried to build a long-term legacy business where you have visibility of revenue for the next 15, 20, 30 years. Where our mining business, where we have two large MDOs that are there. So one has a revenue visibility of about 25 to 40 years, and the other one has a revenue visibility of about 55 years. So those two businesses offer us long-term revenue visibility, profit visibility, and a very clear roadmap and an ROE from that. The second business that we are doing, and I hope to talk to you very soon about it, we have gotten the in-principle approval from BSE, NSE and SEBI for coming out with our InvIT. That InvIT is going to launch sometime in September. It will be public InvIT. So that, again, all the assets that we are building, we are transferring it to our own InvIT. And that InvIT, along with our own assets, we'll also be looking at assets from other players. We have partnered with Alpha Alternatives for that. And for that, that again will provide stable cash flows to DBL for the next 15 years and onwards. So these two things, along with our core EPC business, that remains intact. We've sort of tried to make sure that, a significant portion of our PAT comes from long-term businesses and a good portion comes from our short-term businesses. So that was a larger thing, and focus on ROE and other return ratios. Now, if you talk about debt, 5 years ago at the peak, our debt was about 3,500 crores. Today, as we stand here, it's about 1,500 odd crores, with the stated goal that by the end of this financial year, we'll bring it down to 1,000 crores. And I'm talking about standalone numbers. So even though our revenues have kind of moderated and come down, and even though order book is at a historical low, we have still managed to keep on reducing our debt. And that is the biggest sort of takeaway, and that is the biggest change that has happened in terms of our overall thought process. Even on the consolidated basis, the only time we will have debt on our books is while we are constructing a project. As soon as we are done with constructing any of our road projects, we will be transferring the said debt to the InvIT. So going forward in the next 2-3 years, you will be looking at a very different DBL. Our goal is that in the next 2 years, we become completely debt-free, come to a near net debt zero kind of target, and targeting our ROEs to be upwards of 15% to 20%. That kind of range is we're targeting. So that is the kind of goal right now, with very stable, predictable cash flows.
Well, all right. Thank you so much, Rohan, for joining this conversation. Pleasure to have you, and all the best for the business. Well, moving on, L&T is in focus. The stock is buzzing in trade post Q1 numbers. Anushi joins in with the analysis. Anushi, what worked for L&T and what are the brokerages saying?
Hey Varsha, so if you see, it's been a very strong quarter for L&T, and of course a couple of factors which have stood out particularly. Firstly, if you look at the revenue, which was majorly in line, net profit did beat estimates, and this was on account of higher other income also that we are looking at. But the main focal point of these Q1 results are again on its order inflows that we are seeing. In fact, order inflows were up over 33% this quarter, which with the inflows reaching the mark of 94,000 crore as well. And this is mainly aided by the hydrocarbon business that we saw. In fact, yesterday yesterday also there was a ultra mega order that we saw 15,000 crore worth, which is not even accounted in the first quarter to be reflected in second quarter. So the trajectory of this continues to be on the stronger side. Other than that, if you look at the order prospect pipeline also, that has seen about a 63% of an uptick to 15 lakh crore now as compared to what was there before. And net working capital to revenue ratio also has declined to 10% levels. This is against a 13.9% of a level that was seen last year. Again, the management's focus here to keep it under the 12% check. Now, in terms of what the outlook is for the business going forward, they have reiterated most of their financial metrics, which includes order inflow growth of around 10%, which is rather on the conservative side considering the kind of inflow growth that we've seen in the first quarter, and even the revenue projections which are there. Revenue is expected to see about a 15% of a growth. Core margins expected to be in the range of 8.3 to 8.5%, while net working capital to revenue is expected at 12%. In terms of order book pipeline, as we just spoke about, the prospects has been raised to 15 lakh crore, and of this, domestic would include about 6 lakh crore worth of prospects, while international would be a major contributor going forward with 9 lakh crore of prospects coming from there, and this is mainly from the Middle East side that we are looking at. Now, as far as what the brokerages have to make of this, Goldman Sachs and Kotak Institutional have a neutral and an add rating, and this is at the target price in the range of 3,540 to 3,850. But if we are looking at an uptick of more than 20% in terms of where the stock price is concerned, Jefferies, Investec and Motilal Oswal have a buy rating, with Investec having the highest target price of 4,460 in this mix that we are looking at.
Right. Thank you so much, Anushi, for all the details. Well, let me, invite Gaurang Shah, who's the head investment strategist at Geojit Financial Services. Hi, Gaurang. Welcome to the show. Pleasure to have you always. Gaurang, two companies, Dilip Buildcon, you have seen pressure when it comes to revenues, but good set of numbers when it comes to L&T. What will be your advice to investors when it comes to both the companies?
Hey Varsha, thank you so much for having me on the show. Good afternoon to all of you all and viewers of NDTV Profit. So I'll take your second question first, that is L&T, and I was in interaction late evening last post numbers announcement with NDTV Profit, and I was speaking to one of your colleagues. We were breaking up the numbers and understanding the future strength in earnings on fallback of the numbers that were delivered in form of first quarter this new financial year late last evening. And according to me, and if I'm not mistaken, and I stand to be corrected if I'm wrong, L&T did surpass all the tick marks that most of the analysts had penciled down in terms of delivery of numbers. There is some amount of a sticky issue in terms of the GCC countries, order coming in from Middle East, geopolitical situation in Middle East, and of course elsewhere in the world. But the management was extremely vocal and confident about the growth prospect going forward from here on. And our sense is that it will continue to deliver. Let me give a prudent disclosure, a small one. All recommendations on this show are a part of our research team, fundamental research team. Our company, Geojit or I, we do not have any personal investment, nor there is any financial interest, no conflict of interest either. But we give advice to our clients on similar lines. They might have investments in the said recommendations. So L&T is a wealth creator, Varsha, and I don't think that you need to rush to sell the stock.
Right, that's with regards to L&T. But moving on, you have Asian Paints, which reported a muted set of numbers with a marginal decline in revenue and profit, which was weighed down by subdued demand in home decor and rising competition. The stock, though saw a good opening, has cooled off slightly right now. Mahima, if you have to look at Asian Paints, what really led to the uptick in terms of the stock on opening? Because now there is some bit of cooling off that's coming in.
Right, so I think, Hiral, we saw the uptick in stock yesterday also post earnings. I think what Street has liked is the kind of volume recovery that's taken place, which was around negative 0.5% to 1% in the past 3 odd quarters, and has gone to almost 4% this particular quarter. Segments that did well, industrial segment, automotive segment, all did very well in terms of double-digit growth. Modest revenue growth in the coating business as well of around 5 odd %. International business saw value growth of around 8.4% and a volume growth in double digits. They're also pushing the innovation innovation quotient and launching new products that is helping, get better demand. In terms of commentary, it's been on a positive front because they've said that urban demand is seeing green shoots, which was not the case in the previous quarters. Volume and value growth is narrowing, plus good monsoons will aid rural demand going forward, and backward integration should also help aid bottom line, is what the management has said. Lastly, brokerages have also hiked their price slightly on Asian Paints. Something like Jefferies has hiked the price from 2,830 to 2,900, maintained by the other two. Citi and Goldman Sachs have maintained sell but hiked prices. Citi has hiked it to 2,150 and Goldman Sachs has hiked it to 2,250. So this is the overall view of why there is some positivity in the stock for Asian Paints and as to what's worked this quarter as well.
Okay, so that's with regards to Asian Paints. Mahima, how about Avenue Supermart? They had a conference call as well. What are they indicating? Because the management has been reiterating that DMart is not just for the middle class and they are laying down companies' growth plans. What are they telling you? Because the stock at the day's high, 6% up move.
Right, so positive commentary coming in, and I think the commentary is giving investors faith for sure, Hiral. I think in terms of demand, they've said that they continue to see good consumer demand, and it's not just for middle class is what they've said. And for DMart Ready, they're targeting towards shoppers that are not very price sensitive. In terms of competition, they've said that they remain bullish on the brick and mortar model. They're not saying that they'll give in to the competition that quick commerce is giving them. They'll work on the online model, but something that works for them is what they've said. The best way to face competition is adding more stores is what they've said, and they're not seeing any financial metrics deteriorating because of quick commerce, and they've invested in cities to improve experience where quick commerce is going large. They're also saying that we are not in the race for 30 minutes delivery space, but their priority is value over fast delivery. In terms of store expansion, they've said that 10 to 15% of store addition they'll do every year and will double their investment in store additions and of course accelerate store expansion. DMart Ready, they've said that they'll expand where there is customer demand, and the delivery period will be anywhere between 3 to 6 hours. DMart Ready stickiness for customers is very high as compared to the competitors is what the management is guiding, and expansion in new states is also not difficult for them is what they're saying. And lastly, in terms of private label, they're saying that they're focusing on growing business rather than building their own private label brand. So this is the overall view and key takeaways from the Avenue Supermart commentary. I think the fact that they are very confident on achieving the brick and mortar and the success of brick and mortar model is something that the street is lacking.
Thank you, Mahima, for that. So the conference call commentary has given faith to the investors. Gaurang, are the valuations giving you faith?
Good afternoon to you. So if you're speaking about specifically about Avenue Supermart other than Asian Paints, then on Avenue Supermart, I think it was last financial year that there has been some amount of pressure on the earnings front, and the management did all those right moves in terms of getting away with those headwinds and trying to pitch into newer geographies, open up more stores in their existing geographies, opening up new stores in the new geographies, especially with focus on tier 2, tier 3 cities, as your colleague Mahima was just rightly mentioning. And my expectation is that I think they will scale up the delivery bar in line with what we are witnessing with the Instas and the Blinkits of the world. Hiral, I feel that's a big challenge in competition for retail companies like Avenue Supermart or otherwise, V2 Retail, etc. So I think they will have to ramp up their delivery model to a great extent to meet up with that in case if they have to garner a larger market share. As a prudent disclosure, we do have a buy recommendation on Avenue Supermart from a long-term point of view.
Okay. Gaurang, quick one in terms of Asian Paints is the valuation there giving you some comfort because yes, valuations have come off. The stock is not really reacting negatively because I think the expectations were already priced in. What would you advise?
Don't rush into it in terms of the numbers that are delivered, Hiral, is what I would say. We earlier had a positive coverage. Let me give a disclosure again, sometime back. But since last financial, again for Asian Paints, I think it was last financial year, second, third and fourth quarter, if I'm not mistaken, huge disappointment. This quarter also, I don't think there is any great numbers to speak about for a flyer to happen. My sense is that once the euphoria settles down, you will see downward move for Asian Paints. Birla Opus has garnered larger market share. It has now become the third largest player in this particular industry. Export market has done well, but does not look to be sustainable. I think we'll have to give it time. So we have a reduced recommendation on Asian Paints from our fundamental team.
Reduced rating on our Asian Paints. But let's quickly slip into a short break. And as we get into a break, let's quickly listen in to what Star Health and Allied Insurance's management had to say, because the stock is at the day's highest levels on the back of earnings. They're talking about ROE expectations going forward.
What we're looking at is a ROE target. We see that claim ratios will be a function of the pricing by the healthcare providers, by the company, mix of retail and group, a mix of indemnity and benefit. So there are various factors that will play out. What we are saying is we want to maintain an ROE target, which is upwards of 15-16% over the next 2 years period, by FY28. That's our stated objective, and we are well on course to achieve that. We believe as a measure to improve operating profitability, expense ratio has to be controlled. A lot of effort is going into it. Claim ratio can be slightly cyclical, as well as a function of the various product mix and the indemnity benefit, all those segments of the business. But the objective is to ensure a healthy ROE of 16% and above on a consistent basis.
And how confident are you of achieving that, sir? A 16% plus ROE consistently?
So we are very much confident. All the business actions and the strategy that we're working is playing out. We are confident about it, and there is a clear strategy to achieve that.
That's huge. That is a biggie. It's on.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in that?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a caution.
Well, welcome to NDTV Profit. You're watching Profit Buzzers. Let's take a look at some more stocks in the spotlight today. Jasmeet joins in with highlights on why Jagran Prakashan, Neel Kamalam and Siaram Silk are buzzing in trade today. Jasmeet, over to you.
Well, right, thank you for that. Yes, let's quickly get into stocks and understand why they are buzzing and what worked in the financial result. The first one is Jagran Prakashan. Well, that's a thumbs up. Let's quickly understand why is this. Firstly, the revenue growth on the better performance of the asset-based business. When you look at the PAT margins, the company has recorded the highest ever PAT in last 5 quarters. The non-operating income constitutes a 59% of PBT. That would mean the company highly relies on the non-constitute business income. When you look at the other segment, the advertisement segment witnessed a growth of 12% on YY basis, while the Radio City market shares at 18% for this particular quarter. Now quickly let's understand the other stock in radar. The first one is Neel Kamal. Well, that's a thumbs down. When you look at the stock, it's down 7% in trade today. The profits are down 17% on YY, but the profits on QOQ basis are also down by 55%. When you look at the pressure, there's a pressure on margins we see on the back of increased expenses. Both finance cost and depreciation expense is up 20%. When you look at a segmental performance, the B2B and the retail grew at 19 and 22%, but the profits from JVN also saw an uptick by 24% in the Q1. The last one would be Siaram Silk. Well, that's a thumbs down. The stock is down 5% in trade today. Let's quickly understand what happened with the stock and the financial performance. The demand in retail segment remained flat, basically soft. The reason behind it would be the soonest offset of the season. As a seasonality business, the offset of monsoon led by the flat demand. When you look at the expenses, they saw an uptick. The finance cost and depreciation saw an uptick by 43% for this particular quarter. When you look at the other income, even that is down by nearly 50% as the grants for governments have reduced. In this particular quarter, the company received a grant of 1 crore versus 13 crore in the previous year same quarter. When you look at the store opening by the company has opened 4 new stores under Zen Code and 3 new Devo stores, and the company plans on opening 35 such stores by the end of FY26. These are the stocks to watch out on how they react further going ahead in the trade.
Right. Thank you so much, Jasmeet, for all the details. Well, let me also invite our second guest for the show, who is Gaurav Sharma, Associate VP and Head of Research at Global Capital. Welcome, Gaurav. Just wanted to have your view. How are charts looking when it comes to, Neel Kamal and Siaram Silk? Because both the stocks are down today. What will you advise to investors?
Good afternoon, everyone. Both the companies you have named here, Neel Kamal and Siaram Silk, do not look attractive on charts. I think Siaram Silk was a continued underperformer for quite some time now. It is not able to hold any of its recent peaks. When we talk about Neel Kamal, yes, some hopes were there, but they also vanished with its results, and it posted a breakdown in today's trade, 6% down. As of now, I see the stock further heading towards 1650 odd levels in the immediate near term.
That's with regard to a technical view on all these counters. But moving on, Triveni Engineering, Gallant Ispat and New India Assurance, these are also buzzing in trade today on the back of earnings. Vansh is standing by to tell us more. Vansh, what has worked for Gallant and New India, and what is a deterrent for a Triveni?
Right, so let me start off with Triveni Engineering. Now the stock is under pressure on the back of the earnings that the company has reported. Now, in spite of a 23% increase in the revenue, the margins and profits have declined for the company. The margin contraction is on the back of the other expenses and the employee costs for the company. And the sugar profit has declined 80% on a year-on-year basis despite higher volumes and realizations. Second on the list is Gallant Ispat. Now the stock is trading at an all-time high. The profits have surged to 174 crores, and the profit has been driven by the improved margins and the operating performance for the company. However, the revenue has been declined, reflecting a slight dip in the sales for the company. Third on the list is New India Assurance. Now, the unfortunate incident involving the Air India flight has adversely affected the underwriting results for the company. The Q1 premium is up 13% to 13,300 odd crores, and the profit has risen despite the Air India impact, and the health segment experienced a slightly higher loss ratio for the company. So these are some of the stocks that are buzzing in trade today.
Thank you so much, Vansh, for that. Gaurang, any recommendations from this list, Triveni, New India, as well as the third one, which Vansh just took us through?
Unfortunately, we don't have coverage on either of them, sorry.
Okay. Gaurav, what are charts indicating?
Let's take up Gallant first. It's a phenomenal up move, and that is just, this stock is continuing completely unaffected for whatever is happening on the broader market or on the global front also. It is just hitting higher and higher. Although, despite such a stellar up move, I will not recommend to take a position in the stock at the current levels. It is too high. One should wait for a dip, at least 10 to 15% from the current levels. But NICL is looking somewhat attractive today, over 11% higher in trade today. I think it is set for a fresh breakout, and this particular move is likely to extend till 205 odd level. So if a trader wants to take a position, he can take a position at current levels for targets close to 205, 208 levels.
Thank you so much, Gaurav, for that view. Well, Tata Motors is the next stock which is in focus. The automaker is in news for a potential acquisition of Italian truck maker Iveco. Puneet is here with more on that. Puneet, over to you.
Well, thanks so much for that. So it's expected to be a key transaction, guys. And, it's been a while since Tata Motors has done such a big acquisition of roughly about $4.5 billion. So there are news reports indicating that this acquisition could be announced as early as today itself. So this is a commercial vehicle operator in Italy. Tata Motors, under the proposed M&A structure, could acquire 27% in the investment company of the promoter, which is the Agnelli family. And this will, of course, trigger an open offer as well. Now, when you look at some of the other key aspects of what's worrying the street is largely because of the time of this acquisition. Now, the commercial vehicle division has been doing very well in terms of financials. The margins have also been really strong, but the rationale of the acquisition will be one of the key ones to watch out for from the company. Brokerage from UBS also highlighted that the other companies are actually scaling back from the European operation at the time to deploy so much capital into a new entity in Europe will be the key question. The other ones that the strong cash as well as ROC in the last is the other one, because the utilization of such strong financials will be the other key one to watch out for from Tata Motors, and it's coming at a very, very crucial time for the company because they're looking to demerger the commercial vehicle division from the car segment. So using this cash into for such a big acquisition in a slow growing economy is one of the key reasons. Something like UBS has also come out and said that if including this particular news flow and proposed transaction, it could go all the way up to 1.5 billion euros on the basis of the valuation of Iveco, and this includes a mandatory open offer as well. So just the timeline as well as the acquisition at such a time where the auto industry is so uncertain is what's driving the question and probably the impact on the share price today on Tata Motors.
Right. Thank you so much, Puneet, for all the details. Well, Gaurang, as you know, Puneet was saying, this potential deal will come when, most of the companies are scaling back when it comes to European manufacturing footprint. What are your views on the same, and of course, your outlook when it comes to Tata Motors?
Well, Varsha, look, the concern is justified. There is absolutely no doubt about that. But I think we have to give a little bit of more weightage and credit to the wisdom and fine sense of judgment of the management, right? When there are difficult times in a particular sector like auto, headwinds are there. We have no clarity in terms of the tariff on auto, US, Trump trade tantrums, etc., etc. But these are the times when you get to expand your business strategies, take it to overseas, do an overseas acquisition. And as far as Iveco is concerned, if I'm not mistaken, it has got a sizable presence in that part of the world. And of course, India is also growing. So you are going to need a lot of commercial vehicles and different classes, whether it is transportation of minerals and metals, whether it is logistic, whether it is personal transport, etc., etc. So yes, short to medium term, it is justified to have concern or get an overreaction on the counter like we are witnessing today, down about close to 3.5%. But from a long-term point of view, we are maintaining a hold on Tata Motors, and that has been there for a pretty long period of time.
Right, and the valuations are also pretty much compelling when it comes to our Tata Motors. Gaurav, very quickly, what are charts indicating after a 3.5% downtick? Are you seeing buying that could emerge going ahead?
Firstly, I completely agree with the viewpoint of Gaurang. Some initial near-term profit taking is pretty much possible. 640, 610 are the levels that I'm eyeing at. But I am looking Tata Motors at from a longer term perspective. This is looking at a very, very attractive level. 600 is a very attractive price. I think if one can wait for some more time, so this stock will be available at a very, very good fair price, and that will create a fresh entry point. So I'll say hold and buy on dips.
Right, hold and buy on dips. Interesting strategy for a Tata Motors. But moving on and staying with the space, SGS Enterprises, that's another stock to focus on the back of earnings. Revenues have seen a growth of around 11%. The stock seeing marginal gains of 1.5%. Profits have also improved to the tune of around 22%. And they've seen an expansion in terms of margins as well. The two-wheeler segment is what has led the growth this time around. And overall capacity expansion projects are underway at Pune and Bangalore for the company. Mr. Sanjay Thapar, Group CEO and ED at SGS Enterprises, joins in. Sanjay, good afternoon and welcome to the show, and a pleasure to speak to you as always at NDTV Profit. This is Hiral on this side. My first question coming to you is the growth that you've seen in the first quarter. Is that something which you're expecting to continue to deliver in the remainder quarters, or how are you looking at growth, or do you think this is a one-off?
So we've acquired a very large marquee customer in the name of Hero MotoCorp. We already supply to virtually everybody in India for aesthetic and decorative parts, both in the two-wheelers and the four-wheeler segments. So this trend will continue because we've added large volumes and we've added to our top line, and we've also expanded the EBITDA margin. So I expect this trend to continue during the rest of the year.
Mr. Thapar, very good afternoon to you and thanks so much for joining in. It's Puneet this side. Just one follow-up on this aspect. Your Hero MotoCorp has been one of the key acquisitions in this particular time frame. So are you looking to supply to all its models currently, or are you starting off with some specific models, and what is the kind of revenue contribution that you're expecting from Hero over the next 1 to 2 years?
So Hero typically, yes, we've onboarded Hero for the first time in this quarter. Hero has a spend of close to about 250 crores for our category of products, aesthetic decorative parts. We hope to be a significant player in this business. As you know, all supplies that you start supply with a few models and then they roll out across all the other models. So we are extremely bullish. We have to have a large share of business of this Hero share of wallet for these aesthetic parts.
And Mr. Thapar, in terms of in terms of passenger vehicle as well, what's your current kit value that you're offering in terms of passenger vehicles, and how does it differ from that of two-wheelers currently?
So four-wheelers are a very large area that we can supply aesthetic decorative parts. There is an exterior of the vehicle, there is an interior of the vehicle. Our current kit value to a four-wheeler typically is close to about 5,000, 5,500 rupees per vehicle. And our endeavor is to increase this to 10,000 rupees per vehicle. So historically, 4 years ago, we were supplying just about 80 rupees worth of material to a four-wheeler. Largely, we were suppliers of aesthetic parts to four-wheeler industry. But then we've changed that quite rapidly with the new generation of premium products that we've launched. Plus, we continuously add to the portfolio of products that we can offer. Four-wheeler being a larger area, much larger opportunities, both in interiors and exteriors. So that's going to drive growth for us in the future as well.
And Mr. Thapar, your kit value going to 10,000 from roughly 5,500 currently will be a huge boost to both revenue as well as margins. So will that be driven by a new segment that you're entering with the cover glass, or will that be driven by some acquisition that you might do to increase the kit value as well as products?
No, so what we are talking of is the organic kit value of the product that I already have in my portfolio. So I supply dials to cars, I supply chrome plating parts. The content of these chrome plating parts is increasing. So traditionally it used to be about 1,500 rupees per vehicle. Today it's close to about 2,000 rupees per vehicle. I also have a large in-molded labeled parts. These are decorative parts that go onto the interior of the car. That average constitutes about 2,000 to 2,500 rupees. It could be as high as 5,000 rupees per car as well. So on a blended basis, currently this 5,500 with the addition of cover glass should go to 10,000, and that's directionally where we are headed.
Right. Sanjay, so when you're talking about this increased kit value, which automatically gives you a good visibility in terms of your top line as well, would it be right to say that 1.5 to 2 times kind of growth in terms of volumes that you could see as compared to the industry on the back of this rising kit value? And secondly, if that is going to be the scenario, how will your margins be aided? What's that range we could be watching out for?
So we've been very steady in terms of margin delivery. So we have delivered north of 25% EBITDA margins for since we've been listed in 2021. So we've outperformed the industry for 23 consecutive quarters. So our guidance for this year also is we'll grow 2 times the rate of underlying industry growth. And we are well on track. As you see with the acquisition of a new customer like Hero, this of course has ramped up quite significantly during the quarter. But overall, we still say that we will be a consistent performer. We generate good EBITDA margins. We'll continue to do that. We are in a high growth trajectory with the added products that we have. So our product portfolio is the largest in the industry, whether you look at a supplier in India or overseas. So I think SGS is in a sweet spot in terms of capability that we built over the years. And we are very optimistic that growth will come because of premiumization, the trend that's happening in the industry, plus the opportunities to cross-sell products. So we have so many products. Every time that I enter a new customer, I can offer him more value-added parts, larger content in a vehicle, and that is what is leading to outperformance of the industry.
Right. Thank you, Sanjay, so much for joining us on the show and sharing the views. The stock also seeing some smart moves in today's session. But moving on, NSDL is one of the top stories today. The excitement has peaked for this IPO. But what's pushing the investors' enthusiasm? Actually, Harsh should be joining us on the same as well. But overall, if you see in terms of the subscription data, let's quickly pull that one on the screens because it has been fully subscribed on day one. The overall subscription is 100%, out of which QIB portion has been subscribed 50%. NI subscription is around 1.38 times. And the retail subscription is at 1.11 times. So that's the NSDL IPO, which has been fully subscribed on day one. What is going to be interesting is to see the listing, because over here the question was the grey market premium versus the issue and listing price that could be eyed, the way, that has peaked. Let me get a quick view from Gaurang. Gaurang, how would you look at a NSDL? In terms of a CDSL, because that's a pretty duopoly kind of a market right now that you're dealing with. If you have to compare both of them, would you think it is a better way to subscribe to a NSDL versus getting into a CDSL right now?
So, Hiral, just a while back, my research team has sent out IPO note on NSDL. And we have given a subscribed recommendation in the price band, higher price band between 760 to 800. We have recommended to subscribe for the IPO at a higher price band. Let me give you a short input in terms of the performance. Look, all these companies, whether it is CDSL, NSDL, BSC, whether it is computer age CAMS or intermediate companies, all of them are associated with Indian capital markets. And if our view and our aspirations are that in the next 3 to 5 years, Indian capital markets are going to perform extremely well, then I think strong fundamental companies will also do well. Now, whether you want to go for CDSL or NSDL, well, I'll go with what my research team is recommending, that is NSDL. And as a disclosure, we like this sector, Indian capital markets. We have a positive coverage on computer age management services, that is CAMS. And my sense is that long-term earnings visibility looks quite strong.
Thank you so much, Gaurang, for that, and Gaurav for joining us on the show. I know we were a little short in time in terms of taking questions because lots was packed. But let's just quickly pull up a PNG. And if you can pull up a Crompton Greaves, both of those stocks have reacted on the back of a good set of numbers. PNG as well, the profit at 192 odd crores, though a flattish revenue growth, but it's the profit number that we've seen. I think it's Greaves Cotton, sorry, not a Crompton. It's Greaves Cotton that reported numbers, which has seen a strong spike as well on the back of earnings. But completely out of time. With that, it's a wrap on this edition of Profit Buzzers. Thank you from Varsha, the team that put the show together, and myself. In fact, lots more lined up on the other side. Please stay tuned to NDTV Profit to look at all the small cap buzzers in trade today with Somit Sarkar and Anushi Vakharia.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
investment?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
investment?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome to NDTV Profit. You're watching Small Cap Buzzers. I'm your host Anushi Vakharia and with me is Somit Sarkar. Now a quick check on how the benchmark indices are doing. Currently, if you are looking at Nifty 50, flattish moves is what we are looking at right now, seeing some bit of 100 basis points of improvement over here or there, but that's what we are seeing in terms of Nifty 50. In terms of Nifty Bank also, let's have a quick check on that as well. Overall, we are looking at just flattish moves there in the red. But, let me go across to Hiral for what's happening in the broader markets, especially some of the small cap stocks which are buzzing in trade today.
Thank you, Anushi. It's interesting to see because your broader markets, that's the small cap index, is probably outperforming the benchmark indices at least to a minor extent. 0.2% higher in terms of the BSE small cap index. And if you look at Nifty small cap 250 as well, now that's pretty much gone onto the flattish line, slightly negative. So a flat move on that one, but you have your BSE small cap, which is outperforming. Let's quickly look at some of the movers. Jubilant Pharma, Sumi Chemicals, these are few of the names. Pharmoma, which is up around 6.5–7% at the day's highest level. Sumitomo Chemical seeing some smart moves. Godfrey Philip also has been buzzing in trade over the last 2 to 3 trading sessions today as well. Good moves and volumes on this one. Schneider is another one which is buzzing in trade now. The reason I think Schneider Electric has climbed up in trade today is because the parent has said that they will be buying Thematic's stake in the JV, which is Schneider Electric Infra. So I think there is some bit of clarity that is needed on this one as well. So that's another stock. Star Health again reacting to numbers and seeing a strong day of trade. IGI has also reported numbers, and that stock is seeing gains of around 3.5–4%, but cooled off from the day's highest levels. Zentech continues to trade under pressure over the last 3 to 4 trading sessions, locked in lower circuit. Birla Corp is also trading under pressure today. You have 5-star under pressure. Triveni reacting to numbers and trading under pressure this time around. Laurus Laboratories as well reported numbers yesterday. That stock is down in trade. Apart from that, few of the other names is a Bliss GVS Pharma on the back of earnings. That stock is up almost 16 to 17% as we speak. Foseco India is also seeing some smart moves. Sudarshan Chemicals is another stock which is buzzing in trade. Vishnu Pungalia is up around 10 to 11%. Refex is another one which is up in trade as well. And if you talk about a Gateway Distriparks, that's another one which is seeing 6–7% up move. What's losing out is Nilkamal also, which is under pressure. Reddington on the back of earnings is trading under pressure. Vimta Labs is also seeing some bit of profit booking in trade today. And lastly, Indotech, that's another one which is down around 5%. So lots of movers and shakers in terms of where the small cap space goes. And from here on, over to you, Anushi and Somit, to decode the top movers.
Right, thanks for that, Hiral. Thanks for the overall breakdown that we are seeing. You just mentioned about Gateway Distriparks. Now, if we pull that stock up, it's up over 6 to 7% in trade today. And interesting is its Q1 results also, which came out. Now, what we are looking at is a 56% of a growth in terms of where the revenue is concerned. Margins, however, saw compression at 21.7% as compared to 24%, and net profit saw about a 24% of an increase. But to discuss more on the outlook of the business as well as the strategy forward, we're joined by the management. That's Samvit Gupta, Joint Managing Director at the company. Hello and welcome to the show, Mr. Gupta. First of all, I want to make sense of these Q1 numbers that we are looking at. At one side, we are seeing a 56% of an all growth in terms of where the revenue is concerned. Want to understand what is the kind of growth picture that you have in mind for FY26 and why margins saw this bit of compression in this quarter?
Yeah, hi, thank you for having me on the show. So this 55% growth is primarily driven by the consolidation of Snowman Logistics coming in. So it became a subsidiary in the last week of December. So 162 crores revenue is coming from those numbers. On a like-to-like basis, if we just look at the container business, we're seeing about a 10% growth in revenue on year-on-year basis. And that's something we want to kind of continue for the rest of the year. So Snowman numbers will continue to add in, and the container business should grow at a double-digit number.
Okay, can you specify more about the Snowman Logistics acquisition which took place in December? What's the kind of outlook that you have for this one after the consolidation in the business for the next 1 to 2 years?
Yeah, so Snowman, it wasn't really an acquisition, just to clarify. We had 40%, and then over the last 2 years, we bought 5% under the creeping acquisition rules. So December is when it went from 49.9 to 50%, and it's treated differently according to the accounting standards. But the outlook basically is there. It's the number one cold chain player in the private space, and we want to continue expanding. Capacity is right now about 155 to 160,000 pallets. Over the next 2 years, we want to take it to 200,000 pallets. And over the last 2 years, we've also introduced a 5PL division, which is basically the distribution business, which is low margin, but it helps our high margin business of warehousing and transportation. So overall, you would see the revenue grow by 15 to 20% year on year, but the margin percentage will come down in Snowman, but the overall EBITDA number will also go up.
Right. If you could also help us with what was the EBITDA per TU for the rail and the CFS business in the first quarter, and what is your full year guidance here?
So for the rail business, it was 9,100, and for the CFS business, it was 1,500. So rail, we are expecting to go back to 9,500 plus levels. Q1 saw some decline because there was a lack of exports, lower double stacking, and some imbalance. So it led to some underframe and empty running higher than normal quarters. But we're already seeing better pipeline in July and August, so that should come back on track soon. In the CFS business, we saw a slight improvement, and we expect 1,400 to 1,500 to be the normal range for EBITDA per TU there.
And you were speaking about double stacking. So what was the double stacking number in FY25, and how much are you seeing that to be for this financial year?
So Q1 last year was at 32%. The full average for the year last year was about 38%. This year in Q1 we saw 39%. It would have been higher, but we are targeting somewhere closer to 43-44% going forward.
And in terms of the volume growth picture, do you see this in the double-digit number for this year? What is the outlook here?
For the rail side, we are looking at double digit. For CFS, earlier what we were guiding as 2-3% growth, we might look at a 5 to 6% growth.
Okay, and what about the market share in the key regions that you have? Can you just give us a breakup in terms of NCR or other regions as well?
Right. So NCR, we have a market share of about 17%. So we expect that to stay in the 17 to 18% range for this year. Ludhiana, we were at 28%. We went down to 21 and we're back at 28%. This is despite a sixth ICD also starting over there. We're able to maintain the market leader position. And Uttarakhand, while the market has not grown as much, our market share has gone up. So our market share for last quarter was above 35%.
Right, and just wanted to know a couple of things on the M&A side. Are you looking to further add stake in Snowman, and on the other hand, in fact, are you even looking to sell the CFS business? Any plans, anything on works on that front?
So the CFS business, we were looking to monetize. If a good opportunity comes in, we would be open to it, but it highly depends on the valuation. We got some offers, but they weren't up to the mark, and it's not a distressed sale on our end. So till then, it's giving us good cash flows. So only if the right offer comes in, we'll have a look at that. On Snowman, our initial target was 50%. We're not against increasing our stake, but we don't have any immediate plans to increase our stake either.
Right, and final question from my side would be, could you quantify or could you give us some idea about what would be the impact of the Western DFC on your volumes?
So already it's functioning up to Mundra and Pipava, whatever it had to. When JNPT comes in, which would be in Q4 this year, it would increase our double stacking and reduce the turnaround time. It's hard to put a number to it because we have to see how the shipping lines realign their trade, whether something goes towards JNPT more than it's going right now. Because right now it's only about 5% of the business that we cater to is for JNPT, rest is for Mundra Pipava. And we've started Kandla also recently. So depending on what shipping lines do, we'll have to take a call, but we would be in a position to benefit more than the others because we have a pan-India license. And right now, after Container Corporation, we are the ones doing the most volume out of JNPT for the NCR region.
Okay, so that's the outlook that we are seeing there. So over here, just wanted to understand your progress on the land acquisition which was made for the Jaipur terminal. What's the progress that we are seeing on that front?
So Jaipur, it's still in a legal battle. It might take another year or two to clear up. We don't really have any indication on that. But meanwhile, we are focusing on other locations. So hopefully we announce something soon there. And even aside from our own acquisition, we're looking at utilizing some third-party terminals in a asset-light model where we'll handle the rail operations only and someone else does the ICD operations. So that is also something we're working on.
Okay, thank you so much, Mr. Gupta, for joining and sharing that outlook on Gateway District Parks that you're looking out. The stock currently up in trade today. But with that, let me welcome in the guest for today. That's Mahesh Oja joining us, AVP Research and Business Development of Hensex Securities. Mr. Oja, welcome to the show. My first question is about Gateway District Parks. You've heard the commentary of the management as well. What's your outlook on this company?
Commentary is also good, and number we have seen after the consolidation, that is also very good, and we have also suggested our client to buy in lower level. That could be a 60-63 level range, and valuation wise it looks attractive still. I think stock has a much more potential for upside, and number which came, it's also very good. So I think a stock can go at least 100, 110 in 1 year horizon. And outlook seems positive for the stocks as management also guided. But yes, we are tracking from the lower level, and I think stock has a potential for some more upside.
Right. With that, let's welcome our next guest for the show, the management of BMW Industries. Harsh Bansal, the managing director of BMW Industries, is joining us to give us more insight on how the quarter was for the company. Firstly, sir, I wanted to understand that you commissioned two additional tube mills in the first quarter here. So anything on the revenue, what is the kind of upside that you're expecting from this? Any details on that front if you could share?
Hi, Shamit. Thank you for having me here. And yes, we did commission additional tube mills in the first quarter. And this is in line with our plan to end the year with a capacity of about 700,000 tons. If you go back a couple of months, we have renewed our order with Tata Steel, which is our largest customer, for a period of about 2 years, with accumulated revenue across all our tube facilities is expected to be about 375 odd crores.
Right, sir. And any guidance if you could share with us for the full year? What is the kind of revenue? Anything on the volume front that you could share? Anything on the margins?
So I'll refrain from sharing on the exact margins, etc. for this year. But on the volume front, we expect to finish the year with about 700,000 tons of capacity and about 45-50% of utilization.
Okay, Mr. Bansal, this is Anushi joining in as well. Just want to make sense of the first quarter numbers that we are looking at. You know, there has been impact in terms of whether revenue is concerned both on a sequential and a year-on-year basis. Just want to get your sense of these numbers that we are seeing. This was on account of a one-offs that we were looking at. Has that normalized going forward in the second quarter onwards?
Hi, Anushi. Yes, it has normalized to a great extent, and this was a really exceptional kind of a disruption to the production that we experienced from the customer. In my almost 30 years of working with them, we have not experienced something like this. So yes, to answer your question, that it has largely come back on track.
Okay, so that's the update that we are seeing in terms of how the future quarters are going to shape up. Just want to get your sense on the greenfield expansion that you're making, the new Bokaro complex, the one being in focus. Want to get a sense of the investment over here. What's the kind of incremental revenues that you expect, the execution and timelines? You can share more details on this.
So we will be executing the complete project over the next 18 odd months, with the first revenue generating plant going on stream by quarter 3 to quarter 4 FY26. We have given a guidance of up to FY28, which will be our first year of full operations. I can share the guidance. So we expect 40% plus CAGR up to FY28.
Right, sir. Also, I wanted to understand that you were recently qualified for the PLI scheme for coated and plated steel. Any financial details that you could share on that front? What could be the benefit that you would derive from this PLI scheme? Anything on that front, sir?
So that, Shomit, thank you for that question. I think most of the financial details on that and the benefits to be derived are available on the website. This is between 3 to 5% incentive for the companies that have been qualified under this. We of course have 2 of our facilities in the Bokaro plant which have qualified. I think in the coming quarters we'll be able to quantify the numbers a little better. But needless to say, this is a positive step by the government.
So, Mr. Bansal, considering that you have both greenfield and brownfield expansion plans on table, do you have any fundraising plans as well?
So currently we are operating, everything that is brownfield in nature is being done through internal accruals. Most of the debt that had been raised for that has already been done. In the case of Bokaro, we are working primarily with debt for the time being. And as we go ahead, we'll figure out other fundraising options.
Okay, and my final question to you is about the debt picture also. Now, if you look at the debt, that has increased to 164 crore or so. Do you have debt reduction plans?
I mean, this is, we are, like you rightly said, we are at a growth inflection phase, both green and brown. So I think for the interim and short-term period, I don't think we'll have a lot of reduction in debt.
Right. I believe in the first quarter, due to some shutdowns in your client side, there was some impact on the volumes. Have those things normalized in the second quarter?
Largely, Shomit.
Largely. Well, thank you, sir. Thank you for joining us and giving us more insights about your Q1 numbers. And all the best for the future, sir.
Thank you. Thank you so much for having me.
Okay, Mahesh, coming to you on BMW Industries, given the fact that they're expecting a good jump in their growth going forward on the back of the expansion plans, how are you looking at this company?
Looking on the numbers, this number was not in line and number have degraded, not so good. So I think from a longer term perspective, I think a stock can take much more time, 12 to 15 months for more upside. But yes, if anyone looking for a accumulation, they can accumulate on these level. I think a stock has potential at least 85 to 90 range in upcoming time, but it will take time, some more time. It will take maybe 2 to 3 quarter watchful for the same.
Okay, so that's the view that we have for BMW Industries. But let's talk about some other small cap stocks which are in focus. Let's start off with Hind Rectifiers. Now, if you look at the performance today, the stock is up over 11.4% currently. In fact, it did mark its 52-week high as well. Now, what we've seen is the company has just clocked in gains of over 46% in the last 5 sessions itself. Of course, now the recent trigger being the first quarter results also that we are looking at. In fact, if you look at the numbers, revenue was up around 59%, while margins also saw 60 basis improvement to 11.3%, and net profits saw about 90% of a jump. In terms of order book positioning also, if we compare the FY23 to 25 or to the first quarter journey as well, 307 crore was the figure that we saw in FY23, which then escalated to 1025 crore at the end of Q1 FY26. Key order wins being that it received a 127 crore of a supply order for electrical components as well as equipment from Indian Railways. Along with that, it received another 101 crore of an order from Indian Railways to be executed in FY26-27 as well. Mahesh, let me come to you on this counter. What is your view on this stock now? It has seen a significant surge in this last 1 month period itself.
See, the number are much more positive, and we have recently seen the warrant issue in this. So I think a stock has some kind of upside potential, but if any downside nearby 1850, 1860, I think it can be an opportunity for adding. In near term, I think 2150, 2200 level can become. But yes, we as we have seen some kind of rally, some kind of cool off after, then we can see any buying opportunity. So today is very good of stock, and we have seen great number, and also we have seen order from Indian Railways. So I think stock has a upside potential, and stock outlook is positive. But yes, wait for some cool down and then can be bought.
Bliss JVS is another stock that has been in focus. The stock is up more than 15% in trade. What could be the potential reason behind this kind of a surge when it comes to the stock? Let's get in Varsha with more details.
Yes, thank you for that. You know, the stock is buzzing on the back of strong Q1 FY26 numbers that the company has seen. If you see the revenue growth, you know, the revenue growth was only 12.5%, but profit has doubled. Now, this is on the back of higher other income, which has aided profit. Even EBITDA margin, if you see, the EBITDA margins were at 20% versus 19% last year. This is on the back of lower cost of material. Now, this company, if you see, manufactures pharma formulations in capsules, tablets and syrups form, and even they are also contract manufacturers for Sun Pharma, for Mankind, for Sanofi and for Alchem Labs as well. If I want to talk about the geographical split as of FY25, almost 92% of their revenue comes from exports and rest from domestic market. Onto the product portfolio and about their global presence, you know, the 2 production facilities have secured EU GMP certifications, which will actually benefit the company going forward. And they have approved the approvals. This approval enhances credibility and open new growth avenues when it comes to regulated markets. And we may see, you know, going forward higher margin, because regulated markets have higher kind of margin. Even state-of-the-art semi-solid plant was launched in FY25, and this new plan expands dermatology and topical product offerings that the company has. Lastly, there have also strategic agreements in the US, Canada and Europe, which have strengthened a global reach for the company. So overall, strong Q1 numbers, and you know, other income has also led to the doubling of profit, but overall good set of numbers has led to surge in the in the stock price of you know, Bliss GVS.
Well, Mahesh, how are you looking at this counter? Would you advise investors to sell on this rise, or is this still a buying opportunity, this counter?
No, I think stock has posted a solid number, and I think stock has a much more upside potential, and our outlook is positive. I think in 6 to 9 months we can see 230 to 250 zone. Yes, if any cool down nearby 160, it could be a buying opportunity. But yes, still we are. I think some kind of positive upside could be there. 230 to 50 range could become.
Well, thank you, Mahesh. Thank you for joining us and giving us more insights on the stocks that we discussed. With that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
ICICI
that?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
investment?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a
Welcome, you're watching India Market Close. I'm Mahima Vachrajani and with me is Neeraj Shah. Let's take a quick look at how the markets are doing at present. Well, the Nifty 50 is trading in a tight range of that 130 odd points, up by about 0.2 odd %. The Nifty Bank trading flat. It's hovering in that range of 56 to 100. So largely flat when it comes to Nifty Bank and tight range of trade when it comes to the Nifty 50. Let's try to pull up the heat map and see what counters are seeing good gains. There's L&T topping the charts on the back of its earnings and strong order book, up 5%, followed by something like a Tata Consumer, which is seeing good gains today, up by about 1.6 odd %. NTPC, Sun Pharma, Maruti, Grasim, Power Grid, all counters seeing gains of about 1 odd %. Axis Bank in the green today after 3 or 4 days of slipping in the red. There's Eicher Motors, which is also doing fairly well in trade today. Something like a Trent also doing well in trade today. But something that's not doing well is Tata Motors, Hero Moto, Shriram Finance, Cipla, Dr. Reddy. So auto counters, Bajaj Auto, M&M, all under pressure, as well as there's something like a Shriram Finance that's seeing cuts of about 1.7 odd %. Let's also take a look at the advanced decline ratio and see how that chart has fared over the day. It's narrowing by the hour. There you go. It's 1200 odd advances versus 1000 odd declines. So almost a 1:1 ratio, slightly ahead in terms of where the buyers stand. Let's also take a quick look on the sectoral heat map. There you go. There's Nifty Energy, Nifty Infra, FMCG seeing some gains. Nifty Infra up about 0.7 odd %. Nifty IT also now, is chartering the green territory because of the rupee depreciating. There's also Nifty MN Oil and Gas, which is slightly in the green, but counters that are facing pressure. Nifty Realty again back in the red today, down by about 0.9 odd %. Nifty Auto 1 down by about PSU Bank also down by about 0.4 odd %. But Neeraj, how are the broader markets doing?
Well, the advanced decline tells you a story, doesn't it, Mahima? That it's a bit of a quiet day of trade. And, viewers, at the start of the trading day, we had mentioned that a penultimate day to the expiry, but more importantly, a few hours before the Fed decision, very unlikely that the markets will make a decisive move. And I think that is what is playing out. Some key losers today included Triveni Engineering, which on results has corrected. So that one is off. About 4 or 5% amongst the key losers, 7% actually. Zen Technologies continues to grind lower, so not a great day for that one. And all of this conversation around the ED wing taking action is weighing in on the ADAG group stock. So Reliance Power is down about 5% as well. But look at the winners. And the winners are up and about. So Bliss GVS throughout the trading day today has been in double digits, and it's likely at the high point of the day for itself. Yes, it is. About 18% higher for Bliss GVS. Zuari Agro is amongst the pack of stocks which has had a good move from that agrarian space. I think the standout stock today is Avenue Supermarts. You don't see the big boy move so much in a trading day, but that move is very, very strong. Now, there are a couple of brokerage notes that have come out too, but 7.5% for an Avenue Supermarts, that's a serious market cap moving 7% on a fairly large volume, 2 million shares traded. So volumes are substantially higher than the averages too. So something's brewing here. Now, before we go to Kush Bora, Mahima, any thoughts here? Avenue Supermarts, 7.5%.
Right, I think so. The gain that we've seen in the counter is post its con call, and it's interesting commentary that the management has given. This is our stock of the day also today, but I think what stood out for me was the confidence that the management has shown in saying that, no matter what competition quick commerce is giving us, we'll stick to the brick and mortar model. And they've gone out and said that to beat this competition, we'll be more aggressive in terms of store addition. And that confidence in, the management's tone is something that is probably something that's excited the investors as well, and that's why we're seeing the kind of uptick in the stock that we're seeing.
The other thing was that very interestingly in Damien Castle's note that he writes every weekend, right? Last weekend of CLSA, CLSA bits and pieces. Last Friday, from amongst the stocks that were highlighted as turnaround stories, included a Bajaj Auto, Bandhan, and Avenue Supermarts.
Interesting.
And that's, I'm not saying that's the reason really. It has to be the con call.
Yeah.
But it's very interesting that some people found reason out there for Avenue Supermarts, which has been on a slumber for such a long time, to make an up move. So, pretty cool move. Actually, Kush Bora is with us. Let's go to him for this and more. Kush, great having you. Thanks for joining in. Usually we start with the index, but I'm tempted to start off with what Mahima said is our stock of the day, which is Avenue Supermarts. After a really long lull, hibernation, slumber, what have you, a smart, sharp uptick there. What do you make of it?
Hi, Neeraj. A very good afternoon to you and to the viewers. Indeed, the stock of the day. What a stellar move. Now, what this has done is that it's made a few technical checklists. Tick the right boxes. So there was this sharp falling trendline resistance that's been broken into. Support at the 200-day moving average. That's a tick in the box. Rebound and crossing the 20 and the 50-day moving average. That is also a tick in the box. Now, for most parameters, this would still feel like a buy, because on the upside you've got resistances near the 4600 and about 4750 marks. Now the only thing is that if you see for the last about 3 months or so, the stock's not been able to take out the 4500 4550 zone. Now if you're looking at a positional bet, the risk reward ratio, despite the kind of moves that the stock has made today, is fairly favorable. So you could keep your stop loss around the 4000 4050 mark and still play for 4750 and higher levels. So risk reward ratio, despite the kind of moves that it's done today for a positional trade, still favorable. Minor hurdle or resistance I would call around the 4500 mark, that needs to be taken out. On the whole, this could be that day where the tide might turn for Avenue Supermarts.
Okay, some flashes on your screen on the India-US trade deal, something that is the most watched out for thing. I think from an Indian investor's perspective, more than the Fed, you could argue, it is this trade deal that people are watching out for. And Bloomberg reports that India is eyeing the fall season, which is the September, October, November period actually. And now they're saying actually the September deadline for US deal as Trump threatens tariffs. Remember, overnight, Donald Trump has said that the India tariffs could be 20 to 25% non-committal in the passing, but mentioned 20 to 25% tariffs, which in a normal course of a normal parlance would have gotten the street rattled. But I would reckon that everybody believes that all of this gets settled, gets negotiated, and therefore it will not be the worst case outcome. But now, at least as per the Bloomberg story, there is some timeline that we are watching out for. At least India is eyeing that timeline. So keep an eye out there. Okay, Kush, what about the markets or the indices? Are you taking a trade or are you lying low until expiry tomorrow or the Fed decision tonight?
So here's the view from yesterday continues where, the trade is really a short covering bounce that you're playing for now. We mentioned 24,900 and 25,000 as the resistance zone on this recovery move. We're seeing the Nifty inch closer to that. I will not be surprised if we actually, see a few call writers, covers their shorts and run for cover, as Nifty approaches 25,000. But beyond that is where the challenge lies. Actually, if you see what's happened in this entire month, starting of the month, the range was close to 25,600 to 25,300, then from 25,300 to 25,000. And now towards the end of the month, the range has shifted lower from 25 to 24,600. So there is a very clear shift in range, consolidation for some time, and then a further breakdown. Given how short FIIs are and how oversold, as we've been talking about, Nifty has been for some time, I won't be surprised to see a further short covering bounce, but may not happen just tomorrow. Maybe this expiry might see Nifty trade towards 25,000 and close around that mark. Beyond that, there could be a possibility of Nifty inching higher. So for now, the view that you play for a short covering bounce continues. The level on the higher side is 25,000. And if you're taking a position in the future segment, then keep a stop loss towards the low point of the day, which is close to 24,770.
Okay, and what about your picks for the day, Kush?
Plenty of stock specific actions, so still going with two longs. HDFC AMC continues to impress with price and volume action. There was this wild consolidation for 7 sessions, it's breaking above that consolidation range. So on the upside, you've got targets of 57.10, 57.95, a stop loss near the 55.50 mark. The second stock is PI Industries, fairly similar to HDFC, except for the fact that the consolidation here has been fairly longer, about nearly a month and a half. So on the upside, you've got targets of 44.20, 45.20. Keep a stop loss near the 40 to 20 mark. HDFC AMC and PI Industries on long side.
Okay, all right. So those are the picks that Kush has for the day. But, shifting focus to the Alcobev space, Allied Blenders came out with its earnings and it's a stellar set of numbers for sure. Revenue up 21 or 22 odd percent, EBITDA up 50 odd percent. Margins have improved significantly and net profit also almost more than tripled. And to discuss as to how the quarter has gone by and how things are shaping up for the company, we're joined by Alok Gupta, Managing Director at Allied Blenders Distilleries, joining us now. Mr. Gupta, always a pleasure speaking with you. It's been a great quarter for you yet again. It's the fourth quarter where you've seen good growth in terms of profit as well. Just want to get a sense because, when I was going through your earnings, I realized that strong volume growth has been coming from the premium segment. Now, this has been the case for other Alcobev companies as well. But, it's not been at the same pace as Allied Blender has been seeing. I just want to understand what is it that you're doing different?
The magician never reveals the secret, so I will share what I can. I think from our industry performance, our growth in the P&A segment is roughly 3x of what we have seen in the market. So we continue to gain market shares. I think over the last 4 quarters, the focus has been on profitable sale, identifying right SKU, right market, and working with our distribution partners to make sure that we are well available in terms of our presence and marketing. So I think it's just doing the right things on the brand. Of course, Iconic has been an outright winner. It continues to be second in a row, the fastest selling spirits brand in the world. So that's given us a nudge as well. But the focus has been on driving our P&A sales.
Mr. Gupta, in terms of margins, you ended FY25 with 12%. You're also doing good backward integration, but your marketing spends might go up considering competition plus UK FTA coming into place. Do you think that there is further upside to your 12% margins, or do you think they'll be in the same range of that 12% mark in FY26?
There are multiple levers because of which the margin should increase. One is the FTA. We are one of the largest exporters of bulk scotch, the largest certainly amongst the Indian players. Once the new duty structure is fully implemented, we expect at least a 200 basis point jump on our margins. The backward integration that we are doing in the area of ENA, which is a captive raw material, malt, which is again a captive raw material, and PET bottles should help us again get a bump of nearly 300% in terms of our margins. So our exit margin Q1 FY26 will further increase on back of FTA and our backward integration program.
Alok, good afternoon, Neeraj here. I heard two instances of a margin increase that you spoke about, right? So if you had a 12% margin number, right, in June, you reckon by the end of the year or first quarter next year, you could be maybe 400, 500 basis points higher than this?
So one is related to FTA. So clearly, it's around as and when FTA policy is implemented. So if this was to be implemented in Q4, we should see an immediate impact on our gross margins and therefore on our EBITDA margins. As far as our capex program is concerned, I would say we should see some benefit coming this year because our PET project is taking live next month. Part of our ENA captive consumption has already come alive. But by FY27, Q4 FY27, we'll see the full impact of the backward integration.
Got it. I mean, of course, some of your distilleries are already at massive capacity. I think the Aurangabad one was 100% capacity or what have you. The question that comes to mind is, I remember you making a point sometime that maybe the industry needs to move away from volume of casks sold to some other metric, and clearly a hint towards the premiumization. Now, this FTA and other factors, do they actually give a boost to the premium liquor segment? And do you believe that over a 5-year period also adds to your operational metrics and the kind of growth that you want within your company?
I think I have a short answer. The answer is yes. The luxury segment in India, let's say a price point of 2,000 rupees and above, is just about 3% of the total 410 million case market. So with the price rationalization, I think that the rate of growth of luxury brands will increase and will accelerate, which means from a current 12 million cases, it could well double over the next 4 or 5 years. And that creates a tremendous opportunity for the portfolio that we are building. Now we have 2 whiskies. We have Art House, which is a blended scotch. We have Woodburn, which is a contemporary Indian whiskey. We have 2 gins, Pomori and Zoya. We have a very, very high quality premium dark rum. We're working on a couple of new brands. So over the next 2 or 3 years, we believe that with reasonable market share gain, I think it will have a significant impact both in terms of quality of margin and quality of revenue.
Mr. Gupta, in your May con call, you did mention that if FY26, you're looking at a double-digit volume growth and a mid-double-digit value growth. Is this considering the UK FTA as well, or there is a change in that guidance?
No, the guidance remains the same, and it is not linked to UK FTA because we do expect it will take a bit of time for the UK FTA to kick in.
And how much should that time be? Is there an estimate as to when the perks start to kick in?
Well, from what I heard, that it will take a minimum of 6 months to 9 months. So we are hopeful, fingers crossed, that we will see some benefit of this coming in Q4 of this current financial year.
And considering that, does your capex guidance then change?
No, the guidance that we've given for FY26 is without considering any UK India FTA because the timelines are not in our hand. So as and when the announcement in terms of implementation guideline is made available to us, we will think of what changes are required either in our volume guidance or in our capex guidance.
Alok, I believe one of your facilities in Telangana was to be operational or will be operational in this quarter. The Telangana malt distillery, I believe, was on track for Q4 FY26. Does it still stay on track?
Absolutely. We have two new facilities coming up in Telangana. One is the PET facility where we'll make 600 million bottles annually. That facility comes live next month, which is within the Q2 as we had outlined earlier. And the malt facility, which is India's first single malt distilleries, will come alive in Q4 of this financial year. So we are absolutely on track.
Got it. And Alok, I think you've spoken about this enough, but I still wanted to know the overdues and predominantly from Telangana, right? Now, you mentioned that the situation is improving. Is there an update? This was the last quarter. Is there an update on that?
Well, the update I can share with you is that the status quo. So payments for supply of the month is being released on time. However, we've seen very little movement on the overdue front. We're also hopeful that post the election, the panchayat elections in Telangana, the subject of price increase will also come into attention. And given our scale there, we should benefit in terms of incremental margins. But on the outstanding bit, it is status quo for now.
One last quick question, Mr. Gupta, to you. Maharashtra liquor policy, what's the impact overall on financials?
Maharashtra liquor policy, until and unless the MML, which is the Maharashtra made liquor policy guideline, is not given, it's very difficult to assess as to what will be the final impact in the industry. So we are keenly awaiting guidance and clarity from the government in terms of what it will entail in terms of participating in the MML business. So it's a bit of wait and watch right now.
Okay. Alok, wishing you all the best for that and more. Thanks much for taking the time out and being with us.
Thank you very much for inviting me.
That's Alok Gupta of Allied Blenders, and good quarter. Let's see if this last day, I'm hopeful of the things improving. The stocks come off though, so keep that in mind. 492, it's also had a bit of a rally, you have to admit, over the last 3 odd months. Okay, so that's of course on the liquor side. On the gems and jewelry side, IGI posted a strong Q1, but forward valuations remain elevated, possibly prompting investor caution. Operating margins have declined as well over 3 quarters, while working capital gains spiked to 113. Mahima, you cover this closely. What do people have to say about these valuations?
Right, so even if we take a trailing 12-month valuation, that for sure is expensive at 39 times. But even if you look at the forward P of 26 or 2027, they don't look cheap at all. From a 39 times P, they'll go to around 31 times P by 2027 is what the estimates are suggesting right now. So considering all of this, I've tried to pull out as to what are the things that are kind of, not working in the favor of the company. Although it was a stellar set of numbers in Q1, but operating margins have come down constantly. If we take a look, because they follow a calendar year, December 22, the margins stood at around 68%, which went up to 71% in 2023, came back to 57% in December 2024. And as of first half of 2025, that stands at around 61%. So we'd have to see how operating margins, have remained under pressure. And this could also be because overall certification for lab-grown diamonds is also on the rise. Now, in terms of the overall reports and certification revenue, that has also come off. Number of reports declined by 3% QOQ, and certification revenue has also declined around 2 odd percent. In terms of working capital days, now this has seen a significant rise, a sharp increase there, because December 22, that stood around 28 times, but that's gone to 33 in 2023 and almost 113 in 2024. So that's an important metric to track for sure. In terms of cash conversion also, that has also spiked, because December 22, it stood at around 47. That days has gone to almost 57 by 2025. Lastly, in terms of key risks in the lab-grown diamond certification that they're doing, overall pressure in terms of pricing and product mix is something that could, probably significantly impact the profitability and also impact the realization going forward. And further improvement in quality of LGDs, it's still a debate as to how, they'll be grading those lab-grown diamonds, and that's going to be an overhang for sure for all of these, institutes that go ahead and certify diamonds. In terms of other risks, of course, relevance of third-party certification may go down if lab-grown diamonds really pick up in India. Plus, any technological advancement, which has been the case in this space, could, decrease the kind of external validation that's happening through these third-party certifications. And lastly, competition, of course, is intensifying in this space. So this is with regards to where IGI stands, and a few things to keep in mind apart from, the kind of growth that the company has seen in the past few odd quarters. Kush, I'll come to you on this one. It's come off from its day's high. IGI currently trading at 3% higher, but off completely from its day's high. Is there a trade there?
So, Mahima, there could have been, had the stock actually sustained higher, the 422 resistance, that has been acting up, the stock's actually given it, given up that higher level, as you rightly said, off the high point of the day, which means, there is definitely some supply pressure. I would actually consider this more as a buy on dips kind of a strategy, where if the stock actually does retrace to 405 levels, 400, 405 levels, where the 20-day moving averages, the stock has a tendency of rebounding from there. So if you do get it at a dip closer to those levels, then it might make more sense to buy. Then again, 422 and the high that the stock has made today, close to the 440 mark, becomes your target. On the step down, 385, which is a good support zone, will be your stop loss. So don't buy today. If you get a further dip, then it'll make a more interesting buying or an accumulation entry point.
Okay. Time for a quick break, though. As we hit that break, hear out a slice of a conversation that we had with Mr. Biju George, Director of Shipbuilding at Mazagon Dock Shipbuilders earlier today, and asked him if Mazagon's first quarter earnings had a surprise element in store or not.
The quantum of provisions came as a surprise. However, provision per se was not a surprise because it's in the offing. It's driven by the market conditions. It's driven by the shipbuilding boom, which presently our country is experiencing, as well as also the global boom in shipbuilding. And also contributing negatively to this is the emerging geopolitical scenario, where some of the, especially for export projects, where most of the equipment fit has to be sourced from NATO nations. And these are all contributed for increase in price of this equipment than vis-a-vis what we had estimated. And therefore, we have done a very conservative provisioning. So to ensure that no further provisioning would be required in the subsequent quarters, so that overall on a yearly basis, our revenue and profitability can be maintained and sustained in the levels it was anticipated.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
All right, a flash that went by earlier, Mahindra & Mahindra results are now coming out today and not tomorrow. Remember, tomorrow is going to be a big, I think tomorrow, right, was supposed to be a big results day. Eicher, M&M and TVS and one more. Now I think M&M is coming out today and the stock has shown a bit of a spike. So keep that in mind. Okay, there is some more news flashes. Moil is saying that their numbers are not good. So revenues are down 20%. And bottom line is down even more, as a result of which that stock has seen a 5% downtake. So not the best of numbers, and it's duly showing in the way the stock is reacting. I think I also saw some commentary from KPIT, if I'm wrong, on the flashes, and I think KPIT Tech is saying that their numbers second half could be led by some client spending, and I think KPIT Tech has reacted positively. Hyundai is out with numbers as well. 7.7% downtick in PAT, 1336. I don't know what the estimates were, those come, but be that as it may, the quarter by itself doesn't look very, very solid on the net profit front, at least with this 7.5 or 8% downtick. So that would be probably seen as a bit of a dampener. You know what? I think we should get in Puneet to briefly talk about Hyundai as well as Well, maybe M&M coming in earlier as well. He'll be a happy man. Tomorrow I'll have one less company to track. But just on Hyundai as well, it'll be important to get Puneet. But while we just wait for all of that to happen and keep an eye out for KPIT as well, it's time of the show wherein we get you what dealing rooms are recommending in the session today. So let's get in Somit with all the chatter from the dealing rooms. Somit, good afternoon. What have you heard today?
Well, pharma stocks have been in focus. Aurobindo Pharma, Sun Pharma is a couple of stocks along with Maruti is what dealers are focusing on. They're saying that there are buy flows on HNI and PMS desk ahead of the Q1 numbers. So keep an eye out for these counters. Aurobindo Pharma, Sun Pharma and Maruti. For AU Small Finance Bank, there are buy flows on large HNI desk on anticipation of the fact that the bank might get their universal banking license anytime soon. They're expecting this to come in the next 1 week. For Prestige, dealers are indicating that there are buy flows at lower levels on anticipation of some positive announcement that could come in. For UPL and Patanjali, dealers indicate that there are sell flows seen at higher levels on institutional desks. This could also be because of some profit booking, because of late both the shares were gaining a lot and there could be some profit booking in trade because of which there could be the sell flows. And lastly, when it comes to RBL Bank, the stock has been gaining again. And the buzz on the street is that a potential fundraise announcement could come in anytime soon, and that's the reason the stock is up 2.5%. And one more stock that I would want to highlight here is Saurashtra Cement. That stock is also up around 12%. And the buzz on the street is that a deal might be again back on the table. The company might be getting sold to one of its larger peers, what the buzz on the street is. This has been a buzz for Saurashtra Cement for quite a long time now. The deal again might be on the table, and hence the stock might be gaining in trade. That is Saurashtra Cement.
Okay. Well, so much to unpack. Somit, thanks so much for that update. So 5 or 6 names, keep an eye out for Saurashtra. Maybe those graphics weren't there, but you heard it from Somit. So you get to know that 4 or 5 things to keep in mind. 14% higher for this one. I tell you what, when we go to Kush Bora for a lot of these stocks, there will be a number of things that he'll write down. So Kush, write down Hyundai, M&M, KPIT, Saurashtra Cement and more. We'll come back with all of those with you. But since Puneet is here, let me quickly go to him first, because Hyundai numbers and Puneet, surprise, you don't normally see a company a day before the results come out and say we are declaring the numbers today. Anything that you're hearing on that?
Well, let's start with Hyundai first. That's the easier topic to start with. Numbers largely seem to be in line for this particular quarter, but that's largely in line with estimates. It's still a weaker set of numbers. The revenue was expected to come in at 16,706. They've come in just a tad below that in this particular quarter, while margins were expected to come in at somewhere around 12.2%. It's coming at 13.3%. So it's a positive beat on the margins. In terms of profits as well, profit expectation was largely of about 1,263 crores as well. And here as well, numbers largely seem to be in line with the estimates. But in this particular quarter, the sales were down 6%, and hence we are seeing that kind of impact on numbers as well. And it seems to be like the story similar to last year, where all the growth estimates are largely panned in Q3 near the Diwali season, and the growth expectations will be driven by what happens in that particular quarter. We might see some kind of negative impact on Hyundai because on a year-on-year basis, it's still a weak performance, but largely in line with the estimates, at least on the first 4 numbers.
Okay. Puneet, you know what, I'll spare you the M&M piece because it's almost difficult to know, right, what the company must be thinking. I don't know if you have a thought here or no, but it's difficult to kind of call that. So maybe leave you on that. But thank you so much for... sorry, do you want to say something?
Yeah, just one bit, because tomorrow we actually have M&M along with Maruti, Eicher, as well as something like TVS, and the con calls are also clashing for all these companies. So that might be one of the rationales. But just hearing that the press meet is still scheduled for tomorrow as of now, and the company does hold a press meet as well as a conference call separately with analysts. So as of now, the conference call is scheduled at 6:30 p.m. tomorrow. We might see that shifted to today as well, but that could be the only rationale, because we have too many results tomorrow for the auto pack, and largely today, apart from Hyundai, there weren't any. So that could be the only rationale. So we'll await some more numbers coming for M&M. If it comes before market close, it'll be a good comparison to make, because it'll be very, very strong growth expectations from M&M. A 26% growth is estimated in this particular quarter. Margins as well to do very well. So that could be the only bit, Neeraj.
Okay, Puneet. Keep us updated though if you learn something. I will too if I get to learn something. Thanks for that though. Busy day for Puneet for sure. Sudeep Bandyopadhyay, Johnson. We'll go to Kush Bora on some of those stocks as well. Get to the stock of the day too. But since Sudeep is with us, Sudeep, let's kickstart this. Hyundai, weakish. I mean, nothing kind of a quarter. And then how many times in your memory have you seen a company say that, oh, our results are going to come out tomorrow, we are preponing the release to today? M&M has just done that.
Well, I think that's the first time. I don't recollect.
Exactly.
I mean, you can also add to that. I don't know whether you have seen anything like
No. No, I haven't.
First time I'm hearing this, but I suppose it's a good thing. When the company delays, it's a cause for concern, but they're preponing it, so it's well and good, and I think it gives relief to some of your colleagues. Instead of all getting bunched up tomorrow, they get a little bit of breathing time at least. As far as Hyundai is concerned, I think this was on expected lines. I don't think we will see great set of numbers from any of the 4 passenger vehicle guys, and I think Hyundai is in the same bracket. Yes, it is by and large in line with what was being expected, and that's about it. So nothing really to talk about. Let's hope for a recovery during the festive season, and probably numbers will be good. If there is a management commentary coming somewhere, we will be carefully watching that.
All right. Thank you so much for that, Sandeep. But the stock of the day today most certainly is Avenue Supermarts. The kind of spike that we've seen in the stock since the con call began is just amazing, because it's seen a spike, and it's the kind of momentum the stock has seen has continued throughout the day, up 7% as we speak. And this is because management has shown confidence in the con call, and this is a yearly con call that they do every year. Just to give you key takeaways on what the management has said, I've divided into different parts. On demand, they've said they've continued to see consumer demand going up both in rural as well as urban areas. DMart is not just for middle class, is something they've said, and DMart Ready is targeted towards shoppers who are not price sensitive. So this is their aim and their motto with regards to where DMart Ready stands. On quick commerce competition, they've gone out and said they've continued to remain bullish on the brick and mortar model, no matter how competition is faring when it comes to quick commerce. They will work on an online model, but something that works for them and something that matches their ideology is what the management has gone ahead and said. In terms of the overall picture in quick commerce, they're saying that the best way to face quick commerce is by adding more stores. So they're going to be more aggressive in terms of store addition. They're not seeing any financial metrics deteriorating because of competition that the quick commerce is giving overall, is what the management has clearly said in their con call. They've invested in cities to improve experience where quick commerce is going aggressive. So that's something they've acknowledged, that yes, there is competition, but this is the way they will compete and combat the competition. They don't want to get into 30 minutes delivery race, is something that they've made very clear. They believe that we'll prefer value, giving value to customers over a quick delivery. In terms of overall store expansion plan, they've said that they plan to accelerate the store additions. They target 10 to 15% of annual store growth, and doubling investments in new store is something that they're aiming at, and that they've also proved by recently putting up a big store in UP as well. In terms of DMart Ready, they've said that they're set to expand where there is customer demand for DMart Ready, because they are customers that are less price sensitive. They aim for 3 to 6 hour delivery, not a 30 minutes delivery, and higher customer stickiness is seen in DMart Ready as compared to where the competition stands. In terms of state expansion, they're saying that they're entering new states, and this is not something that's challenging for them. So they are comfortable when it comes to expanding into states like UP as well. And lastly, in terms of private label, clearly again here they've said that they will not focus on growing their own private label as a brand, but focus on business growth overall. So that's the overall view of what the management has said. Kush, I'll come to you on this one. I believe the kind of positivity that we've seen in the stock is because management has shown confidence that no matter what, we are going to grow. And that positivity we are seeing in the stock, and this is after a long time for Avenue Supermarts. What is your reading when it comes to the charts? Is there a further momentum that you're seeing there?
In all likelihood, there could be Mahima further upside, because if you see, the stock's actually been in a range where about 4,039.50 on the downside has been tested multiple times, in this calendar year itself, and then the stock's rebounded from there. Yet again, you've had the stock rebound from precisely those levels. Now, as I mentioned at the start of the show, 4,500 seems to be a bit of a resistance, a mild resistance, something that the stock's not been able to take out this calendar year. But with the kind of momentum that it's got today and a few technical parameters that the stock has checked, if this 4,500 level is taken out, then you're looking at 4,750, 4,800 kind of upside moves as well. Despite the kind of move that the stock has seen today, it's far from overheated territories on any kind of time frame, be it daily, weekly. So yes, there is steam to this upside. The immediate level to watch for would be 4,500. Beyond that, 4,750, 4,800 also.
And what about M&M and Hyundai, both one after the other, or any counter in specific that you're liking in the auto space apart from these two?
So M&M looks good. The reason is that M&M has a tendency of consolidating, dipping towards the 20-day moving average and then rebounding. Today also, if you see, the stock breached that 20-day moving average support, but on the back of an early release of its numbers, the stock's actually regained that level. So I think even if the momentum is a little slow, you want to add counters like M&M to your portfolio, to your trading positions when the consolidation phase is on, rather than once they give you a breakout and then you have to chase momentum. So M&M looks good. On the downside, you've got today's low, which incidentally happens to be the support zone for the medium term. So 3150 as your stop loss for the recent swing high of 3,300 and 3,450. M&M does look like a good play. As I said, maybe the momentum's a bit slow, but the trend from a near to medium term perspective is surely upwards.
Okay. Interesting names out there and interesting moves out there on a lot of specific stocks today, but autos certainly remain in focus. I heard Sudeep mention that not too many of the auto names will have a good number. Sudeep, there is a chat going on, or talk going on, that Maruti might actually surprise on the upside. If that were to happen, what would you make of that? Would that make that stock interesting, or could it be one-off?
Well, it will definitely be interesting. I think the way the markets were positioned, the demand scenario was in rural and urban India, particularly amongst the, I would say, the value-conscious customer segment. I think it will be a pleasant surprise if Maruti comes up with a number which does surprise the market. I am looking forward to the festive season pickup in demand, and I do believe that's going to happen. There are, good monsoon is around us, and that should help the demand to pick up based on all the other parameters going right. Global Indian interest rates are coming down. That should help. So yes, second half of the current fiscal, I'm looking forward to a better situation as far as passenger vehicles are concerned. But this quarter, I'm not really as much hopeful, and anything better than what is being expected will be a pleasant surprise. Remember here, we are not talking about SUV, we are not talking about tractors, because that's Mahindra, that's not Maruti, that's not Hyundai.
Got it. By the way, just before we get to Mr. Nalin Gupta, I just want to mark KPIT numbers that not very inspiring. The stock is maybe up slightly, but the numbers are okay. Flat revenue picture. EBIT fell about 10.7% quarter on quarter. EBIT margin down 200 basis points at 15.5 versus 17.4. As a result of which the bottom line is down 30%. And there are some one-offs as well, of course, but still, EBIT is down about 10.7%, so keep that in mind. But I think they've done this tie-up with JSW Motors, and I think which is what has led to the stock doing what it is doing. EBIT margins not looking all that solid, but the stock, after having corrected a bit, is just kind of moving slightly higher. Sudeep, any quick thoughts here? KPIT Tech, do you track it?
I do, and I think they're doing the right thing by tying up with OEMs, and that should, in the long run, help them in a big way. Yes, I think the results are nothing great at this stage, but I continue to maintain my positive view on KPIT Tech.
Okay, positive view on KPIT Tech. Remember, the stock has corrected quite a bit, but let's see how it does ahead. Now, let's welcome in on the show Nalin Gupta, MD of J. Kumar Infra Projects, wherein their numbers, well, you couldn't find too many faults. Revenues up 15%, EBITDA up 17.8%, margins expand about 220 basis points, as a result of which the bottom line expanded by about 19 odd percent. Nalin, good having you. It's been a while, but good talking to you. How would you sum up the quarter in line with what you had estimated? Because we had heard murmurs of some spends, at least on the NHAI highways being low, maybe not MMRDA, but did that have any bearing on the kind of execution or order inflow that you had to do?
Well, so I would say that in terms of order book, I would say it was in Q1, I would say it was a little bit on the slower side. And but the target of the company to bag orders worth around 6,000 crores for this fiscal year. We are very comfortable and sure about bagging this order. And in the Q2 itself, we should be seeing orders nearly around 2,000 crores is what we are expecting. So I think in terms of the order book, we should be able to match the requirement that we are looking for. And of course, that's being the minimum requirement of the company that we are targeting at. For the execution, we cover up with the new orders. But we are looking for good orders, but also with the margins that the company intends to. So we don't intend to, really book orders just for the heck of booking orders without good margins. So that's the reason. But overall, I think the infra sector is doing really good. And going forward in this coming quarters, I think there should be good inflow of orders happening. So we are quite bullish about it.
Nalin, I'm just looking at the data that my colleague has provided to me. Your order book, I believe, stood at about 21,000 as of June. And
That's right.
I hear you say that you are looking to only bid for projects which have good margins. And,
That's right.
And she tells me that the bidding target for FY26 is about 20 to 25,000 crore rupees worth of projects. So you're saying
That's right.
there is almost an equivalent amount of your order book, existing order book of projects which are available to you at good margins.
That's right. So if you talk of order book, it doesn't mean that, the new orders, if I'm bidding for 25, 30,000 crores,
you will get them, yeah.
The order.
Agree, you will not. Huh?
So that's the reason. So even 25, 30% of the order book, if I clock, I'm covering the target that I'm intending to.
Okay. In terms of your, Mr. Gupta, hi, Mahima also joining. In terms of your key projects, what are the kind of new opportunities that you're looking forward to in, let's say Mumbai Metro or Pune Metro? And you said, correct me if I'm wrong here, you said the kind of conversion that you're seeing on your bidding pipeline is roughly 25 to 30%. Is that reading correct?
Yeah, you can broadly say that because it's like you keep bidding for different jobs. And depending upon the nature of job, depending upon the geographies, the competition level keeps changing. But the core competence area of J. Kumar being into elevated corridors, into road tunnels, into metros. So these segments, we stand at a very comfortable and a very strong position in terms of competition as well. So currently that we can see like Bombay Metro is going to come up with line 10, line 11, line 13. Thane Metro has already floated their elevated corridor tender, which we are about to bid in a month's time. Again, we have recently bidded for Pune Metro, which should be seeing the price bid happening in the month of August itself. And again, we are bidding for Delhi Metro. We are bidding for some elevated corridors for MCGM, for MMRDA. So these are the recent ones that we'll be going for. But in a long-term perspective, if you look at 6 to 9 months' time, there are various other metro projects as well as the elevated corridor, which includes Daisar to Virar, which is the elevated corridor which MMRDA is reworking on it. So that project is also about to come. So there are a lot of as well as NHAI and different metro sectors. So we are very hopeful about the order book that we should be able to back.
Any kind of execution delays that you're seeing here? Last time, if I'm not wrong, in your con call, you had said Delhi NBCC project was the one project that got delayed. Is that on track now? First question, and any other projects that you're seeing delaying, especially in the water segment?
Yeah, so I would say the entire order book of 21,000 crore is well on track. Only a 350 crore, as you have rightly said, the 350 crore Harinagar tender of NBCC is on a slow track, but we expect in the month of September or October, we should be seeing some traction in that project as well. But it's a very small size of project for us to be really worried of.
And what's the update with regards to where fundraising is something that was on the cards, and what will that fund that you're raising be used for?
Well, so currently we have passed an enabling resolution with regards to fundraising, because we don't want to really fully bank upon debts, and that's how we have thought of it. And there are some, looking at the futuristic opportunities that we are seeing going forward, and the big size ticket projects which are coming up. We have thought of it, but we are waiting for the right opportunity and right time. So let's see how it goes.
Okay, Nalin, one final question, and I'll end with what I had started off asking you. Do you believe the ordering activity looks poised for a company like yours, which has a higher base now, to clock in, let's say, anywhere, I mean, whatever your CAGR number might be, but like a particular percentage of compounded annual growth rate over the course of the next 2 or 3 years, and what would that number likely be?
Well, so if you look at the growth rate, we target that minimum 15 to 16% growth rate we look at. And so the current year, we should be clocking in top line of close to like 6,600 crores, and followed by FY27 of nearly around 7,500, broadly you can say. So if we talk of, it would be like a minimum 15,000 crores or 12 to 15,000 crores of order book that we should bag in these 2 years. So I would say if you look at FY24 itself, we bagged orders of more than 10 to 11,000 crores. So bagging this size orders, you have to basically, when firstly there was a little slowdown in terms of the government inflow of new orders, but with the current internal informations that I keep gathering from various departments, there is ample amount of works that will be floated in a year's time. So I'm very, very, confident that bagging 15-20,000 crores of orders in this coming next 2 years is absolutely not a matter of concern for a company like J. Kumar, with the construction expertise, financial discipline, and core competency in these areas. I think it's merely a matter of time to get this achieved.
All right, Mr. Gupta, thank you so much for those insights, and thank you so much for taking out the time, and all the best for FY26.
Thank you very much.
All right, Sudeep, I'll come to you quickly on J. Kumar Infra. Any view there, and any player in specific that you're liking in the infra space?
Well, a couple of things. I think, when you hear the management talking, and when you hear and understand what's happening all around us, I think there's no dearth of orders. These companies who have been there and are delivering projects, there'll be no dearth of orders. All of them will get tons of orders, which I think their success will depend on execution and maintaining a decent margin. We have to focus on that. We have to focus on execution and the margin profile of the players. And that's where I sometimes I'm a little careful about the smaller players. I'm not talking about J. Kumar Infra. I think they have been doing a decent job, and I think they have the potential to significantly do better from here on. So yes, from somebody wanting to take a little risky bet on infrastructure, J. Kumar Infra can be acquired. But if I have to recommend one share to investors, I will go to the big daddy, which is Larsen and Toubro. Look at the numbers, look at the order size, look at the the delivery track record. I think if you want to play safe, I think Larsen Toubro is the player to look into, because the margin profile is also changing. This quarter the margin which they declared yesterday was nothing great, but they're given a guidance of steady progress over the next few quarters, and they've maintained their margin guidance for the year.
The stock is up 5% as you speak, Sudeep. Kush, I'll quickly come to you on Redington. Anything that you're seeing on the charts, because the stock is tanked on the back of its Q1 earnings. But what are the kind of support and resistance levels that you're seeing for Redington?
So immediate support for this one comes in at 255. That's where the stock had taken support a couple of times before rebounding in the past. So maybe that's the level to look for. But even if it does take support at that level, I won't really be jumping in to buy at around that level, because this might perhaps see some more sideways consolidation. And if 255 is broken, then you're looking at 237, which is a 200-day moving average, as the next level of support. So yes, don't be in a hurry to buy if at all, and look for these a couple of crucial levels as support. See if the stock actually consolidates around around those levels, but don't be in a hurry to jump and accumulate.
Okay, Kush and Sudeep, thank you so much for taking out the time and speaking with us at NDTV Profit. It's time to slip into a very...
Just before I get into break,
Yeah.
just wanted to mark that the market has stayed almost at the same level. Volatility is down 3%, it's staying that way. Nifty Bank is flat, IT is about a third of a percent. There is virtually no movement in the market. It is very, very listless and clearly showing that ahead of the Fed decision, the market doesn't want to do too much. I would doubt that the next half an hour has some very brisk moves. So it could be interesting to see though.
Absolutely, and that's something that we'll wait and watch out for the next half an hour. But like I said, it's time to slip into a very quick break. On the other side, we'll get you top buy today and sell tomorrow call. So do stay tuned.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Back with India Market Close right here on NDTV Profit. Now, a conversation up next is with somebody who's had about 50 plus strategy meetings in the month of July with clients and funds across Mumbai, Chennai, Hong Kong and Singapore. And I think the takeaways from some of these could be very important from an investing framework setup perspective. Gautam Duggar, who's done all of these meetings, head of research at Motilal Oswal Institutional Equities, with us on the show. Gautam, good having you. Thanks for taking the time out. I hope all is well. Now, before we get into the nitty-gritties, Gautam, simple सवाल ये है, meetings के बाद mood bearish है कि bullish है?
Hi Neeraj, good afternoon. Thanks for having me. I wish I had the black and white answer to that question because the kind of market that we are in, it has left everyone perplexed. Last 12 months you've gone everywhere and ended up nowhere. We are at the same Nifty level today, virtually where we were 1 year back, despite all that has happened in this world. Geopolitics, tariffs, war, all sort of things have happened. The moot point is that the market broadly respects corporate earnings. It's very much evident. Last 12 months, your earnings growth was very tepid. You hardly got a flattish earnings. Markets have also been very flat. Of course, there have been stock-specific, sector-specific, returns which people would have met. But at an index level, we've done nothing. Right? As we move forward, there is a hope that earnings will recover a little bit given the steps that the government and RBI has taken, and therefore the markets will find new legs to run on once we are into the second half. That's the usual hope that we always have when earnings don't come, that first half nahi aaya, second half will come, and festive season will bring some cheer, and then earnings will recover, and hopefully the markets will pick up. But yeah, I mean, the mood is very, very balanced. There's neither too much bearishness because liquidity is not allowing the market to fall. For 6 months, you got $43 billion of domestic money. Last year, CY24 was 63. So between 18 months, you got almost $105 billion of domestic capital. Against that, foreigners have sold close to $8 to $9 billion. And you've seen a lot of supply also through QIP, blocks, IPOs. So market has treaded water, not gone anywhere, and it's waiting for earnings to pick up.
So Gautam, here's the question, right? With all that has happened, the capex push, everything else that has happened on the fiscal side too, and the monetary side, right? What's the case for a 5% earnings growth? I mean, why should earnings growth be only 5%, considering that it's not that FY25 was a gangbuster year, right? It was a very, very ordinary year. Why should the market only grow 5%?
So no, our expectation...
earnings, I mean, sorry.
Yeah, absolutely. Our expectation on earnings is 10 to 11% for Nifty for FY26. In the first half of earnings season, that is till yesterday, we already cut the forward earnings by 1.5%. So we are down to 9.5%, 10% earnings growth for FY26. If we see the things picking up in the second half, hopefully there will not be any more cuts. But Neeraj, please understand sector by sector. You have two big sectors, banks plus IT, which contributes anywhere between 45 to 50% of the Nifty profit pool. And they are not doing much, especially large cap IT has literally thrown in the towel at 4-5% earnings growth. Banks, because they've had a phenomenal last 6-7 years. I mean, I never tire of pointing out that in FY18, the total banking profit pool of financials profit pool for our coverage universe was 49,000 crores, which in FY25 became 4,93,000 crores. Now, on that base, with best of the asset quality behind and incremental credit cost not helping much, and your credit growth still trending in 10-11%, and at the margin you have rate cuts, so clearly the pressure on NIMs, the pressure on PPOP growth, very much evident there. First half, in fact, we're expecting banking earnings to be down, right? So two big sectors not helping the cause. Then you have consumer staples, where you've seen some of the results which have already come in Asian Paint, Nestle, Colgate. Earnings have declined for all three, right? So clearly, 3-4 big sectors are not firing. That's the case for this quarter. And our expectation for FY26 is also that the big sectors will find it very difficult to grow. You can add auto in that, right? Even though auto we've turned more bullish versus where we were 3 months back. But the fact of the matter is, whatever 10-11% growth that we are penciling in, it is coming from small sectors like cement, capital goods, a little bit of consumer durables, EMS, pharma. But the big sectors are not doing much. The likes of banks, IT, consumer, auto, they are not firing. And commodity, where the expectations are very high, you never have visibility there beyond next 3 months, because the underlying commodity prices play a huge role in deciding the commodity earnings. So the construct of the index is such that while you would scoff at 10% earnings growth number two, but that's the kind of reality that we are right now living in, with sector specific nuances and context deciding the trajectory of index earnings.
Mr. Dukar, hi, Mahima this side. While I was going through your note, you've said that both value and growth investors are going to find it tough. So my question to you is that generally, when one goes and picks a stock, there are certain traditional qualitative and quantitative attributes that one looks at. That is your return on capital, pricing power, management quality, etc. But considering that it's going to be tough for both of these kind of investors, when you're saying that one needs to be very specific when it comes to picking up stock, what would you focus on when it comes to your term as stock picker in this market?
So Mahima, look, we all have been used to this term, stock pickers market, bottoms up market, the very cliched terms. But the reality of the market is, this market has become a stock pickers market because the growth is very modest, right? And the dispersion of earnings growth within the sector and across the sector is very high. I mean, if you chosen a right sector but a wrong stock in that sector, you've not made money. I mean, IT being a very clear case in point for last 3 years. If you are positive on IT but we are concentrated on large cap IT, you made nothing. Infy, TCS, they've done nothing last 3-4 years on a compounded basis. But if you had positions in Coforge, Persistent, Hexaware, all of those stocks, you outperform significantly. That's the case for consumer too. If you are in consumer staples and not in consumer discretionary, your portfolio would have underperformed. So sector after sector, you're finding those divergences, both in stock price returns as well as the earnings growth, right? So what we do, I mean, what do we do? What did we do in our model portfolio a couple of weeks back? We've increased the allocation of mid and small caps in our model portfolio. In April, we had 76% allocation to large cap. Today, we have brought it down to 69%. And again, when you talk about mid caps, it's very misleading to talk about aggregates or index. Mid caps are generally bottoms up and very company specific factors. So, I mean, if I were to tell you that we are expecting 19% earnings growth today for our mid cap coverage universe of 100 stocks in an environment where nominal GDP is going to grow at 9%, it is very difficult to marry the two arguments. But then in mid caps, you have very specific company specific nuances and factors which are at play. So what we've done in every sector barring banks, we've increased our allocation to mid caps. So we've removed Hindustan Lever. First time we have zero consumer staples weight. We've reduced weight on Reliance. We've removed Trent. We've removed Tata Steel. We've removed ABB, right? We've doubled weight on Suzlon. We've added Radico Khaitan, Jubilant Foodworks. Some of these niche names across categories, like we've added Jindal Stainless in place of Tata Steel. So the approach is to focus on mid and small caps, so the earnings growth is going to be slightly better. And therefore, despite expensive valuations of mid and small cap indices, if the growth differential is 2x between large and mid cap, which is what we expect this year to be, large cap at 8 to 10% growth and mid cap at 20, then this valuation premium could sustain. That's the hope. And of course, we are also banking on the fact that the domestic money keeps pouring in. Of course, that's not a very, you don't make an investment case basis liquidity. But yes, if the liquidity is bountiful, it obviously helps the matter when you're talking about mid and small caps. That's been the case for last 2-3 years. So combination of earnings growth visibility, and every sector you have to go stock by stock, and then you obviously hope that those earnings don't get downgraded. That's the approach we followed in our model portfolio construction this time. Net, we have increased the component of mid and small cap in our model portfolio by 700 basis points versus where we were in April 2025.
Okay, Mr. Dugar, thank you so much. That's very insightful. And it's interesting when you said that, despite of expensive valuations, earnings could be better in the mid cap and the small cap space. Thank you so much for giving us those insights and taking out the time and speaking with us at NDTV Profit. It's interesting, we've always talked about bull and bear. I think we need to find a third animal which says it's a neutral set of market that we're looking at. And that's been the case for markets for a long time now. But time for our bull and bear segment. The stock in focus today is Triveni Engineering, which saw a revenue uptick in Q1 earnings. But overall, the kind of moves that we have stock, it's cooled off, of course, a tad bit, but the stock is still seeing a downtick of around 6% in trade today. We have Varsha joining us with a bull and a bear case on this particular counter. Varsha, what are you picking up?
Well, thank you for that. So yes, overall weak set of numbers is what Triveni has posted, and that's the reason you're seeing pressure in the stock. Though there was a revenue uptick which was led by alcohol dispatches and good sugar realization and of course consolidated sugar dispatches. But if you see margins were lower. Now this is due to rise in other expenses and employee expenses. So though there was a revenue growth, but the operating profit did not do well when it comes to Triveni. If I were to talk about the segmental side, how each segment performed, if you see sugar revenue grew 17%, which was led by good volumes and good realization when it comes to sugar business. But sugar PAT, if you see, was down 80%, and that's one of the reasons why overall on a consolidated level, if you see, the PAT was down 95% because your sugar PAT is down 80%, which was due to higher sugar cost. Then if I were to talk about the alcohol business sales volume grew 53%, but the average realization for the same was down 2%. So onto the segmental, if there is a positive point, there is a negative point too, and that's the reason why overall the numbers were not good. On the power transmission business, if you see, the order book grew 15%, which is a good one, but the revenue on the same fell 8.2%, and the profit before tax fell 33%. Water business, if you see, closing order book grew 31%, which was again a good thing for the company. But if you see, order inflows declined almost 58% for water business. Onto the valuation side, if I were to talk about, on the good side, if you see 1 year forward PE, and now this is according to Bloomberg standard, around 15 times, which is in line with the 5-year historical average that the company has seen. But current PE is at 90% premium when it comes to 5-year average. So overall, the current valuations are also high, and overall, if you see a weak set of numbers because of the not good performance when it comes to sugar business, and that's the reason why on the consolidated level you're seeing pressure on the financial numbers. Lastly, on the street cred, if I were to talk about, there are 3 buys, 1 sell and 1 hold, while the return potential for the overall business stand at around 43%.
Thank you so much, Varsha, for bringing us all those details. It's the sugar segment that's kind of weighing on the counter. Let's also welcome in Shivangi Sharda of Motilal Oswal and Amrish Baliga, independent market analyst, joining us now. Good afternoon to both of you. Amrish, I'll come to you first. Your view on Triveni Engineering. It's a sugar segment that's been an overhang for the counter, down 6% today. If you had the chance to see the numbers, what's the view like?
No, in fact, I don't track Triveni Engineering, but sugar sector overall, I would still continue to be positive, especially looking at the way ethanol growth is happening across the sector and the sort of margins which they're making on ethanol. My best pick in this sector clearly is Balrampur, which is among the larger ones in this space.
Okay. Shivangi, are you taking any trades on the indices per se, or are you sticking to stocks ahead of the Fed meet?
Very good afternoon. Thank you for having me. So we've of course seen that the bulls have come back in action, and we are seeing consolidative phase. But overall, there has been good support taken from the lower levels for the indices. Overall, of course, we are heading into some global cues which could affect the market opening. But I am, seeing that overall the derivatives data points are showing some sort of positiveness. Of course, there's monthly expiry tomorrow, so volatility will be expected ahead of, the monthly expiry. But overall, we are kind of going for buy and decline strategy with next immediate targets of 25,000 and then 25,200 with a support of 24,700 levels on an immediate basis for this July series expiry.
Shivangi, your picks for this afternoon?
So stock specific, I'm looking at PI Industries, which has given excellent follow up after the breakout of the consolidation, and it's taken support exactly at its 50 daily exponential moving average. In fact, even on the monthly basis, it has been making higher top, higher bottom from the last 4 consecutive months. We've had this stock closing in green month on month basis, so definitely strength lies here. And the kind of follow-up that we're seeing in today's session and the kind of closing that we are heading into for this stock clearly indicates that momentum is to continue even for the next few sessions. So recommending a buy here with a target of 4,500 levels and a stop loss of 4,250. So.
Okay. There were some flashes on BEL, right? They are in the, development phase of the Kusho project and in a clutch of other things that they have mentioned. They have received some emergency procurement orders as well, which is a good sign, and a clutch of other things that have come out on the con call, even though the stock is absolutely flat, Mahima.
I think the orders that you're talking about are worth 550 odd crores. Major orders from Optronic System for aircrafts and other is what the exchange filing is also saying. In terms of the overall con call highlights also, I think the stock is not reacting much to that. If I'm trying to pull the lines up, overall margins have been at 27% in line with what the guidance was. Gross margins higher due to better composition of product mix is what the management is saying. In the next 3 to 6 months, they're expecting considerable subsystems order from the shipbuilding side is something that's being highlighted in the con call. But some of the stocks which are buzzing on the back of Q1 earnings are Tips Music, New India Assurance and Gallant Ispat. Vansh is joining us with all the details on these 3 counters. Vansh, what are you picking up?
Right, so the first on my list is MOIL. Now the company has reported a set of numbers. The numbers are muted on all the fronts. There has been a sharp cut in the margins and the profit has been dragged by the weak operational performance from the company. And the mining revenue has declined 20% on sequential basis, and the revenue from manufactured products has also declined 19% on sequential basis. If we talk about the financials, the revenue is down 19% at 348 odd crores versus 433 crores. EBITDA is down 43% at 79 crores versus 140 odd crores, and the margins are at 22% versus 32.2%, and the net profit is down 55% at 51 crores versus 116 odd crores. Second on the list is Gallant Ispat. Now the stock is trading at its all-time high, and the profits have been surged to 174 odd crores, and the profitability is being driven by the improved margins and the operational performance from the company. Third on the list is New India Assurance. Now, yes, there has been an unfortunate incident involving the Air India flight, and this has adversely impacted the results of the company. The Q1 premium is up 13% to 13,300 odd crores, and the health segment experienced a higher loss ratio for the company. So these are some of the stocks that are buzzing in trade today.
Yeah, well, serious moves there. Vansh, thanks so much for that. Serious moves for New India Assurance. Amrish, I don't know if you got a chance to look at these numbers, but 18.3% higher is the stock now at the high point of the day.
No, that's true, but at these levels, I'll not really buy fresh into that because clearly the losses are going to hit them sooner than later. Although the premiums are much higher than what we saw last year, but then I think it's already there in the price. So at these levels, I'll not really buy fresh.
Okay. For people who are tuning in right now, amongst the key movers is also Avenue Supermarts. We spoke earlier on the show about it, but Amrish, you would have definitely looked at this. Good to invest into from a 2-3 year perspective, or would you choose some other retail outlet or maybe the online retailers?
I think the online retailers could be the ones to be looked at because DMart, like Avenue Supermart, has already played out. I mean, they were one of the best sort of players like about 8-10 years back, and I think that's played out post the IPO. But what we are seeing in the last couple of quarters is that the same store growth is not really picking up. I mean, the growth is coming from more of new stores. And again, in the like overall, if you see the sort of margin pressure which is there, especially on the textiles side of that, because the margins normally come from the textiles and I mean home apparels sort of a business where Zudio has taken the lead. And that's affecting Avenue Supermart. So, I mean, at these levels, again, I'll not look at buying it. In case people have and been holding for a long time, I think it's a good time to start booking profits.
Good time to start booking profits. Okay, that's not the case that investors are probably doing today. It's completely a buy situation. They're up 7% almost where Avenue Supermart stands. But another gainer, and that's the top gainer on the Nifty 50 today, that's L&T, on the back of its earnings. Now revenue in line, net profit did beat estimates on account of higher other income as well. Order inflows remained robust, up 33%, as well as order inflows aided the strong traction in hydrocarbon business in Middle East. Order prospects pipeline also raised 63% YOY to almost 15 lakh crore, and net working capital has declined 10%. In terms of guidance also, management maintains the FY26 guidance. Order inflows expected to grow around 10%, revenue to grow around 15%. Core margins expected to be in the same range of 8.3 to 8.5. Order book outlook, they've said that overall order prospects raised to 15 lakh crore for remaining 9 months of FY26 is what the management has said. Brokerages have fairly, maintained the target prices or maintained their stance. But Shivangi, I'll come to you on this one. On the charts, how is L&T faring?
Of course, this has been the star performer of the day, and we've seen that there has been over 20% shorts that have been covered in today's session itself. So overall, the stock is, poised for a good up move here onwards. But we've seen that on a weekly basis, it's wiped off its entire losses of the last 4 weeks, and on month-on-month basis, it's now coming to be positive. So very sharp comeback of the bulls in the last 2 sessions. Of course, we've moved a lot in the last 2 days. So till the time the stock holds above 3,600, then we could expect the momentum to continue towards 3,800 levels. But 3,600 will be an important support to watch out, which will be a make or break zone for this one as well.
Okay, and meanwhile, on the earnings call, L&T's CFO Shankar Raman addressed the margin outlook for Middle East projects, highlighting that the company sustains a 20 to 25% win rate with repeat customers. Listening.
If we can get a sense in terms of margins that we can have over these next 2 to 3 years in terms of improvement. Along with that, just wanted to understand the overall win rate that you have in these Middle East projects. If I'm not wrong, according to the last con call, 20 to 25% is the range that you have.
Yeah, that's right. 20 to 25% is the win rate. And increasingly, I think the more successful we are in completing projects and handing over to the customers, most of the customers are repeat customers, as you might know. So to that extent, I think the customer confidence and the customer intimacy increases. Margin is a function of point-in-time execution matter. Very difficult to say, no, we'll make 10%, 11%, 12%, etc. Sitting far away from the date on which you have to complete these projects. It also depends on the level of competition, which keeps on changing in a year-on-year basis. And it also depends on the type of projects, because just as I spoke in the context of our boiler turbine capacity being almost full up, most of the equipment suppliers and suppliers globally are also quite full up. So to that extent, I think the time it will take to source the equipment, the cost at which we will be able to influence the pecking order in terms of delivery, etc., all of that will have a play in margin. Directionally, I can tell you that if the growth continues the way it is, the margins will improve.
Okay, some active movers: Transrail, Sumitomo Chemicals, Omax Auto. There are some stocks which are actually doing well for themselves. 5% higher for Transrail. Beautiful chart there, by the way. But look at Sumitomo Chemicals. That's been a trending mover, up 8%. Omax Auto too has had some fabulous moves in the session today. So keep an eye out for some of these. Shivangi, any thoughts here? I mean, Omax is up 20%, so I don't know how much, but good volumes there, by the way, 4.5 million. But Sumitomo Chemicals, Omax, etc. Any thoughts here?
Now, of course, these stocks have done quite well in the last two trading sessions. And in fact, this entire space has got a little bit of, sector tailwind, which has helped most of these stocks in this counter. But, looking at this stock, we've obviously surpassed its previous hurdle of 618 levels. And till the time it manages to hold above 650 levels, we could see an upside towards 680 odd zone. So this would be the take on this one.
Okay. What else? Well, we've spoken about the key winners, of course. I think the losers include a Reddington, which Mahima highlighted earlier. A Zentech, JM Financial is corrected a little bit, and Tata Motors is closing in at the day's low. So, well, okay, quick question to both Shivangi and Amrish. Shivangi, if somebody was short Tata Motors this morning, go home with the short positions?
So looking at auto space, these stocks haven't moved much off lately, and we've seen Tata Motors has broken a important support of 670. So I think there is room for a little more downside over here.
And Amrish, since a lot of auto names came out with numbers, I'm inclined to ask you, any that you're watching out for in terms of results or maybe an investment case?
No, I mean, I would surely talk about Tata Motors. I mean, like normally, whenever we have seen huge investments being made, I mean, we have seen that correction. But then, I mean, we have seen what's happened to the JLR deal. I mean, from where I mean, the performance has improved so much from where it was. I don't think one needs to be so afraid of this Iveco deal. So in case we see Tata Motors correcting to levels of about, say, 640, 650, I think it's a good time to buy from a longer term perspective.
Interesting. Okay. Amrish, thank you so much for joining in today. Shivangi, thanks to you as well for taking the time out and being with us and giving us your ideas. Really appreciate your time. As we start wrapping up the markets, over to Mahima. And Mahima, flat day and flat close.
Absolutely. Flat day and flat close for sure. The Nifty 50 in the same range as to where we started the show at. Same with the Bank Nifty, pretty much flat and hovering. In fact, Nifty Bank slightly has come down, but Nifty 50 in that same range of 24,850 odd levels. Let's also take a look at the Nifty heat map. Probably the same picture there as well. L&T leading the chart, up 4.6%. Sun Pharma, Tata Consumer, NTPC, Maruti Trend, some counters doing well in trade today. Tata Motors seeing significant amount of pressure, and that pressure has continued throughout the day, down 3.5%. For Hero Moto, Power Grid, Bajaj Auto, a lot of auto names under pressure. Eternal sees some losses today in terms of the counter, down by about 0.7 odd%. Let's take a quick look on at the advanced decline ratio, because the broader end of spectrum, there's lots happening because of earnings. So there you go. It's come down to 1:1 almost, because narrowed down to that end. 1100 odd declines, 1100 odd advances versus 1000 odd declines. So that's where the advanced decline ratio stands. Let's also pull up the sectoral heat map and see the sectors. Nifty Infra continues to see the gain. Nifty IT has inched up 0.24 odd%, 2.22 odd%. FMCG seeing gains of about 0.2 odd%. But overall, Nifty Realty continues to be under pressure, down by about 1 odd%. Nifty Media down 0.8%. PSU Bank also down by about 0.7 odd%. Let's also take a quick look at the broader markets, the mid cap 150 and the small cap 250. There you go. Mid cap 150 seeing gains of about 0.12 odd%, and the small cap 250 down by about 0.14% at its day's low point as we close for the day. Let's take a quick look on the BSE 500 and the counters that have seen gains today. Birla Corp, Reddington down 7 to 8 odd% on the back of earnings. 5-Star down 5%. Blue Dart also down by about 5%. But a few gainers on the flip side. Avenue Supermart stealing the show, up 7%. New India, top gainer throughout the day, 17% up. Sumitomo Chemicals up 7%. Jubilant Pharma as well as Craftsman Auto seeing gains of about 6%. But what to watch out for tomorrow? Let's try to pull that up. Couple of things, of course, US Fed press, the most important thing to watch out for, the kind of commentary that will come in. There's also Japan industrial production data that will come out, corporate actions, dividend for all of these companies, V-Guard, IG Petrochemicals, TTK, Prestige, and there is also Pratap Snacks and United Breweries that will trade ex-dividend tomorrow. This is an important one. Shares to exit anchor lock-in. Ather Energy around 6% lock-in ends tomorrow, so movement in that counter could also be seen. Post-market hours, some important earnings. M&M that changed their earnings to today. Tata Steel, a big one. Interglobe, a big one as well. IGL. There's also V2 Retail to watch out for, and something like a PTC India, Indus Towers, big names, Sagility India to watch out for. But earnings tomorrow to keep your eye on. Coal India will be a big one. Dabur will be a big one. HUL, another big one. Some big names in auto as well as FMCG will come out. In terms of auto, there will be TVS Motors, Maruti Suzuki, as well as counters like Eicher Motors will see their earnings. FMCG will have Dabur, HUL, as well as Radico Khaitan and Swiggy come out with their earnings. So big day of earnings for sure tomorrow. Now, in terms of the Trump tariff situation, can indeed be seen as a classic example of game theory, says Arvind Virmani, a member of Niti Aayog, in an exclusive conversation with NDTV Profit's Shrimi Chaudhary. He points out that this is a strategic move to shape how others perceive the situation rather than a fixed policy decision. Listen in.
So, actually, thinking about it in those terms illuminates this. You know, what seems to be is classic game theory. Okay, so the statements are designed to increase credibility of the harm. Okay, and so one should not. I don't want to comment on the specific things because that's the whole point of negotiations. It's all about changing the perceptions. It's all there in game theory, actually. Okay? So, two things I would say. We should not weaken the case of our negotiators, okay, by supporting an opponent's game theoretic moves. Okay? So, don't believe everything the opponent says.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, Real-time stock picks.
Do I buy Ola?
Should I
or not?
hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So Nifty ended a choppy day of trade today above 24,800 levels. Sensex managed to gain over 100 points. Top gainers from the Nifty FAC include L&T, Sun Pharma and Tata Consumers. It was a mixed bag for sectors as well, with most sectors in the red than green. Realty, media and PSU Bank were the top laggards. Autos were also in the slow lane, while IT, defense and consumption were resilient in trade. The Indian rupee slumped to a 5-month low, closing 61 paise weaker at 87.43 against the US dollar today, down from 86.82 on Tuesday, marking its lowest level since February 28. So the sharp decline was driven by heavy dollar demand from importers and fears of US tariffs under President Trump, which could hit 20 to 25%. KPIT Tech saw its stock rise 5% today despite a challenging Q1, with net profit dropping 29.8%, nearly 30% to 172 crore rupees from 245 crore rupees year on year, impacted by a 65% fall in the other income and a 5 crore loss from its joint venture. So revenue grew marginally by 0.7% to 1,538 crore rupees, marking 20 quarters of growth, but margins slipped to 15.4% from 17.3%. Asia revenue fell 8% and exchange losses hit 24 crores. So still KPIT secured $241 million in the deals. Allied blenders and distilleries delivered a blockbuster Q1, with net profit surging fivefold to 56.6 crore rupees from 11.2 crore rupees year on year, marking its fourth straight quarter of robust growth post the IPO. So revenue has climbed 22% to 923 crore rupees, fueled by strong volume growth in the prestige and above category. EBITDA also soared 50.5% to 112 crore rupees, with margins expanding to 12.1% from 9.8%. Now, thanks to the smart supply chain moves there. P&G Hygiene and Healthcare delivered a stellar Q4, with net profit skyrocketing to 137%, climbing to 192 crore rupees from 81 crore rupees year on year. So this is actually driven by robust feminine care sales. Revenue also edged up 0.6% to 937 crore rupees, while EBITDA surged to 266 crore rupees from 118 crore rupees, boosting margins to 28.4% from 12.7%. So the company behind brands like Whisper and Vicks saw gains from cost efficiencies and premiumization despite muted industry volumes. Avenue Supermarts, D-Mart's parent, remains confident in its brick and mortar model despite quick commerce pressure, as shared in its recent conference call. So the company sees steady customer demand across the segments, not just the middle class, but D-Mart is also ready targeting less price sensitive shoppers as well. So D-Mart plans to counter competition by accelerating store additions at 10 to 15% annually, doubling down on investments without chasing 30-minute deliveries, prioritizing value instead. So financial metrics remain stable, and the company is enhancing services in the cities with aggressive quick commerce presence to boost the customer experience. Coromandel International stock hit a 52-week high after a strong Q1. Robust demand for fertilizers and crop protection products fueled growth. Strategic moves like stake hikes and new agreements boosted confidence. The company expanded its agri-retail network significantly. L&T posts strong Q1 profit growth, beating the estimates. Revenue rises 15.5% year-on-year, which is in line with the expectations. So margins have dipped slightly due to energy and high-tech segments. And there's a robust order book, order inflow as well at 94,453 crore rupees. Order book hits 6.12 lakh crore rupees. LSED Investments invest 7.5 crore rupees in Zepto for a 0.0146% stake. So deal structured via compulsorily convertible preference shares, Zepto valued at nearly 60,000 crore rupees. FY25 turnover hits 11,109.9 crore rupees. This move actually signals growing investor interest in the quick commerce space. Tilak Nagar Industries to raise 2,296 crore rupees via preferential issue at 382 per share. So funds will support 4,150 crore rupees of acquisition of Imperial Blue from the Pernod Ricard. So Chairman Amit to invest 306 crore rupees via warrants, and a company gets LOI, which is a letter of intent, extension to expand Andhra Pradesh bottling unit by 200 lakh proof liters. GAIL and RRVUNL Inc. JV to bundle gas and clean energy assets. So JV is to set up 750 megawatt of solar and 250 megawatt of wind projects in Rajasthan. So 330 megawatt gas-based plant to be transferred to the new entity. Now both the partners to hold equal 50% stake in this venture. Cyient sets up a new semiconductor unit in Singapore under its subsidiary. The entity will focus on engineering design and consultancy services. Move aligns with Cyient's push into the high-performance ASIC and chip design. So Singapore hub to support global clients with turnkey semiconductor solutions. Triveni Engineering posts 23% revenue growth in Q1 led by strong sugar and distillery sales. Alcohol dispatches surged 53% despite top-line growth. Margins shrink due to higher operating and employee cost. So net profit plunges 94% year-on-year to 2 crore rupees. EBITDA also down 38% year-on-year. Ask Automotive posts solid Q1 performance with margin expansion and profit growth. EBITDA margin improves to 13.4%, driven by scale, facility ramp-ups, and cost cuts. So wheel assembly business strategically reduced by 53.5% to boost the profitability. Net profit also rises 16.3% year-on-year to 66 crore rupees. Revenue is also up 3.4% year-on-year. HSBC initiates buy rating on Ather Energy with a target price of 450 rupees. Backs Ather's strong product quality, tech edge, and expanding distribution in a challenging EV market. EV penetration remains low, but HSBC sees stock performance driven by Ather's relative strength, not sector growth. So EBITDA break-even expected by Q4 of FY27. Faster EV adoption could actually boost the earnings and valuation. Sterlite Technologies aims for 18 to 20% EBITDA margin in FY26. So higher factory utilization will drive this growth. The company plans to boost capacity from 45 to 50% to over 70%. So it also focuses on reducing debt for stronger finances as well. Swiggy is set to report its Q1 of FY26 results on Thursday, which is tomorrow. So brokerages predict strong revenue growth of up to 54%. Losses are expected to narrow, aiming for profitability by late 2025. Food delivery and Instamart drive the positive outlook. Asian Paints reported a 6% drop in Q1 of FY26 net profit to 1,100 crore rupees, aligning with the estimates. Despite a 3.9% volume growth in its domestic decorative paints business, revenue has dipped 0.4% to 8,939 crore rupees due to the early monsoons and product mix shifts. So EBITDA has fallen 4.1% to 1,625 crore rupees with margins at 18.2%. So the international business grew 8.4% in the value, led by Asian markets and the UAE. So home decor saw degrowth with kitchen and bath segments down 2% and 5%. Automotive and protective coatings showed double-digit growth, signaling resilience amid competition. Dilip Buildcon Limited's Q1 of FY26 consolidated net profit surged 91.6%, which is nearly 92%, to 229 crore rupees from 119 crore rupees. So this is driven by a 169 crore exceptional gain and 216 crore rupees in the other income, which is up from 20 crore rupees. So revenue has fallen 16.4% to 2,620 crore rupees due to muted EPC activity. Now, this is marking the fourth straight quarter of decline. EBITDA has risen 8.9% to 520 crore rupees, with margins expanding to 19.9%, which is nearly 20% from 15.3%, aided by a 21% drop in the operating expenses. So the order book stands at 13,695 crore rupees, which is down 8% quarter on quarter, with a book-to-bill ratio of 1.2 times. Tata Motors is set to acquire Italian truck maker Iveco for $4.5 billion, its largest deal till date. So this is surpassing the 2008 Jaguar Land Rover buyout. So the deal involves purchasing a 27.1% stake from Exor, the Agnelli family's investment firm, with a tender offer for remaining shares. So Iveco's defense business, valued at up to 1.9 billion euros, is excluded as it's being spun off. So the acquisition, expected to be finalized soon, aims to boost Tata's global commercial vehicle presence. Iveco's shares surged 7.4% amid the news. Northern Arc Capital reported a 13% year-on-year increase in the Q1 of FY26 lending AUM to 7,142 crore rupees from 6,313 crore rupees. This is driven by the growth in the consumer finance and MSME segments. So net interest margin has slightly dipped to 8.9% from 9.1%. The company trades at 0.8 times FY27 price to book, reflecting attractive valuations. Northern Arc targets net NPAs at 0.5 to 0.7%, with ROA of 3.7 to 4% by FY28 and ROE of 16 to 18% over the 3 years. So despite a 12.9% year-on-year PAT drop to 81 crore rupees, management remains optimistic about the 20-25% AUM growth, leveraging technology and risk management. Nilkamal stock slumped 7% after reporting a 17% year-on-year and 15.5% quarter-on-quarter decline in the Q1 of FY26, which is the consolidated net profit also drops to 15.33 crore rupees from 18.34 crore rupees year-on-year and 34.2 crore rupees quarter-on-quarter. So revenue has risen 18.9%, which is nearly 19% year-on-year, to 883 crore rupees. This is driven by 19% B2B and 22% retail segment growth. However, the margins have faced pressure from 20% higher finance and other expenses. Joint venture profits also grew 24%. Siaram Silk Milks Q1 of FY26 net profit plummeted 60% year-on-year to 4.64 crore rupees from 11.5 crore rupees, dragging its stock down 5%. So revenue has risen 26.9% to 389 crore rupees, but flat retail demand and early monsoons hurt the sales. So operating expenses surged, with finance costs and depreciation also up 43%, which is this has led to squeezing margins to 5.34% from 15.11% quarter on quarter. Now, other income has also fallen 50% to 1 crore rupees. Now, despite the opening of 4 Z-Code and 3 Devo stores, losses from the new formats persisted. So the company aims to open 35 stores by March 2025 to boost its growth. Meghmani Organics staged a strong comeback in Q1, swinging to a net profit of 12.7 crore rupees from a 16.8 crore loss last year. Driven by robust demand in agrochemicals and pigments, revenue soared 48.3% to 614 crore rupees from 414 crore rupees, fueled by higher volumes despite softer price realizations. EBITDA jumped to 66.9 crore rupees from 5.9 crore rupees, with margins expanding to 10.9%, which is nearly 11% from just 1.4%. So the company's strategic cost controls and expanded export markets, particularly in the US and Brazil, powered this impressive recovery. Vedant Fashions, the parent of ethnic wear brand Manyavar, reported a solid Q1 with net profit up 12.5% to 70.2 crore rupees from 62.4 crore rupees year-on-year, driven by strong wedding season demand. Revenue grew 17.2% to 281 crore rupees from 240 crore rupees, fueled by robust retail and franchise expansion. EBITDA rose 6.9% to 120 crore rupees, though margins dipped to 42.8% from 47% due to higher marketing spends. So the company focuses on the premium ethnic wear, and new store openings continues to boost its market presence. A family dispute within Sona BLW has taken a serious turn, with the company issuing a cease and desist letter to Rani Kapoor. The letter alleges that Kapoor has defamed the company, causing reputational damage. While the letter was received on Monday, sources say that Rani Kapoor camp has yet to decide on how to respond. Now, sources tell NDTV Profit that the Reserve Bank of India is poised to unveil a new liquidity management framework, likely in its August policy meeting. The central bank may shift its liquidity operations to center around the 7-day variable repo rate. RBI Governor Sanjay Malhotra is said to be prioritizing stability in the overnight rate. Schneider Electric will acquire Temasek's entire remaining 35% stake in their India joint venture for approximately 55,000 crore rupees in an all-cash deal. So this move will actually give Schneider Electric full ownership of SEIPL, which is its third largest market globally. The company said that this deal is expected to accelerate decision-making and growth. The company anticipates double-digit organic sales growth for SEIPL in the coming years. Microsoft Corp has restored all services to Nayara Energy just ahead of the scheduled Delhi High Court hearing over the suspension. So the restoration follows legal action taken by Nayara, which is backed by Russia's Rosneft, after Microsoft abruptly suspended its services in response to the recent European Union sanctions targeting the Indian refiner. So Nayara argued that Microsoft's move, based only on EU sanctions, had no legal basis under US or Indian law. The NSDL IPO, worth 4,000 crore rupees, has been fully subscribed within 3 hours of bidding. The retail and non-institutional portions, along with existing employees of the NSDL, have been fully subscribed. The portion reserved for institutional investors has been subscribed 50%. The IPO is priced between 760 to 800 rupee per share. The IPO is a pure offer for sale, meaning no fresh funds for the company. So only existing shareholders are selling the stake. Starbucks is phasing out its 90 mobile order and pickup only stores in the US, citing a lack of warmth and human connection as part of a major operational shakeup. So CEO Brian Nicole announced the move after a 2% drop in the same-store sales for the 6th straight quarter. The closure won't impact Starbucks' mobile ordering service, which drives nearly a third of its transactions. Nicole's Back to Starbucks initiative aims to restore the brand's cozy coffee house vibe. In a fiery Lok Sabha debate on Operation Sindoor, leader of opposition Rahul Gandhi launched a sharp attack on PM Modi, alleging the operation was a mere exercise to shield the PM's image after the Pahalgam terror attack. Gandhi boldly dared Modi to call US President Donald Trump a liar in the parliament, refuting Trump's claims of brokering an India-Pakistan ceasefire using trade leverage and alleging jets were shot down during the conflict. Gandhi accused the government of lacking political will, tying the hands of the armed forces during the operation. BJP leader K. Annamalai is not likely to contest the Tamil Nadu Assembly election scheduled to be held in 2026. Sources indicate that he's likely to get a role in the central government and will not contest the Tamil Nadu polls. So detail on his exact role is not clear and is awaited as of yet. So speculations have arisen whether it could be in the Rajya Sabha. Assamese actor Nandini Kashyap has been arrested in Guwahati in a hit-and-run case. According to Guwahati police, the incident took place around 3 a.m. The victim is a 21-year-old student who is a part-time worker for the Guwahati Municipal Corporation. He was allegedly struck by a speeding Scorpio. Eyewitnesses report that Kashyap did not stop after the collision and filed and fled the scene, leaving the injured student behind. The first waves triggered by a massive 8.8 earthquake off Russia's coast have reached Hawaii, with a 4-foot wave recorded off Oahu. People in Hawaii, some parts of the US West Coast and Japan have been told to evacuate after one of the strongest earthquakes in the modern history has hit Russia's eastern Kamchatka Peninsula. Now a closer look at the earthquake I just mentioned about. A massive 8.7 magnitude earthquake struck off Russia's Kamchatka Peninsula, prompting tsunami warnings in Russia, Japan, Hawaii, and the US West Coast. So waves up to 4 meters hit parts of Kamchatka. Japan expects waves up to 3 meters. Evacuations were ordered in coastal towns. Damage reported in Kamchatka, including a kindergarten. The quake occurred at a shallow depth of 19.3 kilometers, increasing tsunami risk across the Pacific Ring of the fire. President Donald Trump signals a possible 20 to 25% tariff on Indian goods as trade talks remain unresolved ahead of August 1 deadline. He says that India imposes higher tariffs than most countries, despite calling it a good friend. Negotiations continue, but key issues like agriculture and digital trade stall progress. So India prepares for higher levies and plans to resume broader talks in mid-August. Manchester City have made waves by re-signing their former academy goalkeeper James Trafford for a record fee for a British goalkeeper. The 22-year-old, who never made a senior appearance for City before his 2023 move, returns on a 5-year deal after a stellar championship season, keeping 29 clean sheets. Now, this was Pep Guardiola's 6th summer signing. At the World Aquatics Championships in Singapore, American legend Katie Ledecky dominated the women's 1500-meter freestyle swimming, clinching her 6th world title in the event with the 5th fastest timing. She now holds 22 World Championship golds. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere as there's more more action lined up ahead.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चलता है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Benchmarks end higher to slightly outperform the mid and small cap indices as Nifty reclaimed the 24,800 mark. Sectors end mixed with Nifty Realty as a top loser while IT gains the most. Rupee closes at a 5-month low against the dollar to end 61 paise lower at 87.43, lowest since the 28th of February. NSDL's 4,000 crore IPO fully subscribed on day one. Qualified institutional buyers lead the subscription at 50%, followed by non-institutional and retail investors. Sona BLW sends cease and desist letter to Rani Kapoor claiming that she defamed the company and caused damage. Rani Kapoor is yet to respond. NSDL's 4,000 crore IPO fully subscribed on day one. Qualified institutional buyers lead the subscription at 50%, followed by non-institutional and retail investors. Sona BLW sends cease and desist letter to Rani Kapoor claiming that she defamed the company and caused damage. Rani Kapoor is yet to respond. Hawaii and parts of Japan lowered tsunami warnings. These warnings were issued after a very strong 8.8 magnitude earthquake hit far eastern Russia. Hello and welcome viewers, a very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news. To begin with, an important update on India-US trade deal. Sources say India will keep negotiations with the US running and aim for a deal by fall of this year. This even if US President Donald Trump imposes tariffs. Reports add that New Delhi is not too optimistic about securing an interim agreement with the Trump administration before the August 1st deadline when higher US duties kick in. Meanwhile, the comments last night from the US president on a likely 20 to 25% tariff on Indian goods is reportedly and understandably making Indian exporters, particularly those in the textile and engineering industries, worried about the impact of these tariffs. Let's now go across to my colleague Rishabh to understand the impact of tariff uncertainty on Indian exporters.
Right, what we're picking up from our various exporters associations is the fact that they are on the edge given the fact that US has issued fresh threats of about 20 to 25% tariffs starting August 1st. What we're picking up is the fact that we spoke to a textile exporters body. They said they warn of about 2 to 3 months of pain for the industry that are coming in. They say they're seeing that orders are being stalled and what they're seeing is a slowdown ahead of this very crucial annual period of festivities that is coming up. They are saying that there is a lot of orders stalling and orders not getting released. We jump now to the FIO, which is the Federation of Indian Export Organizations. These are groups of exporters, and what they also say is that there is an additional cost burden that is expected now. The industry was prepared for somewhere between 10 and 15%, but a 20 to 25% tariff increase would mean that they would have to sit for additional talks with their buyers, with brands, with companies, and they will have to decide a way to split this tariff burden, this additional tariff burden that is set to come up starting August 1st. What they're also saying is that there is a fear that instead of the BTA was supposed to get orders in from China and basically make India eat eat a part of that Chinese market. But what we're picking up now is the fact that there is a lot of uncertainty and orders are not coming. The orders that were supposed to shift to India are not, that is not happening. So a lot of sort of alarm bells ringing around exporters, given that this additional burden of 20 to 25% may hit Indian exporters.
Right, Rishabh. Thank you so much for that update. And viewers, markets ended in the green after Nifty reclaimed the 24,800 mark. Benchmark slightly outperformed the broader markets. Nifty IT closed as a top sectoral gainer, while Nifty Realty lost the most points. Now we have my colleague Varsha joining us with a wrap of the day's market action.
The benchmark indices, slightly outperformed broader market indices. Now Nifty reclaims 24,800 mark and ends higher. Benchmark indices extended gains for second straight session. L&T and NTPC were the top gainers when it comes to Nifty 50. Nifty IT emerges as the top gaining sector of the day, which was led by Coforge and LTI Mindtree. Onto Nifty Midcap 150, if I were to talk about, it gained slightly, which was led by New India Assurance and Coromandel International. The New India Assurance jumps over 18% after its Q1 results, while Nifty Realty emerges as the top losing sector, loses nearly 1% intraday. Brigade Enterprises and DLF are the top losers when it comes to Nifty Realty. Nifty IT extended gains for the second consecutive day, and Nifty FMCG extended gains for the third straight day, while Nifty Pharma FEC extended gains for the sixth day in a row, and Mahindra FEC gains nearly 1% ahead of its Q1 results.
Thanks for that, Varsha. And margins in the lending business could bounce back in the second half of FY26. That's the word coming in from Pankaj Muraka, CIO at Renaissance Investment Managers. He remains bullish on the banking space, driven by strong credit demand and improving asset quality. Let's now listen in to what's fueling his confidence in this sector.
I would not be too concerned about the margin compression that we've seen in the first quarter for some of the banks, because I think given the fact that the rate cut has been front-loaded by RBI and given the way the sector is poised, where your assets get repriced much faster than liabilities, this is a matter of cycle where you are in the cycle. So that's not too much of a concern for me. We still continue to remain positive on lenders, because we think we're coming out of 2 years of slowdown in the economy. And as I said, I am firmly in the camp that we'll start seeing gradual economic recovery in the second half of the year, and lenders becomes a good play on it. As far as asset quality is concerned, I think the top 5 or 10 lenders in India are in a very good shape. In fact, after a long time, we own 4 of the top 5 lenders in India in our portfolios. And our preference is for larger players versus the smaller players within the sector. So we own HDFC Bank, ICICI Bank, SBI and Kotak Bank. And we think all of them have very strong balance sheets, and as the economy recovers in the second half of the year, margins will stabilize in the second half of the year, and more importantly, growth will come back for these lenders. So, and more importantly, one of the few sectors which is still trading at about almost 20% discount to the Nifty index. So I think as we see growth coming back to the sector over the next 3-4 quarters, probably that valuation gap versus the Nifty index for the lenders will narrow.
And Avenue Supermarts isn't losing sleep over quick commerce. In its post-earnings call, the management said it remains bullish on the traditional brick-and-mortar model and sees store expansion as the best response to rising Q-com competition. Let's listen in to their comment on how they plan to tackle the Q-com business model and how they have been investing in key cities to sharpen customer experience.
One of the best ways to counter quick commerce is not actually really digital. One of the best ways to counter quick commerce is to have more and more DMart stores. Because from a value proposition, we have an amazing positioning. So for a value customer who's spending 5,000 or 10,000 rupees a month, she or he can clearly see that they will save significantly more when they come to the store. At the same time, yes, there is a top 20%, 25% of the population of a city who wouldn't mind paying a little bit extra to get the product delivered at home. And we're trying to bridge that gap. So let's look at it from a standpoint that at one end you have high convenience, high price point, and the other end is DMart stores, which is deep value, but obviously it's not as convenient, right? But it's deep value.
And the IPO of NSDL, India's first and largest securities depository, opened to a strong start, getting fully subscribed on day one. In fact, as of 3:33 p.m. today, the issue was subscribed 1.53 times. This is an entirely offer for sale issue with up to 5.01 crore equity shares being offloaded by existing shareholders, including that of IDBI Bank, NSE and SBI. So what makes NSDL a potential long-term play for your portfolio? We spoke to Deven Choksi, MD of DR Choksi Investment Managers, for his take on the IPO and why investors are tracking this one very closely.
I think this is a must in the portfolio.
Okay.
Couple of reasons. You already have the market cap growing from 5.5 trillion with a visibility to become 15 trillion in next 10 years to 12 years time from now. So obviously, I think the number of and the value of assets increasing and the number of transactions increasing along with, that is a good sign for any business directionally for the growth. And they're a duopoly anyway. So around 43-44% of the revenue comes from the deposit services. About 50% of the revenue comes from the payment services which they offer through their other companies, payment bank companies. And I think the database company, which is relatively small, I think with 7-8% kind of a contribution into the revenue. It is also providing, I think, a significant amount of solutions to on the e-governance, KYC and insurance repository related services. So in my viewpoint, I think with this kind of diverse portfolio that you have, including your subsidiaries, I think the business becomes absolutely, I think, a must in the portfolio, because I think this kind of businesses will only give you a chance, I think, when they come into the public market.
And in a special conversation with us, AstraTalk's founder and CEO Puneet Gupta revealed that the company plans to launch its IPO towards the end of 2026 or the first half of 2027. Let's listen into an excerpt from that conversation where he also delves into the profitability of the company.
Puneet, also talk to us about, since you've said that there is plans to go public, उस पे क्या timeline है फिलहाल?
So we have just started working on it. So abhi our CFO has joined last month, and abhi Big 4 या Big 6 auditors को हम hire कर रहे हैं, and I think that will be done. उसके बाद सारी planning करके, so the timeline which we have internally is कि 2026 के mid के बाद will file for DRHP, and IPO की timeline शायद 2026 end या 2027 के starting में होगी.
What is the profitability currently as we speak?
Profitability is around 18 to 20% is our EBITDA margin, and to last year we closed at 100 crores ka profit. Last year we closed close to, I think, 250 crores ka profit. This year, let's see where we go.
The Indian rupee slumped to a 5-month low today, closing 61 paise weaker at 87.43 against the US dollar, down from 86.82 on Tuesday, marking its lowest level since February 28th. But the rupee move has been surprising to traders. Some of them told NDTV Profit that the importers did not expect 87 mark to be breached and are sitting out of the market because of sudden pressure on rupee. Let's go across to my colleague Vishwanath Nair to join us now. Vishi, tell us, what are you hearing from the traders?
All right, so the rupee closed at 87.43 against the dollar. This was a sharp deceleration in the value of the rupee against the dollar. This is the lowest that it has been since February. This was primarily a surprise for the traders on the street who did not quite understand why the rupee was weakening so hard. Essentially, if you look at where the other Asian currencies are and where the dollar index is, there is no fundamental reason for the rupee to be weakening so much. What traders are pointing out is actually the uncertainty in the market market, especially amongst the foreign institutional investors who've been pulling out of Indian equities for 7 straight sessions now. Because of the uncertainties around the US trade deal, currently it is not clear where the tariff position will end up with respect to India. The US President Donald Trump has already pointed out that the tariff could be anywhere in the range of 20-25%. The Indian government has been indicating through sources that there is going to be a trade deal signed much later than the August 1st deadline. Essentially on the 25th of August, a contingent from the US will be coming into India, and discussions on the trade deal will continue after that. So what the market is watching out for is any clarity on when actually the trade deal is going to be signed, and thereby what are the tariffs that India will have to pay to sell in the US.
Right, Rishi, thanks for that. And it's time for an NDTV Profit exclusive, viewers. Sources have told us that the exchanges are at present actively monitoring only Jane Street among other high-frequency trading firms. Market regulator SEBI has not mandated to track other high-frequency trading firms such as Citadel or Millennium. Let's now go across to my colleague Charu for all the key details on this development.
So we must understand that exchanges, being the frontline regulator, have their own alert systems to sort of understand if there is something shady going on the part of a high frequency trading firm, a quant firm or investment management firm or any other entity that is involved in the derivatives market or in the markets in general. And the regulator, the Securities and Exchange Board of India, had after its order, after allowing Jane Street entities to come back into the Indian markets, had asked the exchanges to be more cautious and monitor the entire situation very closely. So now we have come to know from the exchanges that despite several speculations and reports that Citadel or Millennium or other firms might also be under SEBI's scanner for manipulation in different indices, currently exchanges have not been given any mandate to look into Citadel's or Millennial's trade or any other high frequency trading firms trade for now. There is no SEBI mandate to do so. So currently they have only been asked to sort of monitor the Jane Street situation. Additionally, they have also not received any speculative, shady or mysterious activity on the part of other quant firms either. There has been no mysterious or alarming voluminous trade situation that their alert systems have picked up. One of the highly placed sources said that if such a situation arises, they will be going to the regulator about it. Now coming back to Jane Street entities, it was reported by NDTV Profit exclusively about 4 days back that Jane Street had sought more time from the regulator to give its reply in the process that it is undergoing with the regulator, and is currently staying away from any voluminous or high level trades for now because of the active monitoring situation. So let's see how further developments on this roll out, or if exchanges are further directed or mandated in future to look into the high level trades of other high frequency trading firms that are operating in Indian derivatives market.
Right, Charu. Thank you so much for that. And moving on, viewers, Indigo's first quarter numbers are out. Revenue has gone up slightly by just over 4%, while the EBITDA after adjusting for Forex was up over 3% over the previous year. EBITDA, which is earnings before interest, taxes, depreciation, amortization and rent costs, was flat at 5,866 crore rupees. Net profit, though, is down 20%. And on to another story which is making headlines. The Kapoor-Sona BLW saga continues with another twist. My colleague Vishwanath Nair again joins us now with all the latest details on this case.
So what's happened is that a cease and desist letter has gone out. Essentially, the cease and desist letter states that that Rani Kapoor and her group of people need to stop defaming the company, and that they have to withdraw the letter that was sent out on the 24th of July. Essentially, that letter, in that letter, Rani Kapoor had requested the board to stop the appointment of her daughter-in-law, Priya Sachdev Kapoor, onto the board, and that she needed to take 2 weeks to essentially look at all the legal issues there. She's pointing out that there were a lot of illegalities happening within the company, and that her rights were being stolen from her. So now, of course, after that, Sona BLW did put out a statement to the exchanges claiming that she has no rights in the company. She's not a direct shareholder. She does not hold any indirect position in the company either. Rani Kapoor's wealth is tied to Aureus Investment, which is the promoter firm firm that owns majority stake in Sona BLW, and in that company, her stake is held by a family trust. So essentially, this fight between Sona BLW, its current owners, and its family members is all becoming a little bit ugly. Clearly, the cease and desist letter, we need to see what exactly the response from the Rani Kapoor camp is. So far, they have not yet decided what they are going to do.
Right. And moving on, US statement on August 1st deadline seems to enhance the credibility of a threat. That's the word of Arvind Virmani, member at Niti Aayog. Listen into what he had to say on the potential tariff from the US.
So actually, thinking about it in those terms illuminates this. You know, what seems to be is classic game theory. Okay, so the statements are designed to increase credibility of the harm. Okay, and so one should not, I don't want to comment on the specific things, because that's the whole point of negotiations. It's all about changing the perceptions. It's all there in game theory, actually. Okay, so two things I would say. We should not weaken the case of our negotiators. Okay, by supporting an opponent's game theoretic moves. Okay, so don't believe everything the opponent says.
The first waves triggered by a massive 8.8 earthquake off Russia's coast have reached Hawaii, with a 4-foot wave recorded off Oahu. People in Hawaii, some parts of the US West Coast and Japan have been told to evacuate after one of the strongest earthquakes in modern history hit Russia's eastern peninsula. A massive 8.7 magnitude earthquake struck off Russia's peninsula, prompting tsunami warnings in Russia, Japan, Hawaii and the US West Coast. Waves up to 4 meters hit parts of Kamchatka. Japan expects waves up to 3 meters. Evacuations were ordered in coastal towns. Damage reported in Kamchatka, including a kindergarten. The quake occurred at a shallow depth of 19.3 kilometers, increasing tsunami risk across the Pacific Ring of Fire. Every time a child is trafficked, a childhood is stolen. Today, July 30th, marks the World Day Against Trafficking in Persons. To strengthen the fight against this grave crime, the Railway Protection Force launched a month-long national campaign on July 1st, focused on identifying and rescuing vulnerable children in transit across India's vast railway network. Supporting this effort on the ground is the Association for Voluntary Action, a partner of Just Rights for Children, working shoulder to shoulder with the RPF to protect children at risk during their journeys.
Do you know how easy it is for a 12-year-old to disappear in plain sight at a busy railway station like this one? For traffickers, bustling railway stations are a perfect cover to move children from one state to another unnoticed. For decades, trains have been used to transport trafficked children, and railway stations have acted as transit points in that very dark journey, as the children are ripped away from their families and their childhood.
So there are two specific modus operandi which are used by children traffickers. Under the first, they go to the poorest parts of the country, they go to the villages, and they come somehow sweet talk the vulnerable and poor parents, and they show them a promise of a high-paying job in a big metro and a comfortable life for their kids. Our experience is that normally in a group there would be about 10 to 15 children and 2 or 3 traffickers. Then they book trains. The second is more sinister. There are a large number of children who run away from home and they board the first available train at the nearest railway station. Once they reach there, they are spotted by the human traffickers, which are prowling on the railway platforms, and they take the poor and probably hungry child into confidence, and whisk him away.
Surveillance on suspicious movements of children inside train coaches and at railway stations is a critical part of gathering intelligence. Traffickers look just like you and me, blending into the crowd.
I think our association with the Association for Voluntary Action was in fact a milestone in our efforts aimed at eradicating the evil of child trafficking. The Association of Voluntary Action provided capacity building efforts. In different parts of the country, the RPF personnel were provided comprehensive training in all aspects of child trafficking.
बहुत ही फ्रूटफुल रिजल्ट देखने को आया। मैं डेटा की अगर बात करता हूं तो आरपीएफ और आवा के बीच में जब से एमओयू हुआ उसके बाद लगभग 8000 से ज़्यादा बच्चों को हम लोग ट्रैफिकिंग से बचाने में कामयाब हुए हैं। लगभग 11,500 आरपीएफ ऑफिशियल्स की आवा ने ट्रेनिंग की हुई है। लगभग 500 के करीब हम लोग एफआईआर रजिस्टर्ड करा चुके हैं और 1100 से ज़्यादा अभी तक जो ट्रैफिकर्स हैं उनको हम लोग कानून के दायरे में ला चुके हैं और उनको अरेस्ट करा चुके हैं।
In India, through similar collaborations with multiple stakeholders, Just Rights for Children with law enforcement has rescued over 85,000 children and prosecuted more than 50,000 traffickers. It is only through such collective efforts that we can build a strong child protection ecosystem and ensure that no child ever has to lose their childhood.
And with that, viewers, it's a wrap on this edition of Profit 360. But do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Hello and welcome. You're watching KYC. Today we're going to talk about a reasonably large company, 25,000 crore in market cap, is the largest standalone health insurer in the country, which is Star Health, and a company in which Rakesh Jhunjhunwala had a stake pre-IPO and continues to hold. So that's where it starts to get very, very interesting. And why is Star Health so interesting is because from the point of IPO till now, we've seen a sustained underperformance in the stock price. And can that underperformance actually change? Can there be a turnaround is really the question we're asking today, and probably we'll hopefully find answers to that. Trends with regard to competition and pricing in the health insurance space, that's the other thing I want to talk to them about, because Lombard has come into health insurance in a big fashion. So we have a large competitor coming in a big fashion, and therefore competition is tough. On top of it, they already have a market share of 33%. How much higher can it go? That's really the question. Is that sustainable in terms of a trend, or will they just try to maintain the 33%? Maybe some indication there as well. How much can the combined ratio improve? Now, in layman terms, the combined ratio is nothing but a measure of profitability on the top line. It factors in the expenses, the management expenses and the overheads of the company, and thereafter factors in all the claims that the company has received and paid out. And thereafter, you arrive at the bottom line profit. So a combined ratio of 100% will mean you're at a no profit, no loss in your business. A sub 100% will mean you're starting to get profitable, and above 100% means you're yet to break even on the operational side of the business. So I want to understand where does that go and how much can it improve by. What to expect on the investment income front. So one part of the top line is obviously premiums that you make as a health insurer. The other part is the investment income that you make on the money that has already been deposited with you by the customers. Say for example, you're a customer in a health insurance company. You've paid out a premium in year 1. In year 3, how has the company reinvested that premium, earned a yield on it? That essentially is the investment income. And there are certain levers which they are trying to tweak with regard to the investment income. So we will try and understand that. What are the levers therefore for profit growth? We'll speak about the combined, we'll speak about investment income, we'll speak about top line growth, and therefore those are the key levers, of course. But how do they move, and therefore where does profit go? They've guided for a doubling of profit, a tripling of profit, I beg your pardon, and doubling of top line by FY28. So I want to understand how confident are they of that journey. What is their ROE target? Because at the end of the day, shareholders want returns, and your returns are linked to the ROE number that the company clocks. So is there an ROE target internally, and how sustainable is that target across cycles? Because with COVID comes health insurance claims, and therefore it's a cyclical business of sorts. So you want to understand how sustainable that number is as well. We'll try and explain and try and get an insight on all of this. But first off, as we always do, let's start off with what the company is all about. It's, as I did mention, it's the largest standalone health insurer in the country. It was founded in 2006. It's pure play into health, focused on retail, which is individual and family, and it also now has started to do wholesale in a bigger fashion. It commands a 33% market share in the retail health space, 44% among standalone health insurers. It has a network of 900 branches, over 7.5 lakh agents, and 14,000 partner hospitals. How the model works is, you pay a premium to the company. If at all, God forbid, you were to be admitted to a hospital, the tie-up with the company ensures a cashless claim to you. So therefore, this number starts to become important when you're looking at a health insurance. Now, last off, it's a listed entity, major shareholders, and it got listed in December of 2021. Major shareholders include the likes of a Westbridge as well as a Jhunjhunwala family, all of which sit within that promoter group. So you want to take care of that when we go to shareholding pattern in our metrics. Now let's look at the products. Retail health insurance is the flagship product. There's also group health for corporate, SMEs, MSMEs, and there's personal accident, and there's also travel insurance. They have cancer care, autism care, cardiac, women's health, and braille policy. All of that is an industry first, is what they pride themselves for. They've done innovation in terms of digital products, wellness integration, and they have certain sector first features. Ayush and mental health is covered in all of their retail plans. So something again which stands out. Let me talk about the business model, and I spoke a little bit about it. So first off, it will sell health policies. It will collect a premium. That premium will be collected over many, many years. Hopefully you don't have a claim. Good for the company, good for you as well. And that premium is invested. Invested in where? Debt, equity products, right? And a percentage of the loan, the mix of equity is going up. It was sub 15%, it currently stands at 17.2%, just for your knowledge. The core revenue, of course, comes from premiums. In terms of the channel, 82% of the premium comes from the agency channel. It's expanding in digital as well as banca insurance, which is the banca channel, which is selling policies through banks. That's also something they're focusing on slowly and gradually. Otherwise, they've largely worked with agents. They sell to retail customers, but now have started selling to MSMEs, group businesses. The competition, of course, is the likes of an HDFC Ergo, ICICI Lombard, a Max Bupa, a New India, a Care, and market share. They have 33% of market share. We've spoken about that. Some concerns. It's a single line of business. They don't do too many lines of business. So that's one possible concern to take care of. Also, the claims have been elevated in recent years. COVID was one tipping point, but outside of that as well, claims have been elevated. The loss ratio has held up around the 70% number, which is a bit of a concern. Even though on the retail health side, the loss ratio is 65%. Because of wholesale growing, the loss ratio is elevated. There's a slowdown in profitability due to certain underwriting losses that they are making, especially with regard to claims. A claim ratio, a loss ratio is largely the same. That's how we're seeing the likes of a Star Health. Now, let me talk a little bit about the key metrics that we'll focus on. An insurance company, and therefore you want to understand that the metrics might change a bit. We look at the income statement, then we look at key ratios, and I'll stick to only the key ones. I won't try and give you the whole hog. The balance sheet as well, we look at return ratios, we look at shareholding pattern, and everything else remains the same: street cred, street coverage, and valuations. So that's how we'll stack it up on a KYC in terms of the metrics. Let me start off with the income statement. Now, if you look at the income statement and how it's evolved, the net premium is around 14,800 odd crore in FY25. The 3-year CAGR on that is around 15 odd %. And it's been a steady growth, frankly. FY22, it was sub 10,000. It grows to around 11,000 in FY23, as you can see on your screen. FY24 was nearly 13,000 and currently sitting at 14,800 odd crore. So you've seen a steady 15% kind of growth. Your investment income, and I explained this, is up 18% on a compounded basis. Your claims, which also we spoke about, FY22 as the base has gone up by 7% CAGR, but FY22 as a base is an extremely tough year. Mind you, we had the second wave of COVID in the middle of 2021 calendar year. So therefore, the spillover of that has happened in FY22. And therefore, the claims in that year were quite large. It was significant. In fact, the claims ratio at that time was an 87% versus the 70% currently. And the claims ratio gives you the ratio of the claims versus the top line. So it was quite large, it was significant. So from there, from that higher base, it's grown at 7% CAGR. Just giving you that perspective that claims were anyway elevated, and on that base, the 10,000 crore of claims in FY25 still looks quite a bit elevated. You might want to work on that claims number, especially where Star Health is concerned, something you want to see. Where OPEX is concerned, this has been a steady state. They've been able to control OPEX well. It's been 11% 3-year CAGR on that OPEX number. And the commissions number, mind you, they have to pay commissions as well to their agents for every policy sold. So their commissions number also grew in line with the top line, which is 15% odd. So no leverage being taken on the commissions number, but some leverage being taken on the OPEX number. So that's how it essentially looks like. Now let's look at key ratios. The combined ratio sits at 102.1% in Q1 FY26, so it's quite elevated. I explained to you that the combined above 100 means that on an operational top line basis on the premiums, the company is making a loss. So therefore, you want to start to see how does Star Health make a profit, right? It's on the investment income technically that they start to make profits. But broadly, this is the problem. The combined ratio has been elevated. FY23, we saw the combined ratio sink to 95%. FY22, it was elevated understandably because of COVID. We did discuss that. FY24, it spiked up. FY25, it spiked up further. And FY26 Q1 has been at 102.1%. So quite elevated. When you're looking at the investment yield on the portfolio of investments, it's come off. And that's also because debt or the cost of debt has come down, and therefore you're starting to see investment yield come down to a certain extent. That's probably what's hurting the number. When you look at the claims ratio, that will give you perspective on what's hurting the combined. And the claims ratio, 87% in FY22, sank to 65. In the year in which it was 65, very good profitability. 66.5, very good profitability. FY24, we looked at that profit number. It was extremely strong for FY24. FY25, 70%, Q1 FY26, 70%. So you want that claims ratio to come down. We've given this a neutral as well, because if the claims were to come down, there is scope for profit expansion. So you want to wait and watch whether that actually translates or that does not. Balance sheet, and this is of course more broad-based in terms of how one looks at the balance sheet. You look at the net worth, which is around 7,300 crore. It trades at around 3.5 times price to book, which is on the net worth. The net worth grows decently well. Around 2 to 3% every quarter is what it's been demonstrating in terms of growth, maybe 3 to 4%. And the investment that it makes is on that bottom line, 18,000 odd crore in terms of investments. Let's look at the return ratios. And again, volatility is evident. FY22 was a bad year, so was FY21, understandably. FY25 was sub 10%. So we'll give this one a neutral as well. Let's look at shareholding. And this is a clean thumbs up because you've got very good shareholders sitting here. No explanations needed on this one. Let's look at the street cred. How has the street rewarded shareholders? 4% up in 1 month, 1% up in the last 6. Year to date, it's been a dismal negative 9% return. 1 year, the stock is down 29%. And since the IPO, the stock is down over 50%. So could this be a potential opportunity is really the question. And of course, we'll have to understand and wait and watch for that. But let's look at valuation straight up. And you look at the price to book, we spoke about that. It's currently trading at around 3.6 times book. This is FY25 book, mind you. We looked at Q1 FY26 book. But broadly, that's the number. The price to earnings ratio is around 40 times. And the 4-year average price to earnings since FY21 listing is 41 times. So very, very neutral on this count. But if the profit were to double by FY28, the price to earnings will shrink very, very rapidly. And that's where you could see an opportunity. So you want to wait and watch as to what's happening here. And the re-rating could be sharp if management guidance is followed. Because from the 600 or to 700 crore PAT that they're doing currently, they could well do 2,000 crore of PAT by FY28. So you want to see whether that is doable or not. We'll wait and watch for that. Now, last off, on analyst recommendations, there are 14 buy calls, 6 hold calls, 5 sell calls with just a 4% upside on this stock. Not looking pretty, but given the kind of buy calls, we've given this a neutral again. And therefore, that stacks up all of our 8 KYC rating parameters. Let's go across and see what is the final rating that we get for a Star Health on KYC. Pretty much all neutral. Shareholding is a clear thumbs up. Street cred is a clear thumbs down. Street coverage and valuations too are neutral. 4 out of 8 is what Star Health gets on our KYC rating, but plenty of moving parts, a turnaround at play. Let's go across to the management. We spoke to Mr. Kambli, who's the CFO of Star Health earlier today. Let's go across, listening to a slice of that. How are you tackling, so let's go line item wise. In terms of top line growth, how your growth seems decent. Can you hold on to market share? Can you build on the market share? Is competition coming in a big fashion? How are you standing out? Just talk to us about top line first, because that is your key driver for bottom line growth, is what you're saying.
Yes. So, as we see for the quarter for last year, we have been holding to our market share of 33% on an annual basis. For quarter one, the market share is 31% when it comes to retail health. With the kind of scale that we have in terms of our agency base, the way we have built our digital business, we believe we'll be holding on to the market share as well as keep on improving on it. But in the areas where we want to focus, we just don't want to go all out. We see a lot of growth shown by competition, but that is based on portability. Portability for us is only 10% of the fresh business. So we continue to grow with all the operating parameters working in our favor. In terms of competition, we see that competition is always there, will be there. It helps to expand the reach of insurance in this line of business.
Sure. So pricing at this point, you feel there is still some price hike warranted, or you're comfortable with the way pricing is played out over the last 12 months and now no more price hikes in the system?
See, we believe that pricing is an annual thing, with the kind of inflation and the severity that we see. Pricing is an annual exercise. We have taken price increase for 65% of the portfolio last year. It's in the range of 8 to 9%. If we go back in time, the pricing used to happen every 3 years, which was in the range of 20-25%. But what we see is that the annual pricing is much more relevant. It doesn't pinch the pocket of the customers, and it helps us to bridge that gap in terms of loss ratio. So the price increase will be an annual affair for our portfolio. Got it.
But sir, so how does top line growth ensure that you get a better combined ratio? Because largely, wouldn't you believe that new customers coming in will have a similar kind of a vintage?
Absolutely. So when we talk about price increases, we talk about claim-based discounting as well. The customers, who are not claiming, we have our, provisions to give them discounts. We have various methods to give discounts to the good customers. We have something called as a network-based discount. Customers who are ready to take treatment in good hospitals, not necessarily in tertiary care hospitals, there is a discount available to them. So while ensuring affordability of the price for the new customers, we ensure that the overall portfolio yield is maintained. And that is how we want to maintain the loss ratio of the business.
Right. So now the other line item with regard to investment income, your investment yield has actually come off. It's come towards the 6.5%, but the equity as part of your investment corpus has gone up in percentage terms. And that tilt is likely to continue towards equity going forward. Give us that perspective. And therefore, what is the impact on the yield maybe over the next 2 years that you're seeing?
First is to counter the 6.5%. The equity investments, the rates investment, which does not have a fixed income flow, is now 17.5% of our portfolio. Now, if you calculate only the fixed income yield on the total portfolio, it will always be lower because we have increased our proportion of equity
business. What we see is, with a mix of fixed income and equity portfolio, the average portfolio yield should be closer to 8%. That's the objective of the business. Whereas when we invest only in the fixed income, it is closer to 7.25%. So we see with the right mix of fixed income as well as equity portfolio, the yields to improve over longer periods of time.
Got it. So where should your combined, or where do you envisage your combined? And I'm not asking you for a guidance, but just for a broad parameter on where one should envisage both combined as well as claims in terms of a ratio. And I'll go into retail versus group. But for the moment, just combined versus claims over the next 2 years, where should that number broadly go towards?
See, Harsh, what we're looking at is a ROE target. We see that claim ratios will be a function of the pricing by the healthcare providers, by the company, a mix of retail and group, a mix of indemnity and benefit. So there are various factors that will play out. What we are saying is we want to maintain an ROE target, which is upwards of 15-16% over the next 2 years period, by FY28. That's our stated objective, and we are well on course to achieve that. We believe as a measure to improve operating profitability, expense ratio has to be controlled. A lot of effort is going into it. Claim ratio can be slightly cyclical as well as a function of the various product mix and the indemnity benefit, all those segments of the business. But the objective is to ensure a healthy ROE of 16% and above on a consistent basis.
And how confident are you of achieving that, sir? A 16% plus ROE consistently?
So we are very much confident. All the business actions and the strategy that we're working is playing out. We are confident about it, and there is a clear strategy to achieve that ROE targets.
Point taken. Okay, I want to also delve a little bit into competition. I know you've touched upon it, but there is one competitor in particular which has been aggressive in the health insurance market. Do you believe that the growth, therefore, might be limited in terms of a window? I know you've grown 18%, excluding 1/n, which is the new accounting norm. But excluding that, I know you've done well. But do you see pressure there on that number?
See, again, we believe India is a huge underpenetrated market. The options are huge. You have to see the business that we come from. A very significant portion of the business is from tier 2, tier 3 cities where we are the market leaders. Even in all the states of the country, we are the market leaders. And that's true because of our agency workforce, because of the investments that we have made in digital, because of the product innovation and the product features we are able to come on a regular basis. So we believe competition is good. Competition is there and will always be there. But the strategy that we work with will ensure that we maintain and improve on our market share.
Okay, so that's all the time we have on KYC today. In fact, that was management interaction with regard to a Star Health. The stock perked up in trade on the back of numbers. Stay with us. Completely out of time on KYC, but more action will follow.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, credit cards, a lot of people view them as a fantastic tool to manage cash flows. They can also give you amazing rewards in the form of points. They can get you a business class trip to a location of your choice. They can get you free air tickets. They can get you free movie tickets and everything besides. But the dark side of that is that if you go overboard, there is a potential to slip into a debt spiral. And incidentally, based on the data that Cliff Highmark has pulled up, there's a substantial increase in the overdue amount for credit cards between 90 days and 365 days. This is essentially when they become non-performing assets. And that number stands at 34,000 crore rupees at the end of March, and the increase is of as much as 44% over the course of the last financial year. Joining me now in the studio to talk about some of the trends that are emerging is Sachin Seth, who's the chairman of Cliff Highmark. Sachin, thanks so much for taking the time.
Hi Alex, my pleasure.
That number seems very alarming. Anecdotal evidence does come through, people saying, hey, you know what, I have too much of credit card debt. They're paying their minimum due amount, but there's a significant overdue that they have, and this is piled up. How has it come to this?
Yeah, so Alex, if you see, the credit card is one of the means of unsecured loans, what people use. And if you look at the situation in last about a year or so, I think many of the loans categories have had a bit of a stress. So credit card is also one of them. And if I give you the overall statistics, see there are about 11 crore cards in the market.
Right.
Total outstanding is ranging about 3.7 lakh crore. Now, as you rightly said, it was around 30,000 crore as of last year. But this year has increased significantly. And one of the reasons for that is obviously because the stress is there in the unsecured loans in other portfolios as well, right? So credit card also happens to be one of the type of categories which people are spending, but they are finding it difficult to pay back because of various reasons. So that's where it has gone up quite substantially.
So, but let's talk about this, because the data that you pulled up also seemed to suggest that card companies or issuing companies, banks, are reducing the number of cards that they send out. So on the one hand, there are fewer cards being issued, but the usage of credit cards is still going up. So it's actually quite interesting that people are spending more on the cards that they already have, and new issuances are not taking place. Why is this happening?
Yeah, so see, as I mentioned that, card is an unsecured product from loan category perspective. So there has been, because of delinquencies increasing, most of the lenders have become very cautious, and as part of the cautious approach what they have taken, and even regulator has advised being cautious on unsecured lending. So from that perspective, companies are become more stringent about whom they give the card, and they are doing a better underwriting at this moment. They are trying to contain the risk as much as possible in the new issuance, and that's why the new issuance has gone down by about 27%. And but yes, there has been another category of card coming in the market, which is called secured card backed by FD. So that is something, a new phenomena which is evolving.
These are credit cards.
These are credit cards, but the people who do not have as a strong credit score or credit history, what they can do is that they can actually put a FD in the bank and get a credit card which they can use it so that the bank is secured. So that tomorrow if they are not able to pay back, then bank can
dip into the FD.
So I'm sure that you've collected a lot of granular data here. So anything to add color to this is that in these instances where there are delinquencies or there are people that are overdue on their payments, are there instances where people have multiple types of debt? And this credit card debt is only one of those. So, for example, they have a mortgage, they have a loan on a car, they have a loan on electronics, and they have a credit card. Is that the situation?
Yeah, that's normally the case. So, if you see when anybody is issued a credit card, the person needs to have a certain level of credit history. Then only banks are comfortable giving the card to them because they understand that what's the payment behavior in the past. So, naturally, the person would have had
I'm talking about concurrent.
Concurrent. Yeah, I'm talking about that. So I'm coming to that. So basically, which means that people are in the category of taking multiple types of loans. They could have at this moment certain personal loans, consumer durable loans. They could have, auto loans, or they could have basically the, loan against property, or let's say a housing loan, right? So definitely, most of these players, 50% at least, we see that they would have some other loans, right? Now, question is that, which loan they will default will depend on multiple factors, right? So in case of credit card, they obviously have option to revolve or pay minimum balance, etc.
But the interest still accumulates.
Interest accumulates, yeah. There's a it's a highest interest rate product. And but yes, it's not that they would not have other products, and it is not necessarily that if they are defaulting a credit card, they will not default on other products. There could be a simultaneous default also.
But the fact that and the data that you pointed out, right? So up to 30 days, 30 to 60 days, 60 to 90 days, and 90 and beyond is how you look at it. And 90 and beyond is when it becomes a bad loan, right? When it becomes a non-performing asset.
Yes.
And what you have actually witnessed is that there's a substantial increase in the 90 plus category, which seems to suggest, correct me if I'm wrong, when you're talking about credit card usage, people have revolved till the point where they can't afford even that minimum payment, and it's gotten too big to handle. Is that the right understanding?
That's correct. So basically, they've reached a situation wherein it's gone beyond 90 days in terms of default, and basically lenders are now in the process of, they have classified as per NPA, as per the nomenclature, and at the same time, they must be in the process of engaging with those borrowers to see how they settle. Or how they recover.
I want to clarify. When you pay the minimum due, it's not a default.
It's not a default, but yes, but it does, impact your. It does show into your credit history point of view, but it's not a default.
So, but then what we're talking about, 90 plus days, this is overdue with not having paid that minimum due, right?
Yeah, absolutely. So they're not paying.
They're not paying at all. They're not paying at all. So therefore, it's important to make that classification. So from your perspective, in terms of good credit behavior, is it always a good idea to pay the entire credit amount and not have that minimum due that is used to circulate credit?
Well, absolutely, and I would go one step forward and say that do not use your credit cards unless in exceptional situation to a max out limit. So one should use the credit card judiciously. One should have a limited number of cards what you can really manage. And
I want to stop you there because a limited number of cards to manage is an important question. I wanted to come to that later in the conversation, but now that you said it, you hit the nail on the head. A lot of people go out and try to get the best possible cards. You have social media videos saying this is the best possible card for rewards, and everybody wants that card. So you end up having 3, maybe 4 credit cards, and that's pretty normal. Even for somebody who is relatively risk averse, they'll be like, okay, fine, I need that air miles, right? So what have you witnessed in the data? Has that borne out a lot of people having multiple cards?
See, having multiple cards is a very common phenomena because once you are entitled or eligible to get a card from a bank, you typically are entitled or eligible to get it from other bank also. Now the question is that when I said that one should be judicious enough to basically have number of cards, is that the more cards you take, it shows as your basically the line of credit. Right? Which means the bank has offered you a line of credit. It could be 2 lakh rupees, it could be 5 lakh rupees based on your income, what they have done a calculation. So the more you have, it shows that you are credit hungry, which is obviously not a good sign beyond a point. And second point is that if you are using the card to a higher limits always, it shows that you are stretching it basically your credit requirements.
You're maxing it.
Your credit requirements are higher, and that's where.
What is the definition of overusage?
See, when you say if you are using around 30 to 40%, a credit card is reasonably normal phenomena. But if you start going to 70 or 80% in every month, see if it happens like couple of months in a year, etc., it's fine, because then you may have to buy something which is on a festive period or something which you would like to specifically take from a particular card. That's fine. But if you start using card for a higher utilization all the time, then definitely it reflects that you are basically in the need of higher credit. And that is where the balance has to be there, that how much you use the credit card versus other means of taking the loans.
Okay.
And that's where, these are some of the things which does impact from credit behavior perspective. But coming back to the point, the people who, like a question you had, is that the people who have credit card, will they have other loans? Absolutely. Chances are very high. Will they be defaulting on some of the loans? That's also a possibility. Yeah. So
okay. So, and then a follow-up to that. You said multiple credit cards. There is a perspective that if you are closing out on a credit card, they can impact your credit score negatively, because you're closing out a credit line of credit. Is that true?
Not necessarily. I mean, see, first of all, the credit score is built of multiple parameters. Every parameter has a certain weightage. Certain weightages are for the the credit limits what you have, and certain weightages are for the type of repayments you are doing on time. So I would say if you have a larger number of cards, let's say 8 cards, and you close 2 cards or 3 cards, it will not negatively impact. In fact, it could be a positive side to show that you don't want to have.
So question to you: there is good practice when you're managing credit. How many cards is too many? How many cards is okay?
Well, it's a very individual assessment, because if somebody has, let's say, higher income, if person falls in a high net worth individual category and the person has a substantially high income, person can afford to have 4 or 5 or 6 cards very comfortably, and could have the limits there, because assessment is done accordingly. But if a person is a young person who has just started career and probably of his career, then probably the person should not have too many. Then the person should start with 1, maybe 2, and then build their score, build their repayment profile, and then they should look forward to have higher income and the more credit cards.
And the final piece of advice, because you look at a lot of these situations when you're trying to get rid of this loan, or you're trying to repay in a situation where you defaulted, and it's credit card debt. It's the most expensive kind of debt. 40+% is what you're paying on an annual basis. How do you get rid of that?
Well, I mean, the best thing is that engage with your lender. Discuss with them your situation. Figure out a way that you settle it. Because most of the lenders also do not want to carry NPA or provisions on their book, right? So they would also be forthcoming, and there are means to, address that. But definitely anything you settle or anything you basically not pay definitely will impact your credit history. But engaging with lender and settling it would be the best way to really come out of the situation.
All right. Thanks so much for joining me today. Always a pleasure speaking with you.
Alex, thank you so much. Thank you for inviting me.
Well, there you have it. The numbers are a little startling. 44% increase in the overdue amount in the credit card space over the course of the last financial year, and 34,000 crore rupees is the amount that we're talking about that is overdue by more than 90 days. These are bad loans, and a lot of these individuals are going to have to go and engage with their lenders, scramble for funds, because this is the worst kind of debt, the most expensive kind of debt. Let's talk about how to extricate yourself from a situation like this and how to avoid it in the first place. A lot of people talk about the benefits of credit cards, and not enough are speaking about the pitfalls. So let's spend a little time to talk about that. Joining me today is Pratibha Girish, who's partner at Finwise Personal Finance, and Raj Khosla, who's the founder and chief executive officer of My Money Mantra. Thank you so much to the both of you for taking the time. Raj, I'll come to you first. I feel like I'm a little old-fashioned. I have one credit card, and I think that's perhaps one too many. And I don't like debt. Would you say that times have changed, and changed how? And do you think that everything that's occurring right now, do you think that it's okay?
Well, I think times have changed. You said, well, the more things change, the more they remain the same. So nothing has changed, as dramatically as one might think otherwise. But I just want to rewind the tape a little bit. none of this debt, which you said that, spiraling out of control and, how much more it's gone up, these things don't happen in a vacuum. They happen because you're part of a much larger ecosystem. As such, don't ever lose sight of the fact that, we came out of a COVID situation, which taught everybody technology, it taught everyone how to issue cards, and therefore, maybe they ended up issuing more cards than they intended. And all those who were receiving those cards, probably because of COVID, had also lost their jobs, or their incomes had gotten severely depressed. So they overused their card. What we see now is a cumulative effect of what has happened in the years gone by. So yes, attitude changes, that matters. But remember, circumstances what fashions attitudes, not the other way around. Attitudes don't make circumstances. Attitudes are developed by what's happening around us. So, and you did say something about one card too many, debt is the worst, credit card is the worst kind of debt. You don't like debt. Frankly, I think it's a universal feeling. Nobody really likes debt because you have to pay for it. Nothing in life is free, and nor is debt free. So it's only a matter of necessity. It's only when you're cornered you look for debt. Otherwise, frankly, nobody even thinks about it.
Yeah, so, but that's not how people are using credit cards, Pratibha. People are buying everything on their credit cards. In fact, I know people that have all of their expenses on their credit card, and at the end of the month, they're using whatever is in their account to clear the debt. As long as, and this is the justification that they have, which is fair, as long as they spend less than 50% of what they have in their account, and they have enough to cover that credit, they're fine. Is that okay?
I don't think so. I think people underestimate how painless it is to spend when you're using the card. Nothing goes out of your wallet. You don't feel the pain at all. When you're giving hard cash, you think twice. UPI also, your deposit, your account balance is depleting, and you can see that. It's not as painful, but it's slightly painful. But credit card is like for tomorrow, or people think, we'll see. I mean, we will find some ways to pay it back. Also, there's this huge FOMO which is going on. You see a lot of influencers on social media. You just get into social media and you see people who are using, like you said, business class tickets to go abroad, staying in 5-star hotels for free. And you feel actually, you end up feeling stupid. Why am I not using the cards? I am spending that kind of money. Why don't I use the cards? So I guess if you want to use the card, I tell all our customers a similar thing, that if you want to use the card, have it on auto debit, as in only if you have the balance, then use it. And like he also pointed out very correctly, there are now free lunches. So if somebody is giving you reward points, what is the percentage which you're paying for it, and are you actually going to redeem those reward points? I know of people, both friends and customers, who have huge 1.5 lakh reward points, but they have no clue where to redeem it, and they continue to debate on whether I should go on travel, not travel, but for every spend they're paying slightly more. So I think it's important. Whether you have one card itself is very difficult to manage, but if you choose to have 2 or 3 cards, you should have it on auto debit, very clearly indicating to you that only if you have the money spent, otherwise don't even bother.
Pratibha, I'd like to meet these people who have a lakh plus of reward points, and I can help them because I certainly don't have that many, and I know exactly what I would do with all of those points. But Raj, talk about correct usage. You said that it should be a last resort, and in fact, every time we talk about the use of a contingency fund, a contingency buffer, and everybody should have something like this. And I've had conversations about keeping money in a savings bank account as well. It doesn't make sense because the rate of interest that you're getting is 2.5%. And so therefore the response that I've gotten is, why don't you use a credit card to take care of those immediate requirements? And so that is the definition of emergency, but people don't use it like that, Raj.
No, they don't. So I'm afraid I didn't quite get the question. You mean that how to create an emergency fund?
I'm saying how do you use a credit card in your opinion? Because what according to you is the prudent way to use a credit card? Because on the one hand, you have so many rewards, as Pratibha has pointed out, and frankly, there are people that use it very well. And there is the use of that 45-day swinging window, that circular door, that people use very, very well.
Yes. So how to use a credit card well? First and foremost, and a lot of talk has been going on about reward points. I just want to put it on the table that reward points is not the reason for using your card. That's only an aside. The real reason for spending is because you needed to spend for the purpose you were spending, and reward points only came on on the side. So it seems to be, as some people would like to spend because they're accumulating reward points, but that's not really the way to think about it. Your question was, how should we think about spending? You should only spend on the credit card what you actually intended to purchase and had the capacity to repay. There's no point saying that I'll find money later, let me buy it now, I'll repay it one way or another. That's really not financial discipline. You could rather say that I would use if you had like 3 credit cards, all right? All of them had different settlement dates, at least 2 had different settlement dates. You use a card in a manner whereby you would use the card where you had the later settlement date, to spend more of the money, and then clear that off, and then do a little bit of teaming and lading with respect to when you were going to repay the amount overdue on that card. And that is the way to use it, and not to say that I'll find some way. That's financial indiscipline. That I'll find some way of repaying this debt. That's not the way to spend on your card. Yeah. Only spend what you can repay. And if you have more than one card, which I would certainly recommend, have 3 cards at least, then have different settlement dates. Because then you can you can postpone the repayment. You can avail free credit. But yeah, if you start paying for that credit in terms of either 36 or 42% per annum rate of interest, then frankly, I think you have a problem.
Okay, I take that point, Raj. So therefore you're saying use 3 credit cards and so therefore use it smartly, make sure that they have different settlement dates. But I do want to ask you, how do you determine what your limit should be? Because ultimately, it's a function of your cash flows. Depending on your cash flows, your bank will offer you a large amount of money, but you don't necessarily need all of it. And the gentleman from Highcliffe Mark was suggesting that using only about 30 to 40% or even a maximum of 50% is what I've heard of the limit that you have is good prudential use of the card, because it indicates that you're not struggling for money. So how do you set that limit in your opinion?
Yeah, there are 2 things. One is that we shouldn't confuse the limit that the bank has set for you.
Yeah.
That is divorced from what is the limit that you can spend. They may have made a determination about the maximum limit, let's say 5 lakhs that you can enjoy on your card. But at this point, you may be in hard times and you are not able to repay more than 1 lakh or something. So your limit is your own limit, what you can repay comfortably. And that's, say, 1 lakh, despite the fact that the limit set by the bank is 5 lakhs. So that doesn't give you an excuse to spend all of that 5 lakhs if you can only repay 1. So that's one distinction which is very important to draw. Your own limit is your own limit, as distinct from what the bank has set on that card.
You can use a slider on your bank app to set that individual limit for yourself within the overarching framework or limit that the bank has set for you. Pratibha, in a situation where you find yourself behind on payments and you've been forced for whatever reason, even though you should never do this, to pay the minimum amount, how do you get rid of that credit card debt? And if you find yourself spiraling, in what order should you kind of get rid of that debt? Do you have some advice here?
Absolutely. Like you clearly said, it's the worst kind of debt because it's the worst kind of interest rate which you're paying. Imagine 44% interest is what you're paying. Can you get funds at lesser than that? Unfortunately, once you get into the spiral, your credit rating, the score which you have, CIBIL score, gets affected. Okay, so then your loans are also going to come to you with a slightly higher interest rate. So it's important that you recognize that you're paying 44% and look around and see, are there any options for you to pay back this with the amount which is outstanding with a loan which costs lesser. Also remember, your revolving credit is available to you when you've paid in full. Whatever you spend, you fully paid up, and then next month again you get a 45-day reward. But if you pay only the minimum amount, even the one which is carried forward will start attracting interest. So most people don't realize this, and therefore they pay minimum. So there are a couple of pointers I want to give. One, it's very difficult to get out of a debt spiral when you continue to use your credit card. If you've decided and you know very clearly, or you're getting into this and you want to get out of it, I would say just lock up your credit card. If you have the courage, even break it into pieces and keep it away. Don't use your credit card. Look for funds which are costing you lesser, and while using, you cannot get out of it, and clear your debt, then start using credit card very judiciously. Number one, pay your entire amount. Only spend what you will otherwise spend. Now, if I'm going to pay my GST, I have to pay my GST every month. But if I can pay through credit card and get some reward points, why not? And I'm going to use the reward points. I know how to use it. I also know what is the cost which I'm paying extra for GST because I'm getting those reward points. Then it makes sense because I have the money in the bank, but I'm getting the GST at a discount, which it makes sense. I'm giving GST just as an example. Number two, don't ever withdraw cash from your credit card. Cash is not meant to be withdrawn from there. You will spend 2-3% as charges for withdrawing cash. And unlike normal spends, your interest starts from the day you withdraw the cash. There's no revolving credit. There's no 45-day limit. No nothing. So be very wary. Don't withdraw cash from the credit card. Spend and pay. Spend only things which you would even otherwise spend. You're using the credit card to get a slightly better discount, or you know very well that you can pay it back. And if you get into the spiral, then look for lower loans. Even personal loans will come at much lower, maybe half the interest rate. Take it and clear off the loans.
Fantastic. All right, so we've gotten a pretty holistic view on the use of credit cards. Pratibha, Raj, thanks so much for joining me on Your Money Matters. Pleasure speaking with you.
Pleasure being with you, buddy.
All right. Well, that brings us to the end of this edition of Your Money Matters. It's been an absolute pleasure. Thanks so much for tuning in, and do stay tuned. This is NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
From horoscopes in newspapers to now real-time astrological consultations on your smartphone, Indian astrology is going through a massive tech facelift. And at the helm of this massive tech facelift is, of course, AstroTalk. AstroTalk is India's largest astrology app, and I'm joined today by Puneet Gupta. He is founder and CEO of AstroTalk. Thank you so much, Puneet, for taking time out. We'll talk everything from astrology trends to business models, from skeptics to believers, and we hope to cover everything that astrology stands for today. Puneet, talk to us about also what was the tipping point where you realized that this could grow to a mainstream business from a niche astrology app. It could go through a mainstream business at what, 1250 crore top line now?
Yeah, 1650 top line now. I think when we started, I didn't believe कितना बड़ा हो सकता है. But after spending about 8-9 months talking to a lot of customers, we realized कि there is a lot of demand in India where people want to speak to genuine astrologers, and there was no other platform which was providing that. So when we started working on one-on-one consultation instead of working on कि यार content heavy apps बनाएं जैसे बाकी सारी थी, तो ये हमारे साथ आई थिंक वी गॉट लकी दैट वी एंडेड अप विद सच ए प्लेटफॉर्म जहाँ पे डिमांड ऐसे ही बहुत ज़्यादा थी. तो वी रियलाइज़ कि यार अगर मार्केटिंग अच्छी करेंगे, प्रोडक्ट पे और अच्छा काम करेंगे, तो विल बी एबल टू बिल्ड ए वेरी गुड बिजनेस.
Puneet, talk to us about the scale of astrology in India, right? Estimates put it anywhere between a $7 billion market to $15 billion. Tell me, as a market leader, what do you see it as?
So again, I think it is very difficult to estimate because online market share में we have more than 85% share, and वहाँ पे we can obviously tell कि यार कितना बड़ा market है. But offline में I think हर नुक्कड़ कोने पे यू विल सी कि बहुत सारे एस्ट्रोलॉजर्स हैं, उनके पास बहुत अच्छा काम भी है. तो अगर हम उनसे कभी बात करते हैं कि आप कितना अर्न कर रहे हैं, तो हम भी हैरान हो जाते हैं कि वो ऑफलाइन इतना कमा रहे हैं, है ना. एंड अपार्ट फ्रॉम दैट, अगर आप इंस्टाग्राम पे देखोगे तो इंस्टाग्राम पे सबसे ज़्यादा इंगेजमेंट आ रही होगी एस्ट्रोलॉजर्स के कंटेंट पे, एंड दीज गाइज आर ऑल्सो मेकिंग गुड अमाउंट ऑफ मनी. तो आई थिंक ऑफलाइन या फिर जो ऑफ प्लेटफॉर्म भी जो बिज़नेस है, आई थिंक वो भी बहुत बड़ा है. एंड एज वी आर ग्रोइंग वी आर एबल टू टैप इन टू दीज कस्टमर्स ऑल्सो आर कमिंग ऑन दी ऐप. तो हमें तो लगता है अभी तो बहुत बड़ा होगा. वी हैव जस्ट स्क्रैच द सर्फेस, एंड नॉट जस्ट इन इंडिया, सो इवन आउटसाइड इंडिया नाउ वी हैव 30% ऑफ रेवेन्यू कमिंग फ्रॉम आउटसाइड इंडिया, मेजरली फ्रॉम US. तो आई थिंक अगर मैं सिर्फ इंटरनेशनल की बात करूँ तो इंटरनेशनल बिजनेस ही इंडिया से बड़ा होगा.
Big words there. And that is the diaspora, I'm assuming, Indian diaspora in the US?
We also thought so till last year. So this year we got to know even Native Americans want to consult an astrologer. So if we can provide English speaking astrologers to them, so they are more than happy to consult them. तो वो हमने try किया and अभी so out of 30% of the revenue coming from outside India, उसकी 50% is coming from Native Americans. So
okay, wow.
There's a lot of interest there also.
So we have white people also talking to gurus in India now. Interesting. Puneet, also talk to us. You've recently launched Astro Store. That's your D2C vertical. What's the motivation and thought behind moving into products now apart from services?
Very interesting, yeah. So we never wanted to do that because हमें जाना ही नहीं था नॉन डिजिटल बिजनेसेस में. But at the same time we would get a lot of complaints from our customers कि यार आपके एस्ट्रोलॉजर ने ये रेकमेंड किया हमें और उसके बाद आप कह रहे हो कि कहीं से ले लो जाके. तो उनको मिलता नहीं था ऑथेंटिक प्रोडक्ट एंड देन दे वुड कंप्लेन. इवन आर NPS वुड नॉट बी दैट गुड विद दीज कस्टमर्स बिकॉज इनका होता था यार कि गलत सामान खरीद लिया तो आप बताते क्यों अगर बेचते नहीं हो. तो जब इतनी डिमांड आई तो हमने सोचा कि यार हम स्टार्ट करते हैं ये. तो हमने क्या किया फिर हमने सोर्सिंग स्टार्ट की एंड हमारी ऐप में लिस्ट कर दिया फॉर द कस्टमर्स हु वर रिकमेंडेड बाय आवर एस्ट्रोलॉजर्स, राइट. एंड फिर देखा कि सब लोग हमसे ही खरीद रहे हैं. सो उनमें से कोई भी आदमी बाहर से नहीं खरीदना चाहता, सब लोग हमसे खरीदना चाहते हैं बिकॉज दे ट्रस्ट अस. तब हमें एक अपॉर्चुनिटी देखी कि यार क्यों ना हम एक D2C ब्रांड ही बना लें इसमें, बिकॉज अगर लोगों को ट्रस्ट है हम पे एंड दे नो कि यार अच्छा सामान उनको चाहिए और लेकिन कहीं से मिल नहीं रहा, उनके पास कोई ऑथेंटिक सोर्स नहीं है, तो अगर वो स्टार्ट करेंगे तो इट विल क्रिएट अ लॉट ऑफ वैल्यू. सो दैट्स द रीज़न लास्ट ईयर वी थॉट कि यार इसमें अलग ब्रांड बनाते हैं एंड लेट्स सी कितना बड़ा होता है. एंड सरप्राइजिंगली मतलब अभी हमने लास्ट ईयर ही स्टार्ट किया, 8-9 महीने ही हुए हैं. सो वी आर डूइंग अ बिजनेस ऑफ अबाउट 100 crores का ARR अभी है हमारा, प्योरली फ्रॉम दोज प्रोडक्ट्स एंड नॉट फ्रॉम दोज कस्टमर्स जिनको एस्ट्रोलॉजर्स ने रेकमेंड किया है. तो वो एस्ट्रोटॉक में चला जाता है, लेकिन ये एस्ट्रोटॉक स्टोर एक अलग बिजनेस है जो सिर्फ डायरेक्टली जो कस्टमर्स आ रहे हैं वो उनसे बाय कर रहे हैं. तो काफ़ी बड़ा हो गया ऑलरेडी.
Very interesting, Puneet. And you are talking about, you're saying बहुत डिमांड है, इतनी डिमांड है. Put some numbers to it. कितना astrologers हैं प्लेटफॉर्म पे, कितनी डिमांड आ रही है, how many people are spending, how many minutes on your and also because this is a micro transaction sort of a business model that you're running. So give us some numbers on that front.
So we have more than 8 crore registered customers with us, जिनमें से 7 करोड़ से ज़्यादा लोगों ने कंसल्टेशन ली है एस्ट्रोलॉजर्स के साथ. वो फ्री है या पेड है, कुछ भी हो सकती है. जो पेड यूज़र्स हैं उनमें आई थिंक अबाउट 1.8 करोड़ लोगों ने पेड कंसल्टेशन भी ली है. In any given month we have more than 15 lakh transacting customers who are transacting with us. उनका एवरेज ऑर्डर वैल्यू कुछ रहता है 11-12 मिनट का एक सेशन होता है जिसमें दे टिपिकली आस्क अबाउट द मैरिज. तो हमारा जो मेजर रेवेन्यू कंट्रीब्यूटर है, जो प्रॉब्लम है, वो 80-85% रिलेट टू मैरिज. सो पीपल दे जस्ट वांट टू नो कि उनकी शादी कब होगी, किसके साथ होगी, शादी के बाद सब कुछ ठीक रहेगा या नहीं रहेगा.
Puneet, also talk to us about, since you've said that there is plans to go public, उस पे क्या timeline है फिलहाल?
So we have just started working on it. So अभी our CFO has joined last month and अभी Big 4 या Big 6 ऑडिटर्स को हम हायर कर रहे हैं एंड आई थिंक दैट विल बी डन. उसके बाद सारी प्लानिंग करके, सो द टाइमलाइन विच वी हैव इंटरनली इज़ कि 2026 के मिड के बाद विल फाइल फॉर DRHP एंड IPO की टाइमलाइन शायद 2026 एंड या 2027 के स्टार्टिंग में होगी.
Puneet, जैसे जैसे you move towards an IPO, there's also concern, there's beliefs that astrology is a pseudoscience. It is a belief that is very personal to people, right? It's not an established science. And when you go public, और scrutiny बढ़ेगी उस चीज़ में. How do you plan to, and what is your answer to people who don't believe in astrology?
आई थिंक इंडिया में हमेशा ही लोगों ने फॉलो किया है. तो अगर लोग कुछ भी कहें, लेकिन शादी से पहले लोग जाते हैं एस्ट्रोलॉजर के पास कुंडलियाँ दिखाने, राइट. वो हम सब लोगों का ऐसे ही हुआ है, ऐसे नहीं है कि किसी ने उसको बाईपास किया हो. मोस्टली लोग नहीं मिलेंगे आपको ऐसे. तो कस्टमर साइड से यार बहुत ज़्यादा रिक्वायरमेंट है. ऐसे मैंने बोला कि यार अभी थोड़ा टाइम में ही 8 करोड़ कस्टमर्स आ चुके हैं, तो देयर इज़ अ लॉट ऑफ डिमांड एंड उसको आप निकाल नहीं सकते. अगर कस्टमर को चाहिए अच्छा प्रोडक्ट तो चाहिए उनको, अगर उनको बात करनी है स्लोए से तो उनको करनी है, बट वो वेट कर रहे थे ऐसे प्रोडक्ट की जहाँ पे वो रेटिंग रिव्यूज़ देख पाएँ, उसके ऊपर कॉल ले पाएँ कि यार अच्छा ये है मेरे लिए, ऐसा नहीं है। तो जैसे ऑफलाइन वर्ल्ड में क्या होता था कि वो किसी के पास जाते थे, उनके बारे में उनको रिव्यूज़ नहीं पता अनलेस मतलब कोई रेकमेंड करता उनको, एंड उनसे बात करने के बाद ये भी होता था कि बहुत बार जो एस्ट्रोलॉजर्स थे वो ऐसे ही उनको कोई बहुत एक्सपेंसिव रेमेडी भेज देते थे, तो वो भी वी ट्राई टू कंट्रोल अ लॉट कि यार ऐसा ना हो कि कस्टमर्स के साथ कुछ गलत किया जाए। सो वी इंश्योर कि यार हम बेस्ट एस्ट्रोलॉजर्स को हायर करें। सो वी ऑल्सो इंटरव्यू देम बिफोर ऑन बोर्डिंग टू आवर प्लेटफॉर्म, एंड उसके बाद भी अगर हमें लगता है कि किसी के रिव्यूज़ अच्छे नहीं हैं, सो वी इवन डीलिस्ट देम फ्रॉम द प्लेटफॉर्म बिकॉज वी वांट कि यार अगर इतनी डिमांड है देयर इज नथिंग वी नीड टू डू, राइट, वी जस्ट नीड टू इंश्योर कि यार बेस्ट एस्ट्रोलॉजर हमारे पास अवेलेबल हैं। अगर कस्टमर्स की डिमांड है तो यार आई थिंक मार्केट वुड अंडरस्टैंड कि यार इस प्रोडक्ट की डिमांड है, इसीलिए इतने लोग यूज़ कर रहे हैं, एंड 85% ऑफ रेवेन्यू इन एनी गिवन मंथ कम्स फ्रॉम आवर एग्जिस्टिंग कस्टमर्स। तो आपको नहीं मिलेंगे ऐसे स्टैट्स कहीं और, तो अगर ऐसा है तो इसीलिए चल रहा है वो। तो आई थिंक आई डोंट नीड टू आंसर एनीथिंग एल्स।
Fair enough, Puneet. That is your answer to critics. Also, tell me, Puneet, given the fact, what is the profitability currently as we speak?
Profitability is around